Good morning, everybody. Welcome. Thank you for joining us here in Manchester today for what is our 5th annual Manchester conference. I'm Joe Roche. I'm Engagement Manager for Fintech North. I'm just going to say a few words about our organisation, who we are, what we do, for the benefit of those people who've not been to a Fintech North event before. So to all of you, welcome. It's great to have you here as part of our community. And to everybody here who has been to a Fintech North event before, please bear with me while I explain things, and welcome back, of course. I just want to start quickly by saying a few words of thank you. First of all, thanks to the University of Manchester for sponsoring the conference and supporting us and hosting us here in this quite spectacular hall. Thanks also to Dare Technology, to AWS, to GFT, to Weaver and to MasterCard for all sponsoring the conference and supporting us. Without your support, we would be unable to bring people together to celebrate everything that the North has to offer in terms of its fintech ecosystems. I also want to say a huge thanks to Ryan for helping us here. He's been with Fintech North for about a year now, joined as an events and marketing executive pretty much this time last year for the last Manchester conference. It's a bit surreal for me. I'm used to kind of bringing all of these things together, so massive thanks to you, Ryan, for doing such a great job and getting us all together today. I'd also like to thank Bluebird and Tiz as well for sponsoring the conference showcase later on, where we've brought together some of the region's best sort of startups and scale-ups as well. So really excited to hear from some of those companies. Also want to say thank you to Pro Manchester, to Midas, and to Women in Fintech as well for helping us to promote the conference. So a few words about who we are and what we do at Fintech North. This infographic kind of visualises everything that we're about. We are here to bring together the northern fintech ecosystems. We're here to develop the sector, so we're here to support our entrepreneurs with profile opportunities at our events, or indeed business development opportunities within our wider network. We're also here to make sure that that development aligns with what's going on a national stage as well, so it doesn't take place in silos, and that involves working in partnership with organisations across the UK, like Fintech Scotland, Fintech Northern Ireland, Fintech Wales, Supertech down in the West Midlands, Fintech West and Innovate Finance in London, and making sure that all of the great innovation that happens here in the North isn't taking place in silos and is actually plugged into a wider UK landscape. And finally, we're here to promote the North as a centre of excellence in fintech, and that pertains to some of our work that we do internationally. We work quite extensively with the Department for International Trade on some of their fintech trade missions, both inbound and outbound, so identifying opportunities overseas for northern fintechs to feed their services into, and also showcasing the North as a viable destination for these guys to set up, and what a destination it is. I just want to say thanks to a few of our partners as well. The last sort of 18 months, 2 years has been a difficult time for an events business that generates most of its revenue through sponsorship. But we have started working in partnership with organisations of all shapes and sizes, and we deliver value across 12 months for businesses at any stage, and we've got everybody on our partnership list from regional fintech startups right through to instantly recognisable financial services brands. So if you'd like to work with Fintech North, we can help leverage our connections within the North to help you achieve your business development objectives. So please do speak to me at some point today or reach out to me by email. So that's enough about Fintech North. Just quickly to give you an overview of what's going on in the North, a really high-level tour of the North. Over in the Liverpool City region, we're seeing some real specialisms in wealth management. Here in Greater Manchester, there's a real strength in payments and e-commerce. Interestingly to me, as a proud Northerner, a lot of these specialisms relate to that country's particular industrial heritage and prosperity. So Manchester's long been a centre of retail and textiles, so it's interesting how its specialism pertains to that. Similarly, over in Leeds, in the Leeds City region, over the Pennines, there's a specialism there in banking and lending. And up in the northeast, a bit of an innovation corridor popping up between Durham and Newcastle. An emerging specialism in payments we're seeing up there as well. So some really interesting things happening all across the North at the moment. I can go into a lot more detail if you can catch me at some point, but I just want to kind of give that as an overview. Something else we're really excited about at Fintech North as well is the launch of our marketplace. This is a new function for our website. It functions almost like an app store. If you're a fintech or if you're a corporate, you can sign up free of charge. You can build products, you can form partnerships, you can engage with corporates, and like I said, completely free to everybody in our community. So I'd implore you to make use of the marketplace. And actually, wouldn't be a tech event without a QR code, would it? If you scan that, you can go directly to the marketplace now and get signed up and get using it. So without further ado, I'm going to hand over to Nancy Rothwell, Vice Chancellor at the University. So it'd be great to hear from Nancy now. Jeff and Andy, if you don't mind.
Hello everyone, I'm very happy to welcome you today to the 5th Fintech North Manchester Conference. and we're very proud to be hosting it at the University of Manchester, as we have done since the inaugural event in 2018. The University of Manchester has ambitious plans for our role in the development of fintech through both research and teaching. Yesterday, we were delighted to launch the Centre for Financial Technology Studies at our Alliance Manchester Business School. The new centre will bring together diverse research on the topic of fintech and the role of technology in finance more broadly, and invest more time and effort to engage with industry and increase knowledge translation. Our strategic academic partnership with the UK's leading fintech body, Innovate Finance, is a testimony to the above and to the university's appetite to deliver research that will impact industry and inform policymakers in financial services. Following the UK Government's Khalifa review, in which Alliance Manchester Business School was featured as a key case study, we're also committed to produce talent and help with the fintech industry to grow. For that, we've now created and are delivering several fintech-related courses at the undergraduate level and at the postgraduate MSc level for our MBA programs, as well as executive education programs to cover all needs for fintech skills in the industry. We're also leading the effort for the development of the UK Fintech Academic Network, a community of fintech scholars across several top UK universities that will help to cultivate, like the UK, as the best fintech sector in the world, and combining that with the world's best higher education institutes. This will be a world-leading fintech academic community to inform policy and practitioners in financial services on the impact of technical innovation and the future of finance. Our business engagement team has been supporting the development of our fintech activity and opportunities for non-academic partners to collaborate with our academics so they can develop projects that will address business needs. If you'd like to find out about the ways your organisation could establish new collaborations with the university, the Business Engagement and Knowledge Exchange team will be available to drop in and speak to at any time today. Do enjoy the day. I hope it is productive. Thank you.
Thank you to Dame Nancy. In a second, I'm going to introduce our first speaker. I just want to give you a quick preview of kind of the general flow and format for today. Obviously, we're all in this fantastic great hall all day. There are toilets directly below the hall on the corridor down there. There's also a toilet on the mezzanine level. We're not expecting a fire alarm or anything today, so if you do hear an alarm, we need to follow the green signs out of the building. There's an exit there onto Oxford Road as well, so that's the housekeeping out of the way. The first morning session really is about sort of big picture fintech, market overviews, sector landscapes, both UK and international. We've got updates from Innovate Finance, open banking implementation entity. We've got a macroeconomic outlook from MasterCard. In the second morning session, we're looking at more established fintech and financial services. And then in the afternoon, we're talking about female entrepreneurship, funding. We're talking about research and innovation in fintech. We'll be having our trademark fintech showcase as well, where we kind of showcase all the region's best startups and scale-ups. And we've got a really interesting fireside chat all around digital banking as well. So hopefully you're as excited for today as I am. I'm going to hand over now to our chairman, Chris Sear. Chris, you're going to chair the day from here on out, so please take it away. Come up on stage. Thank you. Thank you.
Yeah, that's fine. Thank you. Thanks, Joe. Fintech North has gone through a transformation since we started having full-time people working on it. Joe has done a fantastic job since he started with us, 3 years ago now, Joe, isn't it? And then Ryan, obviously, who Joe mentioned, started full-time a year ago after doing a years-long internship with us, I think. So that's really transformed the business. I say a business, we're not really a business, but it's transformed it. We now are much more professional, our outreach is that much larger, and the things that we do are that much more fun. So I hope you have a good day today. So I'm going to spend just a few minutes talking about three things, I think, maybe four, we'll see how I do. The first is I'm going to mention CFIT. So CFIT obviously has taken a step forward in the past few days. I'm going to talk a bit about academic interactions. We are here, after all, in a university premises, and Nancy, as she mentioned, has got some interesting new announcements in the fintech space. And then I'm going to talk about some of the big things that have happened in the world of finance and relate them to the world of fintech. And some of the comments I think probably going to be a little bit unnerving, perhaps controversial, but that's fine. That's the kind of space I try and occupy. So the first thing I want to say is that the Centre for Finance, Innovation and Technology, which was the recommendation from the Khalifa Review, and you may or may not have heard about the Khalifa Review that went on a couple of years ago, but this was the big government review looking at fintech. One of the recommendations was to set up a centre, the Centre for Finance, Innovation and Technology, to bridge the gap between industry, academia, innovators across the UK. And the step forward they've taken is they've appointed a chair. And the new chair is Charlotte Crosswell, which is fantastic news for all of us. Charlotte has got a huge amount of experience in this space. She used to be the CEO of Innovate Finance, and she has more recently been the chair of the Open Banking Implementation Entity. So we're going to hear from the OBIE later on. So we've got Connie down here who's going to come and talk to us shortly about it. But in those two roles, she took on some very, very, very challenging things. She entered those two roles at a time when growth was required in a challenging environment, picking up some very politically sensitive roles. So she's perfect for CFIT, and having spoken to Charlotte, I can say her focus is going to be on diversity and engagement with the regions, which is great news. It means that she's going to be focusing and looking at the things that we do. Fintech Scotland, who are also in the audience. We've got Fintech there. We've got the Midlands group. So Stephen Ingledew's here. Where's Hilary? Hilary? Yep, Hilary over there. If you want to hear what's happening in the Midlands and in Birmingham, talk to her. I don't think we have Fintech Northern Ireland or Fintech Wales here today, but there are a number of clusters in the UK, and we're very grateful to have Stephen and Hilary with us here as well. So CFIT has taken a step forward. That's good news. So one of the most important things that we can do as people who are facilitating innovation, as people who are working with innovators, is introduce them to the concept of working with academia. So here we are in Manchester University's premises, and there are a couple of things I probably want to point out to you. One is, first of all, Rachel Kenyon, who's standing at the back there. Rachel, put your hand up. If you want to know about working with academics, then Rachel is the person to talk to. We also have, I think, is Marcos here already? Not yet. So the research institute or the research centre that Nancy mentioned just now, and all the work on the actual academic research work here on Manchester is carried out by Marcos and his team. And last year when we had this conference, it's amazing what academics actually work on. I ended up speaking to one of the academics. Most people think of fintech as things like payments and crypto, perhaps a little bit in the environmental space. I found an academic who works specifically in the field that I work in, which is asset management and pension funds. So it just goes to show you can find an immense amount of diversity, and there are mechanisms for interacting almost for free and getting free academic resource. And I say for free, it's not quite for free, but it's very, very reasonable, and it's very, very high quality for interacting with academics. And I'd recommend you speak to Rachel about the process of working with the university, and with Marcos about exactly what the expertise in the university is, because he has a very diverse team. One of those mechanisms is the KTP. So here's another shout out. We have a representative from Innovate UK in the audience. Where are they, please? Innovate UK? Yep. So Innovate UK, one of their key vehicles is the Knowledge Transfer Partnership, which is a way in which startups and big business can work with and using academics in a very, very low-cost way to obtain independent research and insight into difficult topics. So that's one of the reasons why I'm so keen on academics and research. They are independent, they are thoughtful. But I think there is a belief that academics, what they're really good at, is publishing papers. And I know that there is this preeminence, there's a certain preeminence in academia that says you're not any good unless you publish papers. I'm going to counter that. My experience of academics is the ones who work best with industry are the ones who understand the way industry works. And that doesn't mean somebody who always publishes papers. It means people who publish papers are very focused on working on that pure academic discipline. When I worked with the KTN, when I was running the KTN for finance a few years ago, I used to focus on academics who are user-friendly. Now, an academic that's user-friendly is very, very different from one who works and publishes only papers all the time. And to give an example of the kind of academic who is extremely good at working with business, I'd like you to look at the Work and Pensions Select Committee yesterday, where Professor Ian Clacker from Leeds University was giving evidence as one of the 4 people who were talking about the recent crisis in pension funds. So there are several types of academics, and don't be wowed by publications. If you want to have a user-friendly academic, find one that you can work with. It doesn't necessarily mean a good publication record. So that segues me neatly into my last couple of comments. Fintech is potentially in a bit of a crisis at the moment. So we've gone through a number of bull years. We've got a lot of attention focused on it in the UK. People are very excited about it, but I want to point out to you a couple of things. First of all, FTX, Sam Bankman-Fried. Everybody wants to talk about cryptocurrency until it goes wrong. Cryptocurrency has been the darling, distributed ledger has been the darling of along with payments, of fintech for a very long time. But the things that went wrong with FTX were the classic things that went wrong in every other financial crisis that I know. It was a failure of trust, it was a failure of governance, it was a failure of compliance. My father used to be a fund manager, and he used to go and pick companies, if you like, that he had to invest in. And one of his basic rules was, if there is exuberance in the expenditure and in the expenses, walk away from the company. So I'm going to direct you to WeWork here and the former CEO who had a spa in his office. Private jets, expensive cars. And in case of Sam Bankman-Fried, a £1 billion personal loan. Who didn't spot a £1 billion personal loan? What are you going to do with £1 billion of personal loan? Buy a house? Buy a city? Buy a country? If there was one clear signal that things were going wrong in FTX, it is the fact that he was uncontrolled. And one of the things we have to recognize, and I am an entrepreneur now, I have my own company amongst other things, and I probably didn't introduce myself properly. I'm the Fintech envoy for England, for the Treasury. I'm the chairman of Fintech North, but I also have my own startup, which I'm the CEO of. One of the things that is very clear to me in this space is that the people who start fintechs, people who have the creativity and imagination to go out there and take risk, are not necessarily the people that you want to have running the company when it's business as usual. And one of the things that Sam Bankman-Fried said was he found compliance and regulation to be a hassle. It constrained the growth. How much growth did the guy want? 4 years ago he was nothing, and then he was what? How many billion pound company? 30 billion pound company? It's madness. How much growth does somebody want? Compliance and regulation is there for a reason. It's there to stop people, consumers, you, me, being skinned by people whose natural disposition is to take unconstrained risk. So one of the big things that I have to do, because I am a risk taker, is at some point I have to recognize that the people who invest in me will expect me to move on. Because they don't want me in charge, because I take risk. And that's not what you need when you are trying to get a company into the mainstream. Compliance has a role to play. Fintechs that look at compliance have a very strong role to play. So I'll give you the other example I have in this space, which is the one I mentioned earlier, which was the Work and Pension Select Committee and the issue with LDI recently. Who here understands the issue with liability-driven investment that nearly corrupted the entire UK financial market? One person, yeah, Michelle, not surprised. Michelle used to work in the bond markets, so she understands what happens when a bond price falls. So if you're not aware of what went on, about a month ago, 6 weeks ago, the government announced that they were going to have a budget where they would borrow a massive amount of money. Whenever you're going to flood the market with debt, which is the equivalent to borrowing money, you're selling bonds, the price tumbles. What people didn't know was there was a little atomic bomb set up within the UK pension fund market. The UK pension fund market is £2 trillion. So think about that number for the moment, 2 to the 12. It's an enormous amount of money. £2 trillion was nearly wiped off the face of the UK market. Ian Clacker's estimate yesterday was that we have lost 500 billion pounds of value to the UK economy through the events that followed the announcement of the government's issuance of government debt or their borrowing. And it was entirely because of an innovation. That innovation was LDI. In the same way that we have cryptocurrency, or we have an innovation, let's say, in the platform space, the new product that was introduced about 12 years ago was liability-driven investment. It was supposed to be a hedge against the risk of not having enough money in a pension fund to pay the future liabilities. Unfortunately, that hedge was a secret weapon. It was a bomb sitting in the pension fund world, particularly when it morphed into something more complicated than it was originally designed to be. And the reason it went wrong was because people were not scenario testing the risk and the emergent risk of a rapid fall in bond prices. So here we are, innovators, Why didn't we notice this? Why didn't we notice that there was a reg tech opportunity in this space? There's opportunities for us everywhere, but we have to understand that it's not just about the frothiness of cryptocurrency. It's not just about the frothiness of payments or platforms or open banking. It's also about solid things, mitigating risk, manage risk. And I kid you not, right now, we are missing £500 billion in the UK financial markets as a result of that. £500 billion has been wiped off the capital markets value of assets in the UK. It's real money. It's been sold, it's been bought, prices have been devalued. It's not visible to us, but it's very visible to anyone who works in the world of assets. It's huge. So we have a major issue here. Two big problems in the fintech space means that investors are now wary of fintech. If you work in cryptocurrency right now, I would imagine you are struggling to raise finance. Because all the people that were investing in you and flooding money into the cryptocurrency markets and into the distributed ledger markets are now burned by quite a lot of money. People who are investing in capital markets are burned. The valuation of venture capital funds and private equity funds has fallen. They have less money to give away. They're failing. So if you're looking to raise money right now, be prepared to struggle. It's not good. So that's a fairly depressing way to end the conversation. However, there is huge value out there. They will invest in things that are solid. They will invest in things that are provably well governed. So if you're an exciting fintech that wants to grow and is cursing regulation, think again. If you're a fintech that is willing to play the game of the regulator, play the game of making sure your consumers are well protected, there is massive opportunity for you. And that's my message. If you are frothy and exuberant and talking big about your company and not talking about how you manage the risks, you're probably going to struggle right now. Control yourselves, control the way you present yourselves, be measured, and you'll find the money because it's there. But it's not there for the unconstrained growth that comes with some things. Anyway, thank you very much indeed. Enjoy the day. I'm really looking forward to the showcase in particular. I'm looking at the audience here. Everyone looks a bit shell-shocked. I did say I was going to be a bit controversial. Fortunately, I do know a lot about the LDI space. If you don't understand what happened, come and see me. I'm one of the few people around that actually knows what went on. My company monitors data in that space. So I'm a compliance company in that space. And I gave my evidence to the Work and Pensions Committee a very long time ago on it. So if you want to know what actually went on, do speak to me. Right, now I'm handing over to Peter Kinane, I believe. Peter, are you ready? Sending a quick email there. That's innovation for you. He's making his notes as he goes along. Peter here is the Director of International and National Projects. Is it? Initiatives. Oh, Project Initiatives, sorry, yeah. Tomato, at Innovate Finance. Peter's got a long history in this space. He used to work for the City of London doing something very much the same, but Innovate Finance has given him wings, and he spends more time, I think, flying, literally than so it's very nice to have him here. Peter, over to you. Thank you.
Thank you so much. Morning, everybody. Well, it's great to be back in Manchester, and thank you again to Chris, to Jeremy, Ryan, Julian, all the team at Fintech North, and to everyone for attending today. And there we go. Thank you. And also thanks to the University of Manchester as well. And thank you for the kind remarks from the Vice Chancellor around our strategic partnership. As I say, it's wonderful to be here. I am Peter Kane. I am the Director of International and National Initiatives. And as such, it's my role to connect with the like-minded hubs around both the UK and globally, and to demonstrate where there is value and opportunity for our members and for the broader fintech community right across the UK to engage with markets and to engage with each other around the UK as well. I represent an organisation called Innovate Finance. For those of you that don't know us, we are the UK's trade organisation for the global fintech sector based here in the UK. We're about 8 years old now. I've worked either in or with Innovate Finance for much of that time. And as you can imagine, over the 8 years or so, we've seen an absolute transformation in the industry and in our own organisation as well. working very closely with partners across government, with the City of London Corporation, and with many others around the UK to ensure that Fintech continues to be a success. And yes, it is a challenging time for all of us at the moment, but we believe that we are at the heart of a positive area for growth in the economy, and as such, a positive area for the future of our society, of our economy, of our financial services, and indeed a positive story for our growth and change and innovation across the world. So very delighted to be at the heart of all of that, and as an organisation. We're a convener, a connector, as you would imagine any membership organisation to be. We champion and promote the industry to many, and we advocate and lobby where we need to as well, and challenge. We work closely, as I said, with the government, but we also like to challenge the government when we can and when we feel that we should. We work very closely with our regulators, both the UK's FCA and the Bank of England, Central Bank, to ensure that Fintech remains on the right track in terms of its competitiveness, but is also on the right track in terms of that sustainable level of regulation and compliance that Chris was talking about a moment ago. We want our businesses to thrive, but we want them to do so in the right way, with respectability and inclusivity too. Our key programmes and initiatives listed behind me there, we do focus very much on those 5 areas for growth and for the messaging that we like to promote. Skills and talent, very key to all of us and to many of us in this room as well. It remains probably the most significant challenge we face as an industry, where to get talent, whether that's from internationally or whether that's homegrown here in the UK. Yesterday, in fact, we led our very first Talent and Careers Day at Innovate Finance, and we were delighted at the success of that, and we hope to build on that with initiatives such as our renewed jobs board and other pieces that we're developing at Innovate Finance. Investment and growth, I'll come to investment in a moment, but we're seeing a huge potential with the recent launch of our Fintech Academy for startups, which we've launched at Innovate Finance, and with our partnerships work as well, connecting with the community, with, I should say, those financial institutions and potential partners for opportunities there as well. Fintech as a force for good is right in the centre of the board behind me there, because it is right at the heart of much of what we do. Promoting that idea of Fintech being a positive force for societal change, working to ensure it remains an inclusive industry, but it also includes an element of financial inclusivity as well, and ensuring that we meet the environmental targets that we set ourselves, but we're also doing a lot of work around the S and the G in ESG as well. Regulation, I've touched on our connectivity there, but it's very important to us in terms of that policy development, that environment for fintechs to be able to thrive and succeed, working closely with government and others on that, and also with international connectivity and scaling too. There we go, is that better? Right. In terms of our recently launched International Fintech Group, which is a key part of our international promotional activity with the Department for International Trade, ensuring we have a more cohesive programme of work promoting the UK overseas. I mentioned investment. It continues to be positive, certainly in the first half of this year. In fact, why don't I skip to the next one there? We've seen a huge investment into UK fintech in the region of 9.3 billion invested into UK fintech in the first half of this year, $9.1 billion, sorry. If you reflect on the fact that last year we saw 11.7 billion, and that was across the entire year, that perhaps gives us an indication that we're heading for a very good story towards the end of this year or early next. That's not to say, of course, that there isn't going to be some sort of flatlining, perhaps. We remains to be seen how the cost of living crisis and the economic turmoil that we've seen impacts on investment, as Chris was saying a moment ago. But for the time being, that's a very positive story for us to talk about, particularly overseas, second only to the United States. in terms of fintech investment here. We shall see how that plays out. Of course, I always say this when I'm at these events, it would be great to see more of that investment leaving London and the South East and being reflected more across the UK as well. So that's something that we will continue to work towards achieving. Couple of initiatives that I've mentioned. I've touched on the Fintech as a Force for Good. That was a forum that we ran earlier this month, or late last month. That's our second big event of the year in terms of promoting the idea of the E, the S and the G across Fintech, and our financial inclusivity as well, looking at also how Fintech can bring together the positive change that we want to see for consumers. Launched yesterday, in fact, applications for our Women in Fintech Power List for 2023. That comes out next year in January, and we launched applications for that yesterday, so look out for that on social media. Diversity across our industry, particularly around gender, it's very important to us. We are looking to expand our diversity programme, though, into other areas, of course, of inclusivity to see a truly diverse industry emerge across Fintech. There we go. And internationally, we sit at the heart of a global ecosystem. We work with many partners right around the world, with many regulators as well, to ensure that Fintech continues to thrive. I myself have travelled lately to Singapore, to the phenomenal Fintech festival that they have there, and we recently launched our US-UK Fintech Forum, an initiative for engagement, or closer engagement, between the UK and US Fintech ecosystems, which we're looking to champion across 2023 as well, looking to broaden the opportunities for UK Fintech to thrive overseas and in the US in particular, and looking to ensure we see some FDI coming the other way from some of those key markets as well, whilst keeping a watchful eye on other areas of the globe where Fintech is emerging or is developed. Those very exciting markets for Fintech in Latin America, Middle East, India and so on. Some great stories out there and some great opportunities for all to engage with when you are at the right point in your journey to scale and to succeed overseas. Some of the key events that we will be looking at as a group to bring greater cohesion to the UK brand, some of the key events there listed in terms of where we're going to be in the next 12 months. And some of the key partners that we work with across the ecosystem to achieve that, some of our members as well, and the Fintech hubs. And of course I would not be here without the support of Fintech North, Fintech Scotland, Fintech Wales, Fintech Northern Ireland, Fintech West, and Supertech in the West Midlands as well. Hilary and Stephen, of course, are here representing two of those organisations, and together working as a UK Fintech national network to ensure that all those international opportunities do filter down and across to the work that we're doing collaboratively and collectively around the UK to promote the sector. Very quick word around some of the emerging trends that we're seeing. Obviously, you're all well aware of the UK strengths, and you're certainly well aware of the strengths here in Manchester as a market for the development of Fintech. In terms of some of the trends that we're seeing, payments is obviously still up there, but we're seeing great growth in embedded finance. In cryptocurrencies, we have seen some positive change earlier this year around the legislative announcements from the then City Minister John Glenn around the enhancement of our regulatory system for crypto, and with hope that it brings some of that respectability, sustainability and transparency to the industry, and that's an opportunity for some of our businesses to grow despite recent news and reputational risk. Hopefully we will see more success there. And in InsurTech and RegTech as well. In particularly outside of London, we're seeing great growth in both of those industries in different parts of the UK, and long may that continue. We want to support those emerging areas for Fintech too. As I just touched on there, open finance is where you're going to hear a moment from Connie at the Open Banking Institute of Excellence, and we look forward to that. We work very closely with them, have worked very closely with Charlotte and the whole team there, and we continue to do what we can to promote that notion of open finance across our financial services and through our Fintech industry as well. And there we go, there's the network. I knew I had it there somewhere, Stephen. Yeah, that's the Fintech National Network, which we work very closely with, and delighted to continue to do so. Quick plug before I finish. I mentioned our second biggest event of the year, the Fintech as a Force for Good Forum, but by far the largest event of the year, and one that I'd be delighted to see you all at in April, is IFGS, our global summit, which marks the start of UK Fintech Week and a frantic period for promotion of the UK fintech industry on a global stage. Our event in London, but events happening all around the UK as well, so please look out through all those partners I just mentioned around the UK for events that may be happening in your area and up here in the north and elsewhere. It's a great opportunity for us to showcase the wonderful things about this industry, and we'd love to see you all in London, of course, as well, for the 2 days of IFGS, some real leadership and thinking around some of those core emerging trends and themes happening in London at that time. So you'll be more than welcome, and we look forward to seeing you there. I'm around for the rest of the day, and I look forward to taking any questions that you may have. Please just come and grab me. And once again, delighted to be here. Thank you again to Fintech North. Thank you again to the University of Manchester as well. And I look forward to catching up with you later. Thank you.
Thanks, Peter. So Peter will be around, as he says, for the rest of the day, so we're not going to ask questions, I think, at this point. We're going to save the questions, live questions this afternoon for the showcase, but Peter will be here. Now I'm going to invite the lovely named Costanza Castrofijo to the stage, who works for the Open Banking Implementation Entity. Costanza is happy to be called Connie, so we're all very relieved at that, because if I had one drink, I wouldn't be able to pronounce it. So Connie's going to take us through where we are with the open banking projects going on at the moment. So Connie, thank you.
Thank you very much.
You're welcome.
Good morning, everyone. Can you hear me? Yes, I can. Let me check. Yes. I'm really looking forward to engage with you all later at networking opportunities and coffee, so please come to me. You can call me Connie, and I'll be happy to engage with all of you. Thank you very much, first of all, to Fintech North and its partners for inviting myself and the OBIE to be here today. It's great to support and recognize the regional hubs. And as you know, open banking, or the UK is a world leader in open banking, and the regional hubs play a key part in this. So today I've been invited to share with you an overview of open banking in the UK, and I thought this agenda would be helpful to take us through that. So first of all, we'll touch a bit on what has been driving open banking, what brought us here today. Then we'll cover at the state of play and the key metrics that we follow to understand how open banking is performing and what's the benefits that it's driving and how the ecosystem is growing. And finally, we'll talk about what's next for open banking. So we needed 3 key building blocks in order to get open banking off the ground. And yes, so as a summary, there were 3 big challenges that we needed to overcome in order to get open banking off the ground. The first was building an infrastructure and a strong, robust framework that all the participants understood and accepted and adopted. The second one was we had to streamline the customer experience and support the development of a dynamic and thriving ecosystem of fintechs and all of you who are actually the ones that are bringing the products and services for businesses and consumers and bringing quality to the market, and boosting that competition and driving innovation. And the last challenge that we face is adoption and usage of open banking. We needed to drive demand and drive end user adoption. So it's important before we look forward. I moved a slide? No. Sorry, it's moving here. Before we look forward, I think it's always important and useful to reflect and take note of why we are here today. And if we think about what has been the secret for the success, there's a lot of things that that the UK can be proud of. And because this unique approach that the UK has taken to implement and deliver open banking has now been copied by over 80 other jurisdictions across the world. So as I was saying, when they ask us, like, what has been the secret for the success, we believe it's largely down to three things. First of all, an unmatched world-class talent, a progressive regulation, and a strong client base. Above all this, we believe that the fact that the UK has mandated and enforced the standard to the largest banks in the UK has allowed fintechs, all of you, to overcome challenges in a much faster way than fintechs in other European countries and jurisdictions. Another unique thing of UK's approach, it's its competition focused regulatory environment, which had allowed fintechs to grow and thrive. And if we think about the amount of fintechs that are here in the UK, it's way larger than the fintechs in the whole rest of Europe. And finally, the Khalifa review was also a great catalyst for action and sent the world a fantastic signal of the UK's ambition with open banking. So this is a slide that I really like to come and because I can talk a lot about lots of magnificent things, but this is real life. This is what actually happened. You know, like since we started in 2018, we have a mandate. We had a mandate over. We still have a mandate only over the 9 banks, which are known as the CMA 9. But the reality is that it's been so successful that this standard has now been adopted by over 80 banks. Very closely to 90, and this number is super dynamic, and it has also been adopted by over 240 fintechs. So currently, the open banking ecosystem in the UK has over 340, it's almost, regulated providers bringing products and services that today over 6 million users and business, citizens, consumers, us, have connected our accounts to open banking. And I was reflecting on this. When I joined 2 years ago, the open banking implementation entity, it took us almost a year to grow from 1 million to 2 million users of open banking, and it took us less than 4 months to reach from 5 to 6 million users of open banking. So the growth, it's being exponential. Mostly it's being driven by open banking payments, which last month were 6 million payments, over 7 million payments, sorry, were done or initiated by open banking. If we think cumulatively along the whole year, it's been over £50 million that have been done, open banking payments done. Another key metric that we follow, and we believe it's a key barometer of the level of activity that the industry is having, is the number of API calls, which last month was 1.4 billion. So there are over 1 billion API calls every month, and there are over 700 participants playing in open banking's sandbox to bring other products and services to the market. And what I also like to share, to take the opportunity and share with you today, some of the use cases of open banking in real life. This is how we call them, you know, because all these metrics and open banking can be very hard, or we spend so much time building that infrastructure and that framework that it's great to see now how open banking is coming to life and how small businesses and consumers are benefiting from the different products and services that you fintechs are bringing to the market. So the first one that it's a super interesting use case is the HMRC one. It was the first tax regime in the world to embed open banking in its own operations, and this brought them lots of benefits. We were talking with them, and they were reporting that they estimate they've saved over £500 million since they embedded open banking 18 months ago, only in bank charges. Another very important thing that they were sharing with us, or the benefit that they like the most, is how open banking payments is helping them and preventing keying errors. You cannot, 1 in 20 payments for the HMRC needs intervention, whereas open banking, as they come pre-populated, the risk of error is minimal. There's almost no risk to input like a tax code wrong or a reference number wrong. And the amount of money that was floating for HMRC was around £20 billion that were floating because they couldn't collect those funds. I paid them, but I put a wrong number, and the level of inefficiency of that money being collected was enormous. So it's a safer way, it's a cheaper way, the money is immediately settled, and HMRC has now exported or it's replicating this open banking payments to collect 43 types of taxes. Another very interesting use case, it's being capitalized by the utility sector, and this is super relevant currently in the economic situation that we're living. They're using open banking data to assess a customer's affordability instantly and accurately. So that's helping them to support that customer and potentially move them into a social tariff or remove them from a prepaid meter and offer a ubiquity type of payment that it's helping customers and these organizations as well. Another I'm super passionate about, it's the impact open banking is having to support small businesses. We believe that open banking can help small businesses become more profitable, productive and resilient. Our latest impact report focused on cloud accounting services, and over 80% of the small businesses that participated here in this research, which we interview over 900 small businesses, agreed that cloud accounting services were helping them understand their performance, make better decisions. When we speak a lot with the FSB about this, and they tell us that over 70% of small businesses can't forecast their cash flow. So this is massive for businesses. This is of massive importance for a small business to understand how their business is performing. Also, open banking is helping them to borrow faster and cheaper. The other day, one of our fintechs was telling us that it took just 18 minutes for a small business to request the funds and have them in their bank settled. And these are the things that we believe small businesses and consumers are more bothered about, or they value the most, is the significance of the value that open banking is driving. They don't care about open banking or what is it, but they want to know how they can borrow money when they need to grow. How can they get paid in a more effective or efficient way? Another small business was telling us that 20% of their revenue was being taken by card payment fees. So that's when they looked at open banking and say, okay, how can we ensure or offer our clients a more effective way to pay? And I can continue talking about this a lot of time. My time is running up. I can see a sign here. Another interesting use case, and the final one, is within the charity sector. And again, each sector and each organization can get different benefits from what open banking technology, its data and its payments it's offering. Within the charity sector, security was a highlight, and the fact, and Just Giving was reporting that when a donation done via open banking, it increased on average £20. So on average, a donation in the UK, it's £20. When done via open banking, that donation increased to £50. And we believe it's mainly because of the security. Just Giving told us that it's mainly because of the security and because of that money being immediately settled at the charity's account. And finally, I don't know if it moved. Yes. Currently at the OBIE, we're working in two distinct sets of responsibility. Everything that is under the order, where Charlotte Crosswell is our trustee, and the non-order related activity, which is currently reporting to JREC, the Joint Regulatory Oversight Committee, which is co-chaired between the FCA and the PSR, having also the CMA and ATM Treasury as members. And they'll be reporting, and they've appointed Brian Zhang as the chair of the strategic working group, who will be submitting their report in December. But what's next? So open finance is the next step in the evolution of open banking, and we believe that by bringing open banking benefits to a broader array of financial products, open finance will give consumers and businesses greater control and visibility of their economic lives beyond their current account. So we are proud that we build some technology that can be used and can be leveraged to deliver open finance at pace, and with as much as possible smart data and open finance to be built on the foundation layers of open banking and not to reinvent the wheel. We believe that by leveraging all the infrastructure that has been delivered for open banking, we'd ensure an appropriate level of harmonization across different sectors. This would reduce the costs of implementing open finance, and of course we strongly believe that this could support customers' uptake. So the ideal scenario would be for like an individual to see all its finances in one place and not have to redo all its consent again. So the challenge that we face here is to keep momentum and to ensure, yes, we move fast to open finance. That's
Thank
it.
you, Connie.
Thank you so much.
Thank you. Thank you. It's interesting, open banking is the right initiative for a very complicated environment like the UK, there's no doubt about it. We are extremely complicated, extremely legacy driven. Today I saw a sign on a bus stop from Barclays saying you can now, amazingly, set limits to your expenditure within your account. As far as I knew, every challenger bank has had that for the past 4 or 5 years, but Barclays has finally woken up to the fact that you can do it, and they've done it. So the legacy banks have got a long way to go, but there is another way. So open banking, as I say, is very good for the environment where we have legacy banks, sometimes hundreds of years old. Go and look at Estonia. They don't have open banking, they have digital ID. Digital ID, which supports the entirety of their personal and professional lives. You can get your prescriptions through digital ID, you can make bank payments through digital ID, you can get your taxes paid through digital ID. So their ID program in Estonia is so effective that you don't have to calculate your tax, the tax that you pay yourself. Once a year you get a text message that says this is how much you owe, agree or disagree, and if you click agree, the payment goes out of your bank account automatically. So you can be anywhere in the world and pay tax. You don't have to log on to HMRC. In fact, so efficient is their system that their claim to fame is that they have such a low-cost tax infrastructure, it generates the equivalent of 2% of GDP, which is their NATO payment, which is quite significant at the moment. Their digital ID and the savings they make using digital ID on taxation pays for the membership of NATO. And if you know Estonia, that's quite important because they're on the border with Russia and are quite possibly the next target the Russians will look at. So yeah, there is another way, but you need to start from scratch. In the UK, we can't do that. They had clean infrastructure, they had nothing when they left Russia in the 90s, and they were able to build something new. So if you start from the scratch, you can do it differently. In the UK, we can't do that, hence open banking. I have another announcement to make, and that's Rachel has asked me to say that it's not just her who's in charge of university engagement. She has a team, and they're down in Committee Room B. Yep, Committee Room B, with lollipops, I think you said, didn't you? Yeah. So if you are thinking of just even discussing what it's like to work with Manchester University, they are the biggest, they're the university that has more KTPs than any other. And I mentioned KTP as a product that Innovate UK works on, which is a government-funded organisation. They are very good, very professional. Her team is sitting downstairs. Pop down or speak to Rachel, she'll take you down there, and they're ready to talk to you about how you can work with the university. Right, so now we have a keynote from Max Lambertson from MasterCard. Crikey, what was I going to say? Yes, it's going to be an economic overview, and I will be very interested to see whether or not he agrees with my comments about the economic environment at the moment. So, can we have our next speaker, please? From MasterCard.
Hello, good morning, everybody.
Oh, sorry. I'm looking forward. Very good. Nice to see you. I'm handing over to you now. So please tell us what's going to happen in the UK from an economic point of view over the next few years, please. Thank you.
Thanks very much, and good morning, everybody. Good morning. Thanks Fintech North for having me. Really good to be with you virtually here this morning. I'm just going to share my screen, so please do shout if you are not able to see it, but it should be visible now. Yes, so my name is Max Lambertson. I'm with the MasterCard Economics Institute, and our mission is to look at the economy through the lens of the consumer, and we do that by looking at economic data and also at our payments insights. So I'm going to share with you our views today based on those insights that we have. And my key messages for you are that obviously we know that inflation and rising interest rates are squeezing the consumer.
Max,
yes.
Just a quick question. We can't see your screen, mate. Sorry. We see you. I mean, it's a great picture, but... yeah, that's working now. Perfect. Thank you.
It's working now? Very good.
Yep, perfect.
All right. So my key points today are that inflation and interest rates are squeezing the consumer. Obviously, it's taking away from their ability to spend on discretionary categories. And that's quite a gloomy economic context at the moment. But there are still some areas of resilience in the economy, particularly in the labor market at the moment, and also just on consumer balance sheets, which are relatively strong going into an economic downturn. The second point is this is a very unusual economic environment because of the dislocations caused by the pandemic, where we had huge surges in some sectors, really tough challenges in others that were more harshly affected by lockdowns or people not moving around. Now we're coming out of that. And so the economic downturn that we're going into is going to feel very different based on the type of participant that you are. So if you're an affluent consumer or a low-income household, the cost of living pressures are going to feel quite different. If you're renting or have a mortgage, or if you own your house outright, you're going to be in a very different position. From the business side, if you're selling big ticket goods, or if you're in the experience economy where there's still a lot of pent-up demand, again, very different experiences. And if you're a small business that has a lot of credit that's on variable interest rates, very different financial environment for you than a large business that might have access to capital markets. And finally, still the e-commerce shift is still with us. So we've had a sticky shift to greater e-commerce. Now, some people are returning in person more, driven by cost of living pressures. So whether your presence is in person or online or both, again, is gonna have a different impact on you. And the final takeaway is just that the most important factor is that prices are rising faster than wages at the moment in the UK and many other countries. And so that inevitably means that there will be a slowdown in spending in the coming months. But in the UK in particular, the high level of digitization will be a source of resilience for the economy. And I'll show you some of our data as to why that's the case. So just starting quickly on the headwinds that are facing the economy at the moment. I'm not going to spend too long on inflation. We all know that inflation is very high. It's high in the UK and it's high elsewhere as well. Running in October at over 11% in the UK. We're very close to the peak in inflation, thankfully, but we're at such a high level that it's going to take us a while to get back down to a more normal rate of inflation that we were used to in the years before the pandemic. So you have headline inflation, that's overall consumer prices rising by 11%. It's particularly high in the categories of energy. Here you see energy inflation in UK running at almost 60% year on year. That's of course the result of high natural gas prices, of high electricity prices. That now will be supported by the energy price cap. And then that will start to come down over the next year. But again, it's a very, very high level of price growth. It makes the 11% rate of headline inflation in the UK look almost flat when you compare it to the energy component. The other main category where inflation is coming from is food prices, which are now in the UK rising at over 16% year on year. And so it's very important that the fact that inflation is coming from energy and food, because these are essential categories, hence cost of living pressures. People can't avoid spending on these categories, so it takes away from their ability to spend on other parts of the economy. Also, because they are essential, everyone has to spend on them, so it will disproportionately affect people on lower incomes who have less disposable income to begin with. And the way we've seen this affect spending behavior is that in these categories, like food especially, when people go grocery shopping, they're going shopping more frequently, and they're spending less when they do go shop. And so this is how a lot of people are managing their budgets at the moment. And they're doing this also by returning in person to grocery stores as well. But of course, because food prices are so much higher, if they're spending less when they shop, they have to go more frequently to purchase enough food for the month. So it's having a real impact on consumer spending behavior. And the other point is, because inflation is so high, it's going to be for the next 12 to 18 months that it's remaining significantly higher than the 2% inflation rate that the Bank of England and other central banks seek to target. So because it's going to take a while for inflation to come back down, this means that your interest rates are going to be higher for longer. So even if inflation starts to slow over the coming quarters, interest rates are expected to remain high for the next through 2023. So here I'm showing you the central bank policy rates for Eurozone, UK, and US. So if you look at the orange line, that's the Bank of England's policy rate. So you can see how quickly it's risen since December of last year to 3% currently. And the faded orange line there, that's showing what financial markets are pricing in for the Bank of England's policy rate next year. So we still have further interest rate hikes priced in, further increase in interest rates. And that, of course, then will be feeding through to consumers and businesses. I'm sure the consumer impact is very well understood. We have rising mortgage rates. We have a softening in the housing market. So that is going to, of course, impact anyone who has a variable rate mortgage or who is rolling off the fixed term of their mortgage contract. If you look at UK households, about a third of households own a house with a mortgage. And if you look at those that are on variable rates or who are rolling off a fixed rate in the next 12 months, that's about, again, about 12% of all UK households. So you have 1 in 8 UK households in the next 12 months, they'll be facing higher mortgage payments. So that's sort of the cost of borrowing pressures that's coming in addition to the cost of living pressures coming from inflation. Of course, this also has an impact on corporates with access to credit and the cost of credit rising for corporates. Margins are also already squeezed by inflation, again, that I detailed on the last slide. And that's making access to affordable finance more difficult. And there's big differences between businesses here based on company size, based on their digital presence. So in general, larger companies tend to have bigger cash cushions and can more easily absorb this higher cost of credit. Whereas smaller companies, a lot of whom had to take on more debt to get through the pandemic, a lot of that debt is also not fixed interest rate payment. So we're really seeing a squeeze, particularly on access to credit for smaller businesses. So those are the two big headwinds buffeting the economy. And the impact that has on the consumer is that they feel really quite gloomy. So on the right here, I'm showing consumer confidence in the UK. If we look at business confidence, it's a similar trend. It's quite striking that consumer confidence at the moment is even lower than it was in the global financial crisis, which is somewhat surprising given that that unemployment is much lower than it was in 2008, and that other aspects of the economy are in better shape than then. But the reason for that is that consumers hate inflation. It makes them feel terrible. And at first, when consumer confidence was falling this year, it didn't seem to really be indicative of consumer spending, because if you look at the chart on the right, retail spending was holding up. If you look at the white line, that's the value of retail spending, so the nominal sterling that consumers are spending on retail. And that has continued to rise over the course of this year, in contrast to falling confidence. But because inflation is so high, even though consumers are spending around or near the most they've ever spent on retail shopping, the actual volumes they get for that spending has been falling. So the units, the units of apparel, the amount of food they get for that spend has been drifting lower and lower as inflation has risen higher and higher. And this isn't something that consumers have experienced really in a generation. And so obviously that's quite, people obviously don't like getting less for their money. And so that's really been what's driving consumer confidence lower. So with inflation peaking soon, you would expect over the course of next year, this gap between how much people are spending and how much they're actually getting to start to narrow again. But it's quite a large gap, and prices aren't necessarily going to fall. They will just be rising at a slower pace. So it's going to take a while to restore that consumer confidence back to where it was before inflation was really accelerating. And if we look at the impact this is having on what people are spending on, I'm going to show you here our Spending Pulse insights. Spending Pulse looks not just at spending on MasterCards, but on all card networks and in cash. It is an estimate of all spending in the economy. And so here I'm showing you the main sectors in retail, and then also outside retail in restaurants and lodging. And what we've seen this year is that people have spent a lot less on things, so electronics, furniture, home improvement. These are areas where people spent a lot when they were in the first 2 years of the pandemic, when they were stuck at home. So that a lot of that spending demand was brought forward. So even if we didn't have cost of living pressures, these sectors would probably be lagging anyway because people spent so much on it during the early part of the pandemic. And what's been doing well this year has been experiences. So lodging, restaurants, travel, concerts, anything related to going out. And that's why apparel also was green for part of this year, because you have to look good when you go out. So that it benefited from this surge in spending on experiences. And finally, the last category where spending has been strong, unsurprisingly, is essentials, so grocery, petrol, because inflation, as I mentioned, has been concentrated in these categories. People have to spend on them. So spending growth has been quite strong in essentials as well. If we look at what's been happening in recent weeks as the weather has started to get colder and people have started to spend more on their energy bills, we've seen the spending on experiences now start to soften. So you see from mid-September, spending on restaurants there is softening. So even the parts of the experience economy are starting to soften as well, with the only really essentials and lodging remaining growing. And then that means that if you look at total retail spending in the last row, that has sort of turned into negative territory over the last few weeks. So real clear impact of inflation, of pent-up demand for experiences earlier in the year, and now people really having to focus their spending on essentials going into the winter. Okay, so that's sort of the picture, the economic picture we're seeing right now. It's quite gloomy, but now I'm going to share with you several areas where we are seeing resilience and reasons for optimism. The first is just the relative health of the consumer. And that comes from two areas. The first is how much excess savings consumers have built up during the pandemic. So you see here in the first 2 years of the pandemic, consumers saved about 250 billion pounds more than they normally did before the pandemic. And that's equivalent to about 20% of annual consumer spending. So it's a big cushion of cash that is held mainly in bank deposits. Of course, it is distributed more heavily towards higher income households. So again, this is very important to take into account the cost of living pressures on lower income households. But for the households that do have these excess savings, this provides a cushion that gives them the confidence at least to continue spending from their income going into these quite challenging economic environment. The other point is that household debt, and here we're talking mainly about mortgage debt, has not risen significantly over the last decade. If you look at household debt in the decade before the financial crisis, you see a really huge run-up in the value of mortgage debt relative to the economy. And that's part of why the financial crisis was so damaging, because when the economy stalled and unemployment was rising in the years after 2008, people had all of this new debt they had accumulated they all of a sudden had to deleverage from. And so all that deleveraging weighed further on the economy, in addition to higher unemployment and people spending less in a downturn. This time around, we're not in that situation. Debt as a share of the economy, household debt, has been on a decline over the last decade. There was a blip here in 2020, 2021, but that was mainly because GDP contracting during lockdowns. So the overall household debt burden has been drifting lower. And a lot of the house buying activity that happened during the pandemic was from higher income households with more equity. And a lot of the riskier mortgage lending practices that contributed to the financial crisis are no longer taking place. So we have more savings, relatively healthier debt situation for households. If we look at what's happening this year in terms of borrowing and saving, so this is showing you household deposits growth for every year in the UK. So you see in 2020 how much faster household deposits grew than in 2019. because people were stuck at home and they weren't able to spend as they normally did. It also grew quite quickly in 2021. So that's what was driving those excess savings. This year, household deposits are growing again, kind of the similar pace they were to in 2019. Of course, if you adjust for inflation, that would be that would indicate some degree of dissaving. And so that would suggest to us that consumers are starting to use some of their savings or not be able to deposit as much, again, because of cost of living pressures. So it's definitely starting to become visible on deposits. If you look at how people are coping with unsecured lending, with credit card lending, you see in 2020, people paid down their credit card balances dramatically as they also just used their credit cards less because they weren't out and about. If we look at what's happening this year, people are now adding on net to their credit card balances, and they're borrowing, more rapidly than they did in the last pre-pandemic year of 2019. So people are certainly using their credit cards more. So that could be worrying in the context of the cost of living crisis. However, we've seen over the course of this year that a lot of this credit card borrowing has been driven by travel, which is also, it's a sector that tends to lean towards credit cards in general. So it's not necessarily just a cost of living story. And also, if you look at how much consumers deleveraged in 2020, this increase in leverage this year is a fraction of that. So there's still significant room to borrow relative to where consumers were in 2019. The other positive for the consumer is how strong the labor market is in the UK right now. And that's the case also in other countries as well. If you look at unemployment in the UK, the number of unemployed people currently at about 1.2 million is lower than the number of vacancies outstanding in the UK. And that's a position that we've never seen historically before. And so it's a really strong position to be in if you are in work or seeking a job. And this is positive because people have income, can continue spending in the face of cost of living pressures, and they also feel like they have job security because vacancies are still so high. And so that gives people confidence to at least continue some degree of spending. Of course, the flip side of this is that it's very challenging for businesses to recruit in this environment. And we know, obviously, the UK is facing really tight labor market with the fall in participation after the pandemic. And businesses are really struggling, and especially in some sectors, to recruit. So there are two sides to that coin. But on balance, it is certainly a positive that the labor market is in this strong a position going into a downturn. However, even though that has pushed up wage growth, running at around 6% year on year as of September, that's very high wage growth, historically speaking, if you look back the last decade, but that's still nowhere near where inflation is running at. So again, part of the reason why consumers are feeling gloomy, but again, if inflation is starting to peak and come down over the next few quarters, watch this gap between wages and inflation as it starts to narrow, and hopefully, if eventually wages are rising faster than inflation, that will provide a boost at some point down the line to sentiment. And the final point I wanted to come to was on the resilience of online business formation. So this here is looking at active merchants on MasterCard rails. And here, the first chart is showing you how strong an increase there's been in the number of merchants on our card networks in general. But what's really interesting is that we've seen a huge increase in the count of online-only merchants. And that happened, unsurprisingly, in 2020 and 2021, but it continued to accelerate over the course of this year. And so even with the shift back to in-person and the ending of lockdowns, we've seen a real acceleration in the count of merchants that are active online, and also merchants who are just accepting online for the first time, which is really exciting because having both an in-store and online presence helps firms connect with customers that they otherwise would not have been able to reach. And that broadens their brand awareness. It can diversify the product offerings that businesses have, and it can also help them maintain more flexible and targeted pricing structures in a challenging cost of living environment like the one we're in at the moment. So we know that a lot of households facing cost of living pressures, they're going back in person, shopping more frequently to bargain hunt, but some consumers still prefer to shop online, buy in bulk, or price compare that way. So having this option where businesses can reach customers either online or in person will really support the resilience of the economy going into this more challenging time. And just to finish, I just wanted to highlight how much of a leader the UK is in e-commerce penetration across most categories. If you look at apparel, for example, the UK is second globally in the e-commerce penetration in apparel sales. If you look at most other consumer sectors, the UK is up there in the top global ranking and certainly at the top of Europe in the share of e-commerce, in the share of consumption that's happening via e-commerce. They're looking at homewares, home furnishings, UK is at the top. Even if you look at, for example, mobile e-commerce, the UK, we know that a lot of other regions outside of Europe are ahead of us. But if you look within Europe, the UK again is the top in terms of mobile e-commerce. So a real source of strength and resilience for the UK economy in this time. So that's what I wanted to share with you today. Just on my final point, the big challenge right now simply is we still have inflation higher than wages. So that's the challenge for the consumer. Watch the labor market. If the labor market starts to turn more negative, that's where financial stress could really start to emerge. And then look at the digital economy as a source of resilience. Thanks very much for your time. Thanks very much for having me.
Thank you. Thank you, Max. I think you've gone anyway, but we weren't going to ask any questions because we have to move on. I mean, really, people, honestly, you missed an opportunity. I'm on stage, it's panto season, and the villain is behind me. But what should you have said? Come on, try it. He's behind you, thank you. So let's get some audience participation next time. And please warn me, I had no idea the poor chap was up there. So anyway, I'm going to invite Julian up now. We're going to get an update on the fintech ecosystem in the UK. I think... Max, you're there again, right? Okay. Honestly, I'm sorry about that. I didn't even know you were behind me, and I was looking for you in the audience. I was looking for the cue of someone standing up, and I couldn't see them. I was honestly confused. So we're not going to ask any questions, if that's okay. I think we're a bit behind time, but thank you very much indeed. Thank you. Take care. Bye bye. Right. He'll do the rest.
To hear from MasterCard. They're one of the key partners that we have through Fintech North, and Darren's here sat at the back. So Darren, thanks for all your support, always appreciated. Hi everyone, I'm Julian Wells, I'm Director at Whitecap Consulting, also at Fintech North, but today I'm really going to talk from a Whitecap perspective, because the Fintech North side of things have been well covered by Joe and Chris earlier on. I'm going to do a short presentation about a piece of work that we're doing at the moment focused on Manchester. Then we're going to have a panel session, and I'm going to get the panellists to come and sit up here after the presentation, just so you guys can see the screen as we go through. Those of you who don't know anything about Whitecap Consulting, we're a regionally focused strategy consultancy. We've got a base here in Manchester, we're headquartered in Leeds, we have 6 offices around the UK, and they're all outside London, and we immerse ourselves in regional ecosystems and regional economies. My role in Whitecap is that I'm the lead for financial services and fintech, and we just started a piece of work looking at fintech in Manchester. So we are conducting a research project. It will result in a report being published, which will come out early in the new year, most likely in February. This work is being conducted in partnership with some sponsoring organisations who are helping to fund the project, and also with partners, Fintech North and Pro Manchester, kind of promotional partners. We're working with Bruntwood SciTech, Midas, and Vialto partners as sponsors. I will say now, we're looking for more sponsors. We're certainly not fully funded on this project yet. So if you find this interesting and relevant, come and have a chat with me afterwards. Background here, I know we've talked about the Khalifa Review a couple of times already today, but one of the 5 mainstreams of the Khalifa Review when it was published last year was national connectivity. There was a whole work stream that was led by Tech Nation with a lot of involvement by Deloitte that focused on national connectivity. And we had these 10 clusters for fintech around the UK that were identified. London being the super cluster, and then or super hub rather, and then 9 other hubs around the UK. 2 of those hubs were in the north. One of them was the Leeds and Manchester cluster. On the panel, we're going to be joined by Fintech Scotland and Supertech West Midlands. So we'll hear from the other 2 established clusters that were cited, along with Leeds and Manchester. This is something that's been of interest to us for a long time, to myself, to Whitecap, to Fintech North, to Chris. This sort of goes, this goes right back to the heart of what we do here. At Whitecap, we've been analysing regional fintech clusters for the last 4.5 years now. We've published reports on Manchester, Leeds, North East, West Midlands, Bristol and Bath and Northern Ireland, and we've also done a pretty detailed project in Scotland looking at research and innovation. So around those 9 clusters outside of London, we've sort of deep dived on 6 of them. Last time around, when we did a report on Manchester, which was published in 2020, the story was really positive. It was it's very clear from our stats that the fintech ecosystem in this region was more substantial in terms of number of fintech companies than you could find in any of the other English regions outside of London. So there's a very strong story there. There's a massive PE hub in Manchester. It's the 2nd biggest PE hub in Europe outside London, which is a stat that still staggers me when I hear it. And also a huge financial and professional services sector. In terms of the fintechs that are here, it's quite a widespread. There's definitely, what we observed last time was that e-commerce sector that's particularly strong in Manchester kind of flows through to strength in payments and also in consumer finance, consumer lending. And I know Joe gave a nice overview earlier on of some of the regional strengths. So what we're doing is we're updating this analysis, and that's the kind of focus of the project. So one of the key things that we do is produce an infographic that illustrates who are all the people in the ecosystem, the fintechs, the FS companies, the tech companies, the investors, the higher education, the support services, all the professional services community, and related activities. So we're in the process of mapping that now. But what we can share with you today is what we've found so far, and bring this to life a little bit, because we've been running some of the analysis already, and a couple of my colleagues, Josh and Romana here, who've been leading this work. So I thought we'll just tell you, how does it look at the moment? All of this is draft, so none of this should be taken and kind of widely published, because it's evolving. But you can see over the last 2 or 3 years that the GVA in Manchester has been growing. That's the GVA, the value of the economy, and the population as well. The financial sector has kind of grown pretty much in line with the financial sector, but tech has really boomed, and the stats that we've run so far show that it could have increased by as much as 40%. But the really interesting number there is that there's a 150% increase in the number of fintech startups and scale-ups that we've identified in this region. So last time around we found 39, this time we found 97 so far. So I think it'll change. It'll probably, overall, it's more likely to go up than it is down, because there'll be people that, probably people here today that are not on here yet. We break it out. I don't want to go through every line of the stats, because I want to make sure we have a good chance for the panel and you guys can see the screen. But you can see that scale-ups are very strong in this region. There's been an increase in the proportion of those fintech firms that are scale-ups. As is typically the case in fintech, there's a real strong leaning towards B2B orientated businesses. Although I would say the B2C sector in Manchester is also really strong. To have 50% of the fintechs having a B2C element to their proposition is certainly over-indexing. I think typically in fintech, when you look at a region, you expect about 80% B2B and probably about 25 to 30% B2C. Obviously, some have both, which is why it doesn't add up to 100. I imagine that question was buzzing around some people's heads while I'm talking. The age of the firms has increased. I guess there's scale-ups in there, sort of illustrates that, and it's a couple of years on. Fintech founders are quite old in terms of what you think of as an entrepreneur. That's very typical. All the regions we've analysed, the average has always been in the 40s. So that's something that it'd be nice to see more young founders, but this is a complicated industry. Founders often come into fintech with a strong understanding and belief in a particular problem that they've been immersed in, often in a role in a corporate. And about sort of 4/5 of the fintechs here actually have their headquarters in this region. The rest are coming into Greater Manchester, so they are sort of inward investment success stories from a Manchester perspective. And there's a lot of that, and there's a lot of international representation in this region. Some of the speakers we'll hear from later on represent that from Bulgaria, from Brazil. There's a number. So who are all these new firms? Because obviously we found a lot more names here. We've gone from 39 to 97 so far. I've popped some of the names up. These may not be new firms in the last 4 years. In fact, a good chunk of them won't be. It's just that they were not visible last time we did the research. So companies can evolve, they can change the way they describe what they do, they can change their focus, and they can just become better known. So call out a few of these. Beck's Family Finance account. Collective, they're speaking later on. Group Payments app, just expanded into the States. Financial, money management for women. Frost Money is a new bank, started up by Pavel. I don't think Pavel's here today, but a Polish entrepreneur. Improve Easy is helping to finance green energy improvements to houses. Liquid Accounts and My Digital Accounts are kind of a couple of the accounting software providers that we've uncovered recently. Payful, along with Financial and also with Risk Connect, who are not on this slide but are another new entrant, were named recently in the Prolific North top 25 tech companies in the North to watch. Rupee, we're going to hear from them later on, Brazilian firm, again in the kind of accounting space. So there's a load more on there. I don't intend to try and go through all of them, but lots has happened in this region. We're doing this exact same project in Leeds at the moment. We've recently done it in the northeast as well. The common theme is that fintech ecosystems over the last 2 to 3 years have pretty much doubled in size. And when you think of everything that's going on, and that doubling is kind of is in terms of the number of fintech startups and scale-ups, which are always going to be the majority of the sector. So Brexit, COVID, pressure on funding. Although Peter had some great numbers to talk about earlier on, fintech's kind of crashing on through that. So really a really good positive story. Our report will come out in the new year. As I said, we've already announced this, so it's kind of out there right now in the press. There's an email address at the top of that slide, or just come and chat to me today. We do need people to help fund this, but actually we need people to give us insight as well. We need to interview people, we need suggestions of names, etc. So if you've got some value that you can add, then please get in contact with me. So we are going to have a panel discussion now. Where we're going to sort of link some of the Manchester narrative, but also talk a bit more broadly about the wider UK ecosystem. So, if I can invite my panelists to come up to the stage and grab a seat, then that would be great. Thank you, guys. So what we've got on our panel today is we've got a couple of people who are very deeply immersed in the Manchester fintech ecosystem, in Deborah and Scott. We've got Stephen from Scotland, we've got Hilary from the Midlands, and then we've got Stephen Hall from Vialto, who have a presence in Manchester but are a London-based organisation. So what I'm going to do is invite each of them to introduce themselves and just say a few words, not just sort of who they are and where they work, but a little bit of background about their involvement in the fintech sector. So kind of good sort of 2-3 minutes each if you'd like, and then we'll move into a panel. I've got some questions lined up. We've got some mics. We're really happy to take questions from the floor as well. We will be running until the coffee break, which is at 11 o'clock. Okay, so let's start on the left and work our way across. Stephen, the Executive Chair of Fintech Scotland. Would you introduce yourself and give a bit of context, please?
Thank you, Julian. Delighted to be here and great to hear about this, the thriving fintech community here in Manchester and the North West. I'm Stephen Inglejoe. I'm the Chair and founder of Fintech Scotland, which was created 5 years ago. Fintech Scotland is a cluster management organisation that we established. It's not a trade body. We're not a membership organisation, and we're there to develop the cluster, and we're measured by our economic impact. We've grown the number of fintechs from 26 back in 2018 to over 200 today. We are funded by large enterprises, large financial enterprises, large technology enterprises, professional services, large global players, and 3 universities. 10% of our funding does come from the public sector, from the economic agency in Scotland called Scottish Enterprise. But the important thing is that we are funded by the big to help the small entrepreneurs, innovators develop, grow and scale. So the tide rises for everybody. And that's the nature of a cluster management organisation. 3 years ago, I was here, just over, with Julian, Charlotte, Peter from Innovate Finance, and that's where we started up the idea of a UK fintech national network, which has now grown to 6 parts of the UK, which we're delighted with. More recently, I'm involved now behind the scenes with the creation of CFIT. Chris referenced that, this new body, this new independent organisation being set up by the UK government to really fuel and turbocharge UK fintech, particularly working with the regions. So more of that to come in 2023, and also have a broader role in innovation strategy for the UK government, Department of Business, in sitting on their business innovation group, developing innovation strategy, not just in fintech, but across other sectors in the economy, so we can grow those new emerging future industries as we come out of a very challenging time. That's me, Julian.
Fantastic, thank you, Stephen. And Stephen and Fintech Scotland hosted a full-day conference yesterday in Edinburgh that a number of the speakers and attendees here today were also taking part in. And thank you for everything that you did to make that event so successful. And we'll also hear from Nicola from Fintech Scotland, who's the Chief Exec on one of the later panels. So Deborah, tell us a little bit about Midas for those that may not know, and introduce yourself.
Good morning. So my name's Deborah Walker. I head up the Financial Professional and Business Services team at Midas. So Midas is Greater Manchester's inward investment team. So we're funded by the combined authority and the 10 local authority areas that make up the whole Greater Manchester City region to help businesses like yourselves to come into Manchester to set up, to grow, scale and employ local people. And that's our sole function really. So we are funded to do that. Our services are all free, entirely confidential and supportive for your business. So we provide some very, very practical support for businesses like fintechs in terms of helping you find premises, in terms of mapping you into the ecosystem, connecting you to the universities, connecting you to the talent pool, telling your story and raising PR around your business so that you can actually launch, grow and scale. And we do all that for free, which I always think is a great incentive. Within the fintech community, we've seen a huge amount of growth across Greater Manchester. It's been an area that we've really focused on, particularly in the last 3 years. So COVID actually gave us an opportunity as an inward investment team to reflect on what we wanted to deliver as part of the city region. And also the financial services community here has grown and scaled in such a intense way over the last few years that we've seen such breadth and depth across all the financial services and such a great interest from large incumbents, the likes of Barclays. So thank you to Chris for pointing out, because their tech team's here, so they probably actually designed that tech innovation from Manchester. But large incumbents and small fintechs. And it's given us an opportunity over the last couple of years to focus really on how we can attract more fintechs directly into Greater Manchester, as opposed to them coming into the city, which they often do, and then struggling to actually grow and scale within that very constrained environment. So that's what we do. We've focused on the fintech community. We've worked really closely with the likes of Fintech North, with the universities, with the likes of Pro Manchester and other professional services partners, and with fintechs themselves. And we're just delighted that actually the fintech story continues to develop and grow within Greater Manchester.
Brilliant. Thank you, Deborah. It's great to have you here. You guys are central to all the success that Manchester has had. So Hilary, welcome. Hilary's making her FinTech North debut today.
I know, this microphone's designed for a taller person. So yeah, hi, I'm Hilary. I'm from Supertech, and I'll explain why we've got a slightly different name in a moment. But it's Birmingham and the West Midlands, looking after the fintech sector there. So thank you very much for the invite and for having us up here. We're a little jet lagged. I'm not quite sure where I am, having been on tour with Stephen and the rest of the national network for the past few days. As I said, Supertech is the fintech representative bit, and we're the new kid on the block. So not just new here, but we're only 18 months old and part of the fintech national network, and really filling that very obvious void of the past of the Midlands, and people thinking the assumption that there was no fintech in the Midlands because there's no customer management organisation there. And actually, it's completely the opposite. We knee-slid our way into the Khalifa Review off the back of the fact that we were recognised as an established hub. So actually, there's a thriving community, but it was happening organically, and that's fantastic. But the missing link there, and as Ron and the team at Innovate Finance and TechNation pointed out, was that it's not quite getting the sum of its parts and wasn't getting that visibility, and therefore to play our role really in the UK PLC opportunity, which is fintech. This, we needed to exist in order to do that grassroots bit, not a trade organisation, not membership, but there is a need at a grassroots level to do that, to amplify, but also to help grow the UK picture. Why not Fintech West Midlands? Well, if you're sort of knee-sliding your way into an accelerating trend that's happening anyway, one of the things that it forced us to do was to think about, well, what else is happening out there in professional business, professional services. We have a very large sector, as does the North. It's a third of our economy, and when your economy is the size of a small European country, then that's a really big thing to think about. So what else is tech disrupting in the knowledge economy? And we started to see, well, prop tech is a thing, real estate's really big with it as a subsector for us. Legal services similarly, and legal tech and prop tech are following very similar trends to fintech. So fintech's been on this rapid journey, and we're catching the wave of that and understanding then how can we support and do that, because the same things are starting to come out now. Ministry of Justice is currently deliberately pushing a levelling up agenda into law tech. And the like. So we were trying to just sort of give that. But also technology doesn't really respect the boundaries. I've been on my LinkedIn this morning, and some legal tech things doing a fintech day because it's important for in-house lawyers to understand fintech. So the ability to transfer and to help that is not only just about those new, catching a wave, but it's also because they're directly relevant, and tech doesn't respect those boundaries. I've got an organisation in our patch who's a fintech, prop tech, fintech, and he will literally say, Hilary, which hat do I lead with today first? Because he's facing both markets, because they're actually unlocking small house building through the power of through crowdfunding, fintech, and institutional investment. So, it's BPFS is pretty siloed, and it still works in those verticals, but that's not what technology does. And also, being completely selfish and honest about it, it's not representative of the community in our patch. It's big but little. Everybody knows each other, which is the beauty of working in a regional economy, because you can have interesting jobs and work internationally, but know everyone in your patch, and that makes it a nicer experience, I like to think, in the regions. But they were literally going to ask me if I did FinTech West Midlands, and then I'd have Law Tech West Midlands, and then Prop Tech West Midlands, and then they'd all want to meet each other all the time. So we called Supertech, and brought it all together from the off, and now we're starting to pay the dividends of that. But I can talk more about what we do as we go through, but that's a history of us.
Cool. Thanks, Hilary. So Scott, tell us a bit about Bruntwood for those that don't know. What's Bruntwood SciTech, rather?
I'm Scott, Business Growth Manager at Bruntwood SciTech. We are owner-operator of a number of science parks and innovation districts in 7 regions across the UK. In Manchester, we have 3 campuses within 5 minutes of the university here. And a key example of that is our Circle Square campus, 5 minutes up Oxford Road on the old BBC site, for those that know it. And here you'll find a mix of various science and technology companies, from small startups right through to large international companies, as well as providing the office space and high caliber collaboration areas for them. We also provide business support, so that's working directly with partners, both public and private sector, from the likes of the hospital trust, the universities, professional services. We're giving a full wraparound service to our customers, and the way we work is in total collaboration. So we're really excited to be part of this project and to grow our relationship with Fintech North and Whitecap, and see how we can add to the ecosystem here in Manchester and support the continued growth of the fintech economy here.
Cool. Thank you, Scott. Thank you. So Stephen, we've got 2 Stephens on the panel, so Stephen H, we'll do that rather than use full surnames. Tell us a bit about Vialto.
Oh, thanks. Yeah, so my name's Stephen Hall. I'm a senior manager at Vialto Partners. So originally I was an immigration lawyer. I still am actually, but what we've now branched into is global mobility more generally. So what we do is we support fintech companies move their talent, their best people around the globe. So we're able to bring them in a compliant manner to whatever country they want. And you probably haven't heard of Vialto Partners before. That's because we used to be within the PwC, and PwC sold their global mobility practice in April. So Vialto Partners is a bit of a startup as a brand, but we've got offices in Manchester, Leeds, in Scotland, Northern Ireland, London as well. So there's about 650 global mobility experts in tax, immigration, remote working obviously is a big thing, so we can talk about that later. So how can you be compliant with workers all over the globe? And we also support fintech within universities, so we do a lot of lectures as well to try and bring industry knowledge into universities and try and pull the best talent out of universities as well, because even looking at sort of visa systems at the moment, although the end of free movement happened 2 years ago, overall I think the UK immigration system is quite fair. So if you do want someone who's not a British or an Irish national, with a little bit of planning, then you can get those resources into the UK. And a great source is universities, because last year they brought in the global the graduate visa, which gives it's basically a post-study worker visa. So if you studied at a UK university, you can get a 2-year work visa. So you can pull quite a lot of talent out of universities. And then you've also got the global talent visa for more sort of exceptional people that you're looking to bring in. So that's just a little bit of background about me and what Vialto Partners do.
Great stuff. Thanks, Stephen. Yeah, we'll definitely come back to talk a bit more about a couple of those things. So I'm going to go into a sort of a Q&A really with the guys. I've got, like I said earlier, I've got some questions. I'm really happy for questions to come from the floor. I think it's always a great dynamic if you can get it going at events. So I'm going to kick off asking Deborah a question, but after that I'm really happy for hands to go up. We've got a roving mic. Deborah, we should talk a bit more about Manchester. I think the sort of the success story of the regional fintech ecosystem here, I think it would be helpful to hear from you. How do you kind of sell it when you're outside of the region? What do you say to these sort of international firms or even like London-based firms around, what's the sort of draw of being in this ecosystem?
What's the secret sauce?
What's the secret sauce?
Okay.
Yeah.
So I think, we sort of touched on this when we opened, that there's a rich heritage within Manchester in terms of e-commerce, which actually sort of kicked this off a little bit. But alongside that, I'd also say there's a very rich heritage in terms of that innovation, those disruptors, those people that are not frightened to do things differently. There's a reason why votes for women sprang from here, why we had the first supercomputers, we're not afraid to do things differently. And that's part of the draw, and that's part of the reason why there's been such a massive investment into technology that's seen Greater Manchester be one of the largest tech hubs in the UK, as well as one of the largest fintech hubs. It's also itself, before I even get into the fintech piece, the city itself is a massive draw. So a lot of the people that are coming back into the city have already had a connection with the city in the past. They're either coming back because they're Manceunians by birth or by adoption. So they've been through the universities, they've seen the ecosystem, they've worked here. And it's no surprise to us that we've also been voted the third best city to live as well, after San Francisco and Amsterdam. And I'll give those two great cities the credibility that they need to have in terms of being number one and number two. But Manchester's been voted third, because there's an awful lot about culture as well. So there's all these things sort of surrounding the actual hard facts that allows us to attract particularly fintechs into Greater Manchester. And one of those biggest attraction factors is the talent that we have here. So we're in a great university here, but we have 5 great universities within Greater Manchester, all of whom have been very, very invested into growing technology skills, and particularly fintech skills. We have a very, very well invested, supportive and innovative combined authority, ably led by Andy Burnham, who's pouring money into technology and digital skills. So over the last 7 months, £7 million has gone into fintech, into boot camps, into technology boot camps. So the talent itself is there, and talent, as we've heard, is a really hard to find commodity. The ecosystem itself in terms of financial services is very, very broad and deep. So, you know, if you're doing B2B sales, then lots of the banks that you're already trading with have got their facilities here, and particularly their sort of front-end tech functions as well. And I also think that the intangible thing that we find it harder to sell but easier to demonstrate is the spirit of collaboration that we have across the whole of Greater Manchester. So people are very, very willing to come together. And I think we've seen this with Fintech North across the north as well. People are very willing to come together to collaborate, to support each other, even where they might actually be in competing technology businesses.
Yeah. Is there a tendency, do you see more national inquiries or international in terms of people interested in coming to the region?
I was mulling this over because it's a really difficult time to actually give you an answer on that, because obviously we've had two and a half years of COVID, and what the 2.5 years of COVID particularly did is it made FDI, foreign direct investment, really, really difficult, and particularly for those smaller fintech businesses that were looking to invest. So we've had lots and lots of pent-up demand, should we say, lots of small businesses that normally we would bring in really quite quickly, that have been waiting 2 years or more to actually land, so there's some stability. What we are seeing in terms of a slight seed shift is, prior to COVID, we saw lots of London-based fintech businesses and challenger banks that were looking to North Shore quite a lot of their operations in order to get opportunity to get hold of some of that talent. We've seen a shift, and I think it's across all technology business, and you're probably seeing the same thing in Birmingham, a shift to much more virtual-only working environments. So they're actually employing, you know, Greater Manchester talent, but still keeping a footprint in London or even internationally. That's not a sustainable business model, really, particularly where you're taking young talent out of universities, where they're early career professionals, where they need to come together to innovate. And actually, we're starting to see a tipping point now where those businesses are going, great, well, we started off recruiting all these people, and we've got, you know, a large number of people now that are operating remotely, but actually we're in Greater Manchester. And I think what we're going to see over the next 12 months is another huge shift in terms of North Shore to bring a second HQ or an ops division up here, in order to bring all those people into a physical space. Even more so as it gets colder, and as people sort of struggle because they're feeling a little bit more isolated over the winter months.
Yeah, cool. Thank you. Definitely some interesting dynamics there. I mean, from a data perspective, it's really difficult to figure out who's working where, who's actually got a presence in a region, whereas who's got employees in a region. Stephen H, not I, no. Talk to us a little bit about what you see. I mean, you work internationally, so you've got a kind of unique perspective compared to many of us. What are the trends that you've seen in the UK about people trying to bring in these remote workers from overseas? Is there anything you can kind of shed light on, particularly with a fintech or tech perspective?
Yeah, absolutely. So I think what we're seeing is that after COVID, a lot of the workforce were dispersed in different countries. So there was an idea where you can work remotely from anywhere, and I suppose in a sense you can, but it gets very, very complicated from a compliance and regulation and a tax perspective. So what we're doing at the moment with a lot of tech companies is saying, well, yeah, you can't tell your workforce that you can work anywhere, but there needs to be some sort of policy. So I think it's really good to get a sort of a remote working policy. So an example would be you can work remotely 30 days of the year without asking permission. So that takes quite a lot of the burden away from management. If it's going to be any more than 30 days, then you really probably need to look at what the tax system is in the country they're going to. Is it going to be a permanent establishment? It can get very complicated very quickly. So I think the trend we've seen is that I think people are sort of pulling back a bit on saying you can work anywhere in the world, because it's very, very difficult for the UK business to sort of to monitor that. The other big trend we've seen is that I think within the tech sector that it used to be about a fifth of founders were non-British nationals, and so since then we've had the end of free movement. Then obviously people from Europe need visas as well. So you're probably looking at maybe half close to half the tech sector in the coming years probably will need some sort of permission to work in the UK. So we're working with quite a lot of companies on getting policies together on, do you sponsor visas? Do you help people get their visas? And where exactly is the talent coming from? And I think if you are going to maybe open a branch, maybe let's say you're based in Manchester and you want to have an overseas branch, then just offshore it properly. So just pick a country and say we're going to employ 10 people in, let's say, Poland, and have a permanent establishment there, rather than having 10 individuals scattered all over the world. It gets really complicated. And I think that the tax authorities now, during COVID, they were quite lenient. They didn't really care where people were, but now they're getting a lot stricter. So I think that's the two big things we're seeing is there's more international tech talent coming into the UK, and you need more policies and procedures to make sure that your remote workers are actually working correctly in whatever country they're in.
I mean, one of the observations I've had is that the fintech firms tend to be employing people from all over the world, and I guess and less so with the larger companies, and maybe that's down to an awareness of the regulations. There might well be a lot of the smaller fintech firms that are just inadvertently, or without meaning to, just breaching the regulations.
We have seen that. So I think it's sometimes, I suppose, if you're a smaller company, you may fly under the radar a little bit. So the bigger companies maybe have, they've got a bigger profile. So the tax authorities might look at them and scrutinise them more closely. But I think the sort of tax and immigration authorities are scrutinising all companies now. So and HMRC and the Home Office, they're sharing data. So I think that getting your sort of compliance and regulation policies in place is quite a big thing. Even if you're a startup, if you get it right early on, then it can sort of go through to when you scale up and your growth. Yeah.
Cool. Thank you. So Scott, with Bruntwood, obviously within your premises, you've got loads of startups and different and tech firms of different shapes and sizes. We're telling a story about a lot of growth here, lots of new names coming into the picture. How does that compare with what you're seeing in tech overall, and what's your general feel for this sort of disruptive tech, early stage tech sector?
Yeah, I think with the growth of the report showed there, fintech, the other sectors are on the same trajectory, and have already been mentioned a few times. The fintech was attracted because of the e-commerce companies, and we see those continued growth in those other areas around like cybersecurity that also feeds into fintech, and also cryptocurrency, but Web3, blockchain, AI, those other areas that, and more there's collaboration across the sectors. I think we mentioned before, like, you can't just put them in a vertical, and when you don't do that, you can see the growth across all the sectors. So it's not specific to one sector. Each one is helping the other along, and that continued collaboration between different sectors that really exist here in Manchester in the ecosystem. Ourselves, we host a lot of meetups, we host conferences, events, and facilitate those events and those introductions and those partnerships. And that's when you see that growth happens, when those connections, like in the breaks here and the pre and post events, where you get to meet new people in different sectors, and that really stimulates that growth and keeps it going.
Yeah. Thanks. Bruntwood SciTech is very, very active in helping support tech companies and just entrepreneurs in general. Hilary, I wonder if you could share, there's an example project that you've run in the West Midlands that I think everyone's kind of noticed and thought was very interesting, of your pre-seed accelerator. Could you maybe tell us about that? Because we often hear in different regions that there's a need for something like this.
I'm going to try and do two quickly, because the pre-seed one was just an example of how you can actually do an intervention in a place and make quite a rapid difference. So we were very bothered about that statistic about the middle-aged. I'm all about to probably offend everyone by quite a bit of the room, but fintech founder being 48 in our region by average age, and then it's also white and middle class and male. So when you live in a super diverse city region that we do, like over 180 nationalities, we're really worried about that. So we actually have created a pre-seed accelerator which doesn't do the sort of standard stuff, doesn't compete with the incubators. There's over 40 incubators in our region. Nobody needed another one. The business support environment is rich and fulfilling, and I know, impressive. We built the tech, so we've leveraged the power of no-code technologies to build MVPs, and that has been made us be able to create 9 new companies, 24 new products launched to market, but without trying. The demographics have been about 50-50 on gender, all ages, ethnically diverse. So we're really proud of that, because it's been, and we've done it at rocket fire, sort of 9 months to do that. So that's something that which now we're trying to put in front of anybody that will listen in our region to say, if you want to know how to grow the sector and deal with the inclusive growth point, not just grow it, inward investment's absolutely there, but it's a very different lever. So we've been trying to think about the other levers that you can pull. The other bit, which is an offer to everyone in the room, and particularly in the fintech space, we work really closely with our headquartered corporates, Wesleyan, BNP Paribas, Personal Finance, so the FS. And one of the things that we know is that knowledge exchange is so important for both sides of the picture. So for the fintech that's looking at new use cases or trying to create a new product fit, they need that insight and that knowledge exchange. And at the same time, our corporates are saying to us, oh God, there's like bloody loads of you. And we've just seen that. I mean, you've like doubled in size here. And you have this sort of, like, you can always feel them putting on the tin hat and daring to go out there. And we know we need to know about this. And some of our COOs will be, they've inherited digital transformation and the fintech bit. And it's not their comfort zone. So anybody that's interested in talking to any of the headquartered ones, you can book an hour with them through us. It's exactly what it says in the tin. It's not pitching. It's not investment. It's just networking, and COVID's done that, and it's free. So there's 1 slot each month which you can just book. So go on the website or find me, and I can show you how to do that. Or find Siobhan. Wave Siobhan, she can help too.
Yeah. So there you go. Free access to some of the biggest corporates in the West Midlands. Stephen, in the limited time we've got left, I think it might be good to ask you a little bit about CFIT. You've been involved in the process of some of the sort of selection of the chair, and as you mentioned, Charlotte Croswell's been appointed there. What do you think, or what do you hope CFIT might mean for regional ecosystems like Manchester, Scotland, West Midlands, and everybody else? What's your take?
Well, there's a couple of points probably. One is it's not there to duplicate what already happens, either in the regions or nationally. Innovate Finance plays an important role as a trade body. It's not to be a trade body, and it's not there to be a panacea. It can't do everything. The idea is to intervene on key issues, key prioritised issues that where it's felt actually that intervention at a national level, UK level, will actually propel some of the activities happening at regional level. The key is really its areas of focus. Charlotte and the new CEO, when they arrive early next year, will take a view as to which of those priorities. But I've no doubt those priorities will be as relevant as they are to Leeds, Manchester, Birmingham, Scotland. So there will be an alignment there, but it won't solve everything that needs to happen across the UK fintech ecosystem. The second, though, is really the role that they play through to the regions. And there is areas where there's particular focus that's important now. If I give an example, Manchester, alongside Birmingham and Glasgow, has been chosen to three city regions for innovation acceleration by the UK government. So Manchester receiving £33 million. Now, as I'm involved with the Glasgow aspect, making sure Glasgow, Manchester as well, should be involved in ensuring that part of that £33 million that comes to Manchester, goes to Glasgow, goes to Birmingham, is being there to accelerate fintech development. What that requires is a level of being organised. You can't just collaborate. You can't just be a cluster and hope that some of that money will trickle through to propel some of the great creativity and innovation happening here in Manchester. You've got to be organised, and you've got to focus on particular areas that are strong here in your region in Manchester. So take Glasgow. We've identified a particular area of strength in fintech innovation around financial regulation. Innovation in financial regulation, the whole compliance process, the supervision aspect. And because we've got some large enterprises like JP Morgan, Morgan Stanley, Barclays, and some great innovative fintechs and some universities, their involvement in creating an organisational approach is allowing us to tap into that 33 million that's come to Glasgow to propel some of this development and support the smaller businesses that are involved in that particular area. The question for Manchester is, are you organised enough to do that and to ensuring that you're tapping into, or will that £33 million come into Manchester, will actually go into other industries and you miss out? So be organised, be focused, be committed to the participation and engage with that sort of process, however it's been led by Manchester. And obviously you've got a terrific mayor in Andy Burnham. I think his leadership, which we don't actually have in Glasgow, it's a bit more disparate. So I'd say you have a particular strength here to ensuring on his list of future key industries for Manchester, Fintech is up there in that top 3, top 5 that he selects, that you select really, in saying, yes, we can propel innovation and accelerate it through this funding that's going to come into the region.
Awesome, thank you. Thank you. Well, look, it's hard to believe, but we're kind of out of time already, so it's time for a short break. Before we have a break, I want to get a photo from the stage looking back, so I kind of want everyone to sort of raise your hands up in the air and look like you're having fun so that we can use this on social media. So come on, give me your best sort of Fintech North. Hands in the air. Awesome. Thanks, everyone. I can't quite get everybody there. Okay, brilliant. So it's a short coffee break because we've only got a short session before lunch after this, so we will call you back in about 15 minutes. I want to say a really big thank you to my 5 panellists for all their input and insight in that discussion, so thank you.
Thanks, thank you. Thanks for having us.
Having a nice time for another round of questions, really. But, some great points. I think everyone got a good bit of
absolutely.
Yeah.
I fill December's slots for the Connector series.
Yeah. Well, yeah.
I've only got 2 left.
To get that in the, have you? I was going to say, let's get it in the right side.
Yeah, we got, well, there's more in January. We run September through March, so we have 6 months on it. So it's 30 slots. Yeah, it's more than that now.
Okay, everybody, can we get started again, please? We want to keep on time. Julian very adroitly got us back on track. Let's not compound our problems. So if you can take your seats, please, or just carry on talking and ignore me, either works. I'm a father of 3 children. This is entirely familiar to me. Could somebody put their shoes away, please? Place in the dishwasher. Anyone? I'll start telling jokes if you don't sit down. That's just, we don't want to go there. Okay, you're going to get a joke. Monday, Greg. Tuesday, Ian. Wednesday, Greg. Thursday, Ian. Friday, Greg. Saturday, Ian. Sunday, Greg. Anyone? It's the Gregorian calendar. Yeah, told you dad jokes. No one's listening to me. I'm quite used to this. Please sit down. Let's get started. That was actually remarkable. I told the worst dad joke ever and people stopped and listened to it. Come on, the Gregorian calendar. Give me a round of applause for that one, please. I'm really happy with that one. Okay, thank you. So, we have a number of speakers now. It's quite a short session. It's going to be just under about an hour and 3/4 before lunch. In fact, less than that. It's 12:10. We've only got about an hour before lunch. So we've got 3 of our supporters today, and we're going to start off with Dare. Jamal? Am I going to look behind me again? No. Okay. So you're going to talk to us about security in this mobile world. Okay, everyone. Welcome, Jamal from Dare. Thank you.
Brilliant. Well, thank you very much to Fintech North for having us once again, and thank you everyone for attending. So today we're going to be speaking about security for a mobile workforce. So obviously we're all here for Fintech. It's one of the big emerging markets, and what we're looking at is some of the threats that are facing Fintech and also facing a lot of your remote workers as well. So we'll go through some of the industry trends that we've identified with our partners Jamf and some of the threats that are facing people on the move as well. So before we begin, just a little bit about ourselves. We're Dare Technology. I'm Jamal, the Customer Success Engineer. We work exclusively with Apple devices, and we look at some of the consulting services for both managing and also securing these in enterprise as well. When we talk about the enterprise perimeter, we're talking about that invisible boundary between your corporate data, corporate devices, and then your personal life as well. In the past, that was very clear. We'd go into an office, we'd sit down at a work computer, type away on a work network, and then we'd leave. With remote work quadrupling in the last decade, and especially being accelerated by the pandemic, we're seeing that enterprise perimeter starting to blur. So you're not necessarily working from home. In fact, 70% of workers don't work behind a desk at all. And we're not necessarily always using a work-issued device. There's been a big uptake in bring your own device policies as well. So again, we're starting to work from our own devices, and how do we figure out what the enterprise perimeter means, and how do we make sure that our data is secure when we're working between all of these personal and corporate devices. We're also seeing a shift in the workloads as well. So 85% of workloads, that's the applications you're using, that's the tasks you're completing, they're moving to the cloud. So again, we're moving from that easy to secure corporate perimeter up into public cloud, where again, there's more and more threats. Finally, we're also looking at device choice as well. So when surveyed, 89% of workers would sacrifice salary to choose the types of device they work on, and specifically choose to work from Apple devices. So the threats that are facing remote workers specifically, and then corporate devices as well, 7% of work devices were compromised in 2021. So it's about 10% of this room, one of your devices will have been compromised, whether that be phishing attacks, malware, adware, different man-in-the-middle attacks as well. 7% of devices were affected. We're also quite worried that 28% of organisations allowed known compromised devices to continue to access company resources and their networks as well. So if you think about it, the teams have had all the information they need to know that there's something wrong with that device and it poses a risk, but they didn't have the tools or they didn't have the skill set to then appropriately stop that access. We're also seeing malware installations doubling on remote devices as well, and specifically mobile, so phones, iPads, that sort of thing. They're becoming a big target, and we'll look at it in a second, just why they're becoming such a big target as well. Finally, the number one threat we see for your mobile device is phishing attacks. It's up 160% between 2020 and 2021, and when Jamf publishes their 2022 report, we're expecting to see a huge rise again in phishing attacks. So why are these devices being targeted, and why are hackers starting to look at mobile devices more and more? Well, if you look at the chart on the left to start with, the enterprise share for Apple is growing year on year, and they now have the lion's share in North America, Oceania, the UK, Switzerland, Nordics as well. So around the world, Apple devices are growing in enterprise, and it's making them a much more appealing target. You'll see back, Microsoft used to be almost all devices, so that's who attackers would spend their time building malware for. That's shifting, and it's shifting quickly. We're seeing that shift as well because a lot of millennials, Gen Z, Gen Z, whatever generation names you want to give it, they're joining the workforce and they're reaching key decision-making roles now as well. They work from Apple from home, they've always had an iPhone, they've always wanted a Mac, it's what they took to uni, so they want to use that in work as well now. They're not necessarily happy to just be given a Windows laptop and told to get on with it. So that's why, again, we're seeing that growing share of the Apple and enterprise market. Looking at the right, that gives us a breakdown of malware that's been identified on Macs specifically. So about a third was known malware, so we've got the information about that. Your security solutions are able to easily block that if you've got the right tools in place. What's worrying is the other 2/3 of malware detected. 1/3 of that is 0-day, so that's never been seen before. That's unknown authors, unknown malware. That's the first time it's been detected. But what's most interesting is the third that's come from known authors. So that's malware that's new malware, but it's someone that's been identified before. And what that's showing us is that attackers are coming back for attempt after attempt to Mac malware specifically. So they're learning from previous attempts. They're finding that it must be fruitful enough that it's worth them investing the time and continuing to develop further attacks for Mac specifically. If we think about some of the attacks, we can have a look at the different mobile threat categories as well. So we like to break them down into two distinct categories. We've got on-device threats, so those are your local ones, and then we have in-network threats as well. So the first on-device threat is configuration issues. This is passcode restrictions, this is some of the security settings you've got on there. This also includes stuff like vulnerable or out-of-date operating systems. When we look at those configuration issues, it doesn't just put one specific app or one specific workflow at risk, it puts all user actions and all user behavior on a device at risk. Secondly, we've got risky apps, and we'll have a look at this again in a second to discuss some of the risky apps, but we're not just talking about necessarily malicious apps here, we're talking about applications and the access they now have to your device. I mean, how many of you, show of hands, who, when they download a new app, just hits accept, accept, okay, okay, when it pops up for all of those permissions? Yeah, probably most of you just hit through. Well, we need to start thinking about why is my calculator app asking for location or camera access? Or why is my banking app starting to look at even potentially contacts access? Is that access level appropriate for what you want to do with the application? And should we be intrinsically trusting some of these unknown app providers with access to all of this information? Remember, we're in fintech, there's a lot of startups, so I think we sometimes think about it must be a company, they must have robust policies in place, they must have robust tools to secure that data. As you see in the news all the time, there's data leaks, data breaches, widespread hacks. That data you're handing over isn't necessarily secure, and we need to be very careful about what we are giving to some of these applications. The third attacks on mobile devices is what we call infrastructure attacks. So that's your network connection. So are we looking at man-in-the-middle attacks, risky or fake Wi-Fi networks altogether? How are we actually connecting to a network, and the traffic we're sending over that network, are we appropriately securing that? Because every time you download or upload a file from OneDrive or Dropbox, that's going over a network connection, and if you can't guarantee that that network connection is secure, that leaves your data at risk as well while it's in transit. If we look at the right-hand side, we've then got what we call the in-network threats. So the fourth is phishing, and that again is the #1 threat to mobile devices. At the moment, it's about 10% of users are falling for phishing attacks. Again, we're seeing that grow and grow year on year. We're seeing a big push in phishing on mobile devices specifically as well, because we see them as a consolidated method of communication. So maybe on your work laptop, you'll have email, Slack and Teams. That's about it. So if someone's trying to target you, they've got very few options to send phishing links through. When we think about our mobile phones, we've got social media, text messages, WhatsApp. We've got our work communication tools on there. So if someone maybe can't get you through Teams or Slack, doesn't stop them sending you a WhatsApp, sending you an Instagram message. There's so many more ways to get those phishing links to you. And again, we see people have their guard dropped when they're on their phone. Typically when a remote worker switches from working on their laptop to working on one of their mobile devices, it's because they're specifically on the move at that point. And when we're on the move, we're maybe not looking as closely as we probably should at what we're clicking on or the information we're providing as well. The last in-network threat is content risk as well. So that's malicious links, that's some of the dodgy sites you visit to download free software, and some of the data that can leak as well. Just because you're downloading a piece of software doesn't mean that the website you're downloading it from isn't scraping a lot of data from your device as well. If we go back and discuss some of those apps as well and the risky data that we're handing off to them, you'll see there on the right-hand side, the App Store. This is a breakdown of some of the permissions requested by applications. 66% of apps on the App Store want access to your photo library. Do we really agree that 66% of apps on the App Store need access to your photo library? It's the same with camera, location, and even microphone. 34% of apps are looking for the microphone. Do 34% of apps need to be listening to you? And we need to be careful as well, when we grant that microphone access, we're not necessarily granting it for when we're using the microphone functionality of an application. It could potentially be listening at all times. A great example of that's the La Liga Spanish Football Association. They were fined back in 2019, 6 figures, because people discovered their application was listening to users at all time, as well as collating location information. And they did this because they wanted to figure out, are venues or pubs showing games without the proper license? So they inadvertently got a bunch of people together just by downloading the app, and as you went and watched the game, the microphone's listening. Can it hear the audio playing? If so, are you in a venue's location that has a license? If not, they then use that information for enforcement of licensing. Pretty sure everyone that downloaded the app never specifically agreed to be an enforcement agent, But again, because people just agree to those location, those microphone requests, they had access to that data, and when caught, obviously serious fines for that data breach there as well. Moving on from that, if we have a look at phishing again, we've got a little demo here of what I like to call phishing as a service. So this shows you just how easy it is to target people now. We're on here on a nice little website we can go to, and it's got a bunch of phishing websites built out already. So you've got some great templates here. And what we can do with this, we can pick a template that suits the person that we're targeting, pop in a few details about them, and then we can start to target them. And that's what we're seeing more of. It's no longer general attacks. Attackers are sitting down, they're going through LinkedIn, they're looking at companies, and they're choosing targets based on their job title, based on the access they might have. And once they have some basic information you can find off of Google, you'll see we can send them across a text message with a link. Maybe it's a colleague sending through an updated spreadsheet. They'll go on, enter your details, and it looks just like any other site you would be signing into legitimately. And here, once we've done the username and password, this phishing site's also set up to capture 2FA codes as well. So even if you think you're being really secure with that 2FA code, these phishing sites that you can buy for pennies now on the internet can capture those credentials as well. So if you're an attacker and you've targeted someone specifically, you'll be sitting waiting for them to fall for this. You've got all the details you need, and that's now someone into potentially top secret information in a company because they've got your Dropbox credentials. And we need to think about end user behavior here as well. So you'll see obviously the person signed into Dropbox didn't get to their files. Most users won't necessarily interpret that as a threat or something going wrong. They'll look at that and they'll think, oh, the website's just being funny, it's not working. They'll reload it themselves, get logged in, and consciously they'll never be aware that they've just fallen victim to an attack, and someone now has access to all of their files. So that's why we're seeing phishing becoming the #1 threat, because it's one of the easiest to deploy, and it's one of the most fruitful attacks as well. People aren't interested in necessarily sending out some of the data encryption attacks or pushing out malware. They're interested in getting your credentials, because once they have the keys to the kingdom, they can get access to anything they need. Moving on from phishing and just looking again at some of the Mac malware. So obviously we discussed earlier that only 1/3 of Mac malware is known at the moment. The other 2/3 are known authors, or it's 0 days, so it's unknown. And that malware is becoming more and more sophisticated. One of the major attacks recently was Slayer malware, and that was an adware designed not necessarily to do anything overly malicious on the Mac. All it did was provide some advertising services, redirected some advert URLs. So from the end user's perspective, it's not a major issue, it's just redirecting some ad revenue. But what we saw, the execution of the attack was almost perfect. It slipped through every built-in defense mechanism for a Mac. And we believe that the end goal of that attack wasn't necessarily to deliver sophisticated adware, it was to test and improve intrusion methods as well. So we fully expect to see more malware coming that leverages some of the learnings from Slayer, but has much more malicious intent as well. So obviously we've got all these threats, we've got mobile device workers on the move, we've got all the different types of malware, phishing. What can we do about it? And most importantly, how can you realistically assess appropriate solutions for some of these threats as well? We like to think when you're looking at solutions, there's 3 major concerns. Firstly is the apps required. So when you're looking at your end users and you're looking at your business, you have to consider what apps do your end users actually use, and how many of those do they really need to use on a mobile device. So should we open up the entire corporate estate to a mobile device, or should we be a little bit more specific and get people only using critical tools on their mobile device, just to make it a little bit more secure? We also need to think about, when we're looking at the solutions, if there's specific apps they have to use on their mobile devices, Are they hardware or are they OS specific as well when we're then looking at some of the solutions available? There's also compliance. So again, we spoke about a lot of bring your own device policies now. Again, a show of hands, how many people here have a bring your own device policy at work? Yeah, probably quite a few again. So when we're looking at that, how do we balance this security and privacy? So, you know, we want to be able to make sure that we've got visibility on an end user's own device to a level that we can appropriately secure that device. But again, we don't want to make employees feel like we're spying on them. So we don't need access to everything. We don't need to see their personal photos. We don't need to see their personal browsing history. And we can put a lot of employees off of securing devices if we start to ask for that access. One of the biggest challenges a lot of our clients face when they start to look at bring your own device policies and they look at securing those devices as well is pushback from employees saying, well, wait a minute, if you're not going to provide me with a device, why should I give you full access to everything that's on there? So we need to be able to reassure them that the solutions we've got, again, secure those devices, but don't intrude in their own personal data and their personal devices as well. Finally, it's user impact as well. So how much hassle are we going to create for our end users? People know that we need to be secure, that we need to try and do what we can for security, but at what point does it become too intrusive and have too much impact on not only your onboarding, but your offboarding experience as well? So when a user leaves the organization, is it realistic for us to ask them to fully wipe a personal device just to make sure there's no trace of data? It's not really appropriate. So that's again why when we're thinking about solutions, we need that segregation between personal data and company data so that as IT or as business leaders, we can be guaranteed that we've removed that data, again, without having a major impact on some of the end users. So if we have a look, some of the key takeaways from this. Firstly, your users are remote. Build your solutions around this. Don't assume that they're sitting behind a desk on a single device you're providing. That doesn't work anymore. Nextly, new devices, and especially mobile ones, bring new threat vectors. So adapt to these. Make sure that the solutions you're looking at appropriately cover the threats that your end users will actually face. Nextly, you've got your apps posing more risk than ever. Make sure that you're using these solutions to restrict some of that access. We believe, honestly, that the next big attack we're going to see is going to be based on app access, and that's something that we really need to start protecting for now to make sure that we don't fall victim to that when it comes. And finally, remember that the weakest link is everyone out here. It's you, it's the end user. It's our behavior, it's our actions that are ultimately going to compromise a device. So how do we make sure that we don't only secure against these threats, but we also educate and inform as well? So thank you very much for your time. If you've got any questions, we'll be down on stand, so please pop along and grab one of our cable carries as well. Thank you.
I was fascinated with the story you gave about the football, accessing the microphones of fans to be able to determine if someone was actually watching a game that hadn't been licensed properly in the bar. There's all kinds of stuff going on there that I find quite interesting. You've obviously got the microphone access. That's the part that's perhaps a little bit differentiated. But linking it to geospatial data, geolocation data, to figure out where people are, linking it to the data around the premises they're in, and linking it to the licenses that sit around the screening of the games. So that, if it was applied sensibly, could very much help the insurance industry with things like flood risk. So if you know the building and you can link it to flood risk data, you can start to estimate for the insurance industry the degree of flood risk. I mean, I can see if they'd turned their mind to giving that as a solution to the insurance industry, they probably would have made a lot more money. Anyway, what a shame. So, Daniel from Weaver, it's got a very grand title. I'm not going to try and replicate it, but he's going to talk to us about embedded finance. Daniel, thank you.
Thank you. Morning, everyone. Hopefully you can all hear me okay. As Chris just kindly introduced you, my name's Daniel Green. I'm the Chief Commercial Officer at Weaver. probably should be a little bit humble to begin with and ask, has anyone here heard of Weaver? And don't worry, I'm going to be absolutely fine. I won't be offended if anyone says no. A smattering of hands, fantastic. The next question is, has anyone heard of embedded finance? Slightly bigger smattering of hands, fantastic. Okay, so maybe I'm going to quickly introduce Weaver, then I'm going to talk about embedded finance, give it a little bit more detail, a little bit more colour. So Weaver is one of the leading embedded finance providers, not just in the UK, but in Europe. We came out of beta 2 years ago. At that point, we had no customers, we had we had less than 10 employees. That was when I joined. In the last 2 years, we've raised over $55 million. We're now working with over 50 innovators on our platform, helping them provide embedded finance, which we're going to talk about shortly. And we're now over 100 employees. So we've had a huge growth curve. We're processing hundreds of millions of dollars a year. And we're enabling our innovators to bring embedded finance to their customers. So let's talk a little bit about what embedded finance is. When I say embedded finance, what it is that I mean. In the simplest sense, it's providing financial services in a non-financial setting. And the big story here is the change in the way in which we are going to, as everyone in this room, consume financial services. And this isn't a change that's going to happen, it's a change that already is happening. Again, by a show of hands, who in the room has used Uber, Amazon, or Klarna? I wonder if there's anyone who's not putting their hands up. Right, so all of these are providing embedded financial services of different types. With Uber, it's a payment inside of travel. With Amazon, it's a payment inside of retail, but crucially with no friction. You're not putting your card details in, you're not having to open your wallet, you're literally just able to pay with a click. And with Klarna, what you're actually doing is you're getting to the point of consumption and you're thinking, I'm going to pay with my credit card, my debit card or whatever, but you're provided the option to borrow money at that point in time. So it's consumption of financial services at the point of need. Now, everything I've just described is a retail experience for a consumer. Where Weaver comes in is providing those same services in the B2B space. We can do the consumer space, but the mass adoption that we've already seen in this kind of idea in the consumer space is going to come and take over every B2B software experience. And the reason it's going to is really simple. It's a fundamentally better business model. It's a fundamentally better product if you embed financial services inside of the software that you're providing. You make more money, and everyone is going to enjoy that, but you literally double the revenue that you make per customer. You reduce the attrition. It's a fun fact that you're more likely in the UK, I won't speak for globally, but you're more likely in the UK to leave your wife or your husband than you are to leave your bank, right? Not a fun fact, perhaps, but a true fact nonetheless. So banking people inside of your software reduces the attrition. It makes it harder for them to leave. It creates a stickier relationship. And you've done all of this with no increase in marketing. So you're making more money, your customers are staying with you for longer because you're giving them a better service. Again, think about the options that I already gave you in terms of Amazon and Uber. Who would prefer to go back and have to call a taxi every single time they want to move? Does anyone here, ignoring the politics, let's just talk about the user experience. Who would like to go back and always have to ring up a taxi firm rather than use Uber? No hands this time, right? So it's the same principle. Think about your accountancy software. Think about your CRM, your project management tool. At the end of those customer experiences, you have to make a payment, which means you have to leave the software that you're in. You then have to open your banking information and make the payment. And that's if you're lucky and you're a small business. The larger you are, you have to get your PO. You have to send it to the finance department. Then you have to send the contract to show that the payment is due at this time. All of that should be done inside of the software. And this is where Weaver comes in. Now, I'm going to tell a little bit of story. I'm going to borrow it. We didn't work with Shopify, I'll be honest, right? But everyone here in this room is aware of Shopify. Okay, so they were founded in 2006, and you're all aware of them because they build great website experiences for SMEs and moving into enterprise. Between 2006 and 2013, they were only selling subscription software to run their websites. They grew to about a $50 million ARR in 2013. I'd be happy with a $50 million ARR. I'm sure everyone in this room would be happy with a $50 million annual recurring revenue. But in 2013, they started offering financial services. Listing some of them here. one-click checkout, like we just discussed with Amazon, buy now, pay later, the Klarna experience, business lending, and B2B payments. Now, they're not offering it to consumers. They are providing it to the businesses buying their software to offer to consumers. So it's a B to B to C play. And Shopify, this enabled them to go from a $50 million ARR to $4.2 billion that they made last year in the next 7 years. And as well as absolutely hyper fueling their growth, you can now see that they make almost 2.5 times as much from the financial services that they offer as they do from the subscription. And it's growing far faster. So it makes more money, it helps you keep your customers, it's a better product experience, and it helps you grow. Is anyone not enjoying this so far? Now, what Weaver does is we created a tech stack to be able to do all of this. So we have created all of the things that you need to be able to to provide these financial services to your businesses. And we've done it in 3 different verticals. Supplier finance is very much the B2B space. Employee finance is that B2B to E space. And then worker finance is very much the gig economy space, the kind of future of work type of idea, where you have marketplaces to connect freelancers to people that want to do jobs. We've created what we call financial plugins. So I've been talking about embedded finance so far. Embedded finance is banking as a service 2.0. Financial plugins is our extension of embedded finance. We're making embedded finance even easier because we've built financial plugins so that you can go from, hi, my name's Daniel, to sign contract and issuing financial instruments in 5 weeks. And that just isn't possible with any other provider in the industry. And we do it while allowing our businesses, our innovators, who again are providing their financial services to their customers, to maintain complete control. They not only have the full branding, and you don't see powered by Weaver on any of the screens. The cards that we issue, Google Pay and Apple Pay, aren't Weaver cards. They're cards in the name of our innovators. Their bank accounts branded as our innovators. And we're able to do this because we have, fundamentally, our tech stack is a compliance layer. That's what it is. We encode compliance. And for anyone that is familiar with banking as a service and embedded finance, the compliance part is the most difficult part of the whole arrangement. And not only have we brought all of the vendors required to maintain compliance, but we've built the tech stack to encode compliance. And we do it while allowing our innovators to maintain the fantastic customer experience that they're aiming for. And this is really the difference of plug and play financial services, what we call the financial plugins, compared to embedded finance, compared to banking as a service. It's the amount of money that you have to deploy to get this up and running. And for the record, we've got on the figures of 350,000, we've got on figures of 9 to 12 months. I've spoken to plenty of businesses that have taken longer than do that, and I can assure you that Shopify's took a lot longer than 12 months to create their full capabilities. And you're talking millions and millions of sunk dollars in order to get this up and running. What Weaver allows organizations to do, never trust a salesperson, right? Don't believe me if I tell you that you're going to double revenue, but you can get up there and start doing it yourself with a minimal amount of outlay and a minimum amount of time. And in today's resource-constrained world, I'm sure that everyone in this room has 15 different projects that they want to do, and you don't have developers and team members coming out of your ears in order to be able to help you do those. So we make it easier, faster, and less capital constraining. I'm going to give you a couple of examples of people that we're doing this now, right? Okay, so these are some real-world examples of our businesses that we're working with who have taken advantage of our capabilities to enable the innovation that they're providing. So Ben is a digital employee benefits provider. Some of you in the room may even use them. So when you want to give your team members in your businesses a great benefits package, 10 years ago when I used to work at big corporates, I got pension, I got healthcare. Yeah, that's it, right? I got pension, I got healthcare, right? And maybe that's the same as a lot of people in the room get now. But now you're able to get healthcare. You're able to get things like gym membership. You're able to get things like lunch vouchers. You're able to get money off on different insurances, etc., etc. And what Ben does is it creates this curated online portal where you can choose the solutions as the employee that my company has worked with Ben. I now get to choose my solutions. And in the background, Ben, via Weaver, pays for each of those pieces. It manages the subscriptions, it manages the payments, it enables all of that to happen seamlessly. What we also do is we provide them with a card so that they can buy lunch, they can do the little ancillary pieces, and it all rolls back in with complete reconciliation, zero fuss. Again, these guys got up and running with the sort of numbers that I mentioned to you earlier. They're now processing millions and millions of dollars a year. Monet, I was talking about gig economy earlier. So Monet provides financial services to the freelancer world, to the gig economy world, to the creator economy. Now, one of the problems about the creator economy is it can be, certainly when you're starting out, very lumpy. You do some work for a brand and then you get an invoice paid 60, 90 days later. If you're a young, aspiring content creator, that can be quite problematic for you to manage that cash flow. So what Monet does is it effectively buys the invoices ahead of time, gives you the money straight away, obviously it takes its cut for it, and then we provide the banking for them to be able to spend their money. We give them bank accounts, we give them cards, etc. Again, these guys got up and running very, very fast and got the cards out into market in a matter of weeks. And finally, one of the neatest solutions that I've seen so far is in the expense management and the kind of accountancy space. Who in this room uses a tool like SAP for expense management? Something like that. Keep your hands up if you love it. Right? No one loves the expense management systems that they have. You have your card, you have to take photos of receipts, you have to download it, put it on the system. Maybe you've lost the receipt. It's a problem. It's a pain in the backside. That's only the expense management part. On the accounts payable and the accounts receivable side, I go back to the point I was making at the beginning about you have an invoice to pay, where's your PO, etc. What Finway does is it puts all of that into what they call a finance operating system for small and medium businesses. So they manage the petty cash, they manage the travel expenses, they do both of those on card. And they also, in their finance operating system, they do cash flow and budgeting, and they allow for the release of payments against invoices via online wire transfers, SEPA in Europe, faster payments in the United Kingdom. Again, this is one of the ones that we're most proud of, that these guys were a startup. They were only a couple of people when we first started talking to them. They're now processing millions of dollars every single month. It's approaching tens if you look at everything that they're doing. They're a team of over 70 people and they've just raised their Series A. Right? So we're really empowering the innovation because these tools are going to eat the breakfast of the tools that are already out there because they are a better experience. These are the Ubers of the B2B world. And I said at the beginning it was about a change in distribution. The whole point about embedded finance, the whole point about banking as a service is it's a fundamental shift in the way that we as consumers, but also us as businesses, consume financial services. It's effectively, today, in 2022, it's like going back to the early 90s as e-commerce was just taking off. Yeah, you've got people saying, oh, but I want to touch my clothes before I see them. Oh, I want to smell my food before I buy it. 20 odd years later, what are the largest companies in the world? They're the companies that are enabling the online interactions that we all expect, that as people we've come to think of as normal. And embedded finance is very much that e-commerce revolution come again 20 plus years later. So the question is, where are we on the adoption curve? Well, everyone's familiar with the idea that adoption curve starts with innovators, and then it ends up with early adopters, then you end up with mass adoption and late adopters. So no industry so far is anywhere near mass adoption. You certainly have people comfortably in the strong early adopting stage. These are things like travels, OTAs, your kind of booking.coms, these sort of businesses, logistics, marketplaces, as I've already mentioned. That's fundamentally what Amazon is, but also the gig economy. So everyone in this sort of delivery sort of space, right? These all have financial services embedded into what they're doing, and they're able to create great customer experiences, but also drive fantastic revenues by doing it. Then you see, as I was talking with Finway, the kind of accounts payable, accounts receivable, accounting, and the HR benefit space. That's absolutely becoming not the norm, but it's the fastest growing companies in those areas are embedded financial services inside of their solutions. And we're just starting to see it in things like real estate, healthcare, the sort of Airbnb, if you will, in the kind of real estate type world. Those guys embed finance inside of what they're doing. They do things like the expense management of properties. They do a lot of the rental payments automatically inside for their property owners. And then eventually we'll have mass adoption. So the question for anyone when they're thinking about embedded finance and whether or not it's right for them and for their business is basically, which one of these businesses do you want to build? Thanks. How we doing for fun?
I actually think you've brought us so much back on track. We might allow an audience question if there is one. Is there an audience question? Yeah, there's one here. Sorry, do you want to get microphone first? Here. Are you cool with this, by the way? Yeah, cool.
If we embed your product into one of the products what we have, do we need to go for FCA licensing for payments? What would happen there?
I'm so glad you asked that. The whole point of our model is we manage all of that. So the short answer is no. Right? All of the services provided are fully compliant. As you can imagine, I said our tech stack manages the whole compliance point. As it actually happens, we're not licensed today, truthfully. We have financial services behind us who are licensed, and what we've done is we've created that middleware to package it all up, everything from KYC, KYB, so know your customer, anti-money laundering, fraud transaction monitoring. We do all of that. And then effectively we white label it and send it on. As it happens, we're actually in the process of getting our own licenses at the same time, because it probably makes more sense as we start working with larger and larger organizations. They're going to want us to have a license, but it's actually, it's not a requirement. Because the technology creates the compliance for the financial services companies that sit behind us. And then we white label it and allow you to make it branded and look like you, but the financial service is actually provided by a bank behind everything.
Great. FCA regulation in a box, like it.
FCA regulation in a box, I'll put
Okay,
that on a t-shirt.
Thank you. Just interestingly, 15 years ago in Denmark, they moved to paperless receipts. And they estimated, I don't know what the exact number was, but some massive, and it was done not from the point of view of any form of embedded finance or any other reason. It was to manage the environmental impact of printing out all that paper. So if you think about the printing cost and the environmental damage of all those little printers that print out all that paper, it's enormous. And they estimated, well, they had some horrendous number they came up with. One of the side benefits of what you do is reducing the environmental impact of receipts, so worthy.
Yeah, thank you. I've actually got to leave, but if anyone wants to come and find me on LinkedIn, please do. I've had a couple of great conversations with people here. I'd love to talk with how embedded finance can help your businesses. All right, thanks everyone.
Thank you. Thanks. Sit down. Okay, we've got any scale-ups in the room? Got any scale-ups? I'm one. Okay, so Tom from EY. When I saw you from EY, the first thing I was going to do was look at the screen, but Julian assured me you were here physically, so thank you. You're going to talk to us about the journey of scale-ups. Thank you.
Brilliant, thanks Chris. And yeah, brilliant programming there to follow those couple of fabulous technology talks with an accountant. That hopefully you'll kind of bear with me, because I think there's hopefully some kind of relevant perspectives here on the scaling story, which I think is an interesting one. So look, thanks for the opportunity to speak at this amazing event. Haven't had the opportunity to speak at a Fintech North event before, but by way of intro, Tom Bull from EY. Been working on the Fintech sector since about 2015 now. Spend my time mainly working with Fintech, supporting on the growth and scaling agenda. Lots of time with investors, lots of time with working with the government on ecosystem studies. In 2015 and 2019, worked on the Khalifa Review. And therefore been very heavily kind of involved in the sector. And that means I've spent a lot of my time, and particularly recently, really focused on the kind of rapid scaling journeys we're seeing from many firms in the sector. And it's really in that context that we released the publication I'm going to talk to you guys today about the Fintech Scale-Up Handbook. And really at the heart of our thinking on fintech, as we've said on this slide, is we really believe that fintech's so core to the future of financial services. Financial services that are only going to get more embedded, as we've just heard, faster, smarter, and fintechs are really at the leading edge of many of those kind of product and proposition innovations. And really the team at EY are responding by developing our proposition to kind of marry up to that market. And let me briefly just move on to talk about the kind of topic of scaling, and what do we really mean by scaling. And clearly there isn't really a concrete definition of a fintech scale-up, but really in our fintech scale-up handbook, we focus on firms kind of broadly in the kind of Series B and beyond category, firms that kind of move beyond that point of finding product market fit. Often, you see firms kind of passing the 100-person or so mark in terms of team size, and kind of generating year after year of kind of revenue growth. And we've seen that that comes around very quickly for many firms. And so even with some of the kind of current headwinds, we've heard a little bit about, I think even if you're an earlier stage fintech firm, it's really worth kind of planning ahead to the scaling stage, because it comes around quicker than many people imagine. And we've really seen that life in scale-up mode brings, a heap of pressures that we've kind of tried to characterize on this slide. And managing business complexity, we've seen for founders we work with comes, a real focus. There are real kind of competing priorities across product, across geography, across client segment. So businesses at this stage have a kind of real new multi-dimensionality. In fintech, that diversification often, triggers regulatory complexity as well. The drive into new geographies often takes the founder away from the business because one of the founding team wants to go and kind of crack that important new market. New products often take the business outside of its kind of heritage experience. It brings the operating model into focus. How to build consistency in the operating model while also kind of recognizing local market requirements. Increasing volumes, start to put pressure on the tech, on the operating model, on the customer services infrastructure. And at the same time as all that's going on, you've got kind of new investors joining the capital table with new demands, asking for kind of more regular reporting, real kind of granularity in the financials, either honing in on unit economics or, kind of really grasping the story around kind of profitability and the overall financial picture. The board starts to grow, more responsibilities are delegated away from the founder. So often, I kind of think of often we do find the poor old founder kind of sitting in the middle of this slide, kind of, between these twin sets of pressures, between the business complexity and the demands of investors. Some of them even admit to feeling a little bit frazzled by all of this. So we kind of really feel, we're seeing that play out more and more with our clients. It feels like, therefore, it is a generalization, but it feels like the sector's moving into scale-up mode more materially. Clearly the biggest and most successful fintechs, we do see now playing across multiple markets, really confirming what's possible for kind of fintech scale-ups to navigate those barriers of growth. But we think there's an awful lot more work to do. As the sector moves more fully into scale-up mode, we see clients needing to kind of shift their focus and priorities onto a whole bunch of new areas. So really, in that context, we've released this new handbook, the Fintech Scale-Up Handbook. I've put a QR code up there, so if you want to kind of have a look through the handbook as I go through the rest of the presentation, feel free to take a look. The QR code actually takes you to an article that kind of summarizes the handbook, and if you want to see the actual document, you just need to scroll down a bit and go through the button that says register. Obviously, there's a kind of an opt-out button if you don't want to get our kind of fintech updates and things like that. So, and if that doesn't work, feel free to Google EY Fintech Scale Up, and you'll get to the same result. So look, let me just give you a bit of an overview of the chapters we've put in the handbook. The first one is on talent. So when we've run the Fintech the Fintech census over a number of years, we've consistently seen access to skills and talent come out as the number one issue impacting fintech. So we thought it was a good place to start. And in the handbook, we've covered different kinds of incentive schemes we've seen from EMIs through to growth shares, through to CSOPs, through to RSUs. We kind of talk through those different kind of mechanisms that we see as really critical to attracting top talent in a market that has a lot of competition around compensation for top talent. And we've even seen some of the bigger fintechs, build kind of, full-time head of equity reward type roles, as it becomes a kind of ongoing business focus. So lots of detail on that on there. But compensation is clearly, only part of the story for kind of the people proposition of a scale-up business. So we've also talked in the handbook about, excuse me, the sort of employee value proposition, or EVP. And we've set out some, a simple version of an EVP, and we've seen some pretty good ones of these in the fintech sector. So really wrapping in training, development, culture, etc., into kind of building a really attractive employee environment. So we cover lots of other stuff under the talent chapter. Look at different kind of employee and worker models in light of increasingly remote workforce. The international talent dimension, and particularly the scale-up visa being highly relevant to fintechs. We've seen a lot of very generous kind of work anywhere policies in the fintech sector, which we've spent a bit of time with fintech clients recently, kind of working back through those and making sure they are as compliant as they need to be with kind of global tax regulations. Lots of important stuff there. Next up, we cover risk and regulation, as you'd expect, an increasing array of regulations impacting fintechs, and also, frankly, increasing scrutiny as firms reach the scale-up stage. So what have we done in here? We've talked quite a bit about authorizations. We continue to see a strong scrutiny on authorizations, and we know the FCA are resource constrained. So we talk about the need to really double down on quality of kind of license applications, and they need to be kind of, of higher quality than ever, we think, to position the business really well. But we do a real deep dive in the handbook on the topic of consumer duty, because we think that's, frankly, one of the most important kind of regulatory developments of the last decade or so. It really kind of formalises customer centricity. It's got pretty extensive reach, probably beyond those firms who are directly impacting customers. It's kind of highly outcome-based. There's kind of an attestation requirement in there. So we see that as having all the ingredients of, something that really should be at the top of firms' agenda. And lastly, in this chapter, we get into quite a bit of depth on the risk management framework. So we've set out a couple of examples in there, a kind of an example of a non-financial risk framework, of a financial crime risk management framework. And we've spent a lot of time recently actually with fintechs really looking at the topic of optionality in risk management, and we see fintechs facing M&A opportunities, new market expansion opportunities, a whole range of partnerships, opportunity to license the tech. And we really think it's just not possible to manage that with a really kind of skinny risk management function. Firms really need to gear up to manage that level of optionality and give some, gives a real kind of commercial case for investing in the risk function. So last one on this page, technology and operations, clearly, tends to be a really strong one for kind of fintechs. We do see some fintechs during scale-up go through kind of replatforming of their tech, but more commonly we see firms doing kind of more incremental renovation and modernization of the technology estate. We spend a lot of time with fintechs on kind of technology controls, as I guess you'd expect as auditors, and we see a real challenge actually for many fintechs with their own in-house built systems, building the level of technology control that's desirable. You end up with a small developer team who has pretty unrestricted access to the production environment. Use of some kind of unsecure open source, code in the early days that ends up being a bit of a pain to replace. Struggling to access, do access control management across a really rapidly growing kind of client and user kind of environment. So none of that's insurmountable. A real crunch often comes when firms are called on to do kind of SOC reporting. So talk a bit about that. And really well worth, kind of investing in that support for the technology function to get better control on the business, while also enabling it to really move at pace. So over the page, the fourth chapter we cover is customer. So we look at the kind of the structure and processes we see fintech firms building to build kind of real customer centricity. Often with clients we work with, the founder is just the biggest champion and the biggest kind of advocate of the customer. But we think, real structure and work is required to properly embed that throughout the business over time. So a lot to think about, alignment of data and technology to really deliver on the kind of contextualized, real-time, personalized experiences, which is where we often see the bar kind of going to in the fintech market. And we've put quite a bit of, so we put some content in there around, some of the methodologies, jobs to be done, building customer-centric culture, etc. And I'd just say as well, on this chapter, we cover in quite some depth the kind of the marketing machine, just because we see marketing is such a very significant kind of spend for many of our fintech clients. So really aligning marketing around customer buying behavior, putting good metrics around marketing return of investment. And we got some really good input on this one actually from a lady called Deborah Womack, who's a senior marketing director at Ralph Lauren and at Sony, so got some of her insights. So there's quite a heavy kind of marketing element in the work we cover in here on customer. And clearly I'm an accountant, so we've got to cover finance as part of the handbook as well. We see so many of our fintech clients seem to be looking at the minute for, people kind of describe this, I'm looking for the kind of the perfect CFO. And it's someone who, they're going to absolutely love setting up the chart of accounts in Sage or Oracle. They absolutely love running payroll, but they've also got this amazing kind of strategic shareholder vision and understanding of the kind of big growth drivers and metrics that are going to drive shareholder value. And clearly those kind of individuals do exist, but I think for many fintech firms, there's a need to think of finance and the skill set evolving over time, and to put some real planning and thought into that kind of evolving story is an important one. At the scale-up stage, we often find, a big revisiting of the finance technology estate, moving from those kind of early stage cloud-based accounting platforms onto something more mature as the business goes, multi-product, multi-geography, multi-currency. And we've seen some really good big plays by the big players, so firms like SAP with their Grow program, Oracle with the NetSuite platform, a popular choice amongst fintech. So we kind of explore a bit of the technology space in the handbook as well. And lastly, of course, tax is one that often can trip founders up. You see founders a little bit reluctant to seek tax advice for one reason or another, but it tends to be very worthwhile just to make sure that themselves and their teams are well set up to kind of stay compliant. And the last chapter in there, kind of IPO and exit. So, in our view, best approached as a kind of a process and a journey. We spelled out a kind of typical timeline for thinking about IPO in the handbook, and it starts 12, 24 months before businesses are looking to really IPO. Lots of our conversations at the minute, we were talking to fintechs a lot about IPO in 2023. Often that's now kind of turning to more of a conversation around 2024. And fintechs we speak to were kind of very encouraged by, work in the Hill review, the dual class share structures, the reduction in the free float, etc. So, a sort of cautious excitement around a kind of medium or slightly longer term path to IPO. So look, I hope that gives you a bit of a flavour for what's in the handbook. A bit short of time. Therefore, if you weren't persuaded earlier and you want to take a look, do scan the QR code. There's kind of my contact details on there as well. More than happy to, sadly not in the metaverse, but you can send me an email and I'll pick that up and get back to you. So thanks very much for your time today, and I hope you'll take a look at the handbook because there's a heap of good stuff in there.
Thank you, Tom. Thank you. So that's a great distillation of everything that you will go through when you've gone past the initial sort of frothiness of your early days and scaling up. What you'll find is that if you've got a good VC, they are hitting you with every single one of these all of the time. The constant pressure to find a good CFO, good head of product. My two seminal hires were head of product and CFO. And my best definition of what a good CFO does in a scale up is help you find extra money from hidden places, like taxation, like cash flow management. That's what they do really, really well. So they tend to be extremely good at that in a startup environment. And then once they've done it once, they are eminently placeable in any fintech thereafter or any startup thereafter. So yes, thank you for that. That's great. I mean, that if you've got a good VC, they are going to make sure you stick to that rule set. No doubt about it. They're going to be very strict. Okay, we've got one final speaker just before, and it's going to be a couple of minutes only. Javier is going to talk to us, a professor here at the university. He's going to talk to us about engagement at the university just for a couple of minutes, and then we're going to have lunch. So over to you. Thank you.
Thank you. Yes, I will be, I promise, very, very brief. Good afternoon, everyone, and a very warm welcome to the University of Manchester. My name is Javier García Oliva. I'm a professor of law, but I'm also the Associate Dean for Business Engagement at the Faculty of Humanities. And thanks everyone here for being in such an exciting event. I'm truly sorry I won't be able to stay today, but I need to travel to London, but it's absolutely vital for us academics to be working with industry, with yourselves, in order to inform our research and our teaching. And we also want to support you, partners, with the real-world challenges that you face. Then I just wanted to convey this very important message of how essential it is for us to work with you and how excited and delighted we are to have you all here today. We have a brilliant business engagement team who is here to broker relationships between academics and the real world with a drop-in clinic, which is underneath this hall in committee room B, so that companies can come down and have a word with our team, and I strongly encourage you to do so if you are interested. And obviously I would like to also welcome you to the next session that is going to take place immediately after lunch, in which we're going to hear from Marcus Zachariadis about the new and extremely exciting Fintech Research Center. We're really proud of that here at the University of Manchester, and particularly in the Faculty of Humanities where the center sits. And we'll have a panel discussion on research and innovation, which is very important for us, academics, but also for industry, including Marcus himself, Nicola Anderson from Fintech Scotland, Stephen Browning from UKRI, and our dear Rachel Kenyon who is our business engagement manager. Well, that's all from me. I think it's probably been more than 2 minutes, but I just would like to obviously welcome you to this university, and I very much hope you will have a very productive and rewarding conference. Thank you very much.
Thank you. Lunch. Those who are hungry, please head for the buffet, and we'll see you in about 45 minutes. Thank you. To Hutch, who's on stage. Hutch has been with us now since day one, and as I said last night, you know, we've seen him change just as we changed. His music has always been good, but it's fantastic now, and his haircut is still just as bad as it was. Thank you, Hutch. Thank you very much, Hutch D. Come on. Okay, right, can we make our way to the seats, please, for the panel discussion we're going to have now, looking at partnership with academia. So, are we ready? We're going to sit down or we're going to carry on eating? I don't mind either way. Would the people at the back of the bus stop singing and come forward, please? I can see you. You're sitting on the stage next to Hutch. It's your team, Marcos. They're sitting at the back causing trouble. I can see them. They're just sitting there talking. They'll always behave. Okay. So, I think we'll kick off there. Right, I'm going to introduce now Marcos, who is the professor in charge of the new FinTech group here at the university. He's going to give, 10, 15 minutes conversation on the wonderful research they do here with the university, obviously emphasising just how many Tier 1 journal papers you've published recently. I know that was a bit of a conversation last night. Conversation killer, I might add, but that's another story. And then we're going to have a panel discussion, and some of the luminaries are sitting here in front of me to talk about funding options, working with government organisations, or quasi-government organisations, I should say, like Innovate UK. Rachel's going to be up on stage as well. So, if we're ready, Marcos, over to you. Looking forward to hearing.
Thank you, Chris. Welcome, everybody. As Chris said, my name is Marcos Zachariades. I'm a professor here at the University of Manchester. Specifically, I hold the chair in financial technology at Alliance Manchester Business School. And yesterday, we launched our new centre in financial technology studies. And one of the reasons we actually called the Centre of Financial Technology Studies in terms of the Centre of Financial Technology is really to highlight the importance of research, you know, in this process of actually creating more knowledge and making an impact, and also connecting to education. So it's very much at the heart of our mission to create academic content and publish in these kind of high-tier kind of academic journals. You know, get the acknowledgement from academia, get acknowledgement from the research community, you know, that we develop robust you know, findings that can inform then policy, create an impact, also the decision making level industry, but also leverage that to educate the next generation of analysts, professionals, practitioners, regulators, policymakers, investors, entrepreneurs, etc., within the fintech space. Otherwise, it's all going to be an exercise which is kind of based on a textbook or some semi kind of industry knowledge that, you know, often you know, can be brought in from industry to university. So we really have research at the center of you know, of our endeavors, right? So part of our mission, you know, beyond obviously producing high quality interdisciplinary research at the university, is also to share that with industry, right? So that's very much at the heart of a center that we launched yesterday, and also to create an impact, you know, for the industry in terms of, you know, not just decision makers, to inform organizations at the firm level how they can leverage, you know, technology, you know, adopt and use and leverage technology for their own kind of efficiencies, internal efficiencies, processes, and business model innovation. But also, you know, at the industry level, how introduce ideas and novel ways through which financial technology can actually transform the entire architecture of the industry. What does it take, for example, one of the principal questions we have, cutting across many of the research processes we have, is what does it take to design new financial infrastructures, you know, from the governance, data, standards, the technology, community, and so on and so forth, right? And then at the economy level, also, what are the effects of this technology? I mean, we always talk about technology adoption and technology use, but we as academics want to understand further the process of how these adoption and use actually ends up creating benefits for consumers and productivity gains for the entire economy. And this has been something that I personally, but also other members of the center, have been doing research on ever since I did my PhD at the LSE, looking at the productivity of innovation within the financial services sector. Obviously, we leverage all of that to bring it into the class. It's teaching and educating new graduates, but also experienced people in the industry. We need to leverage our academic research. We need to provide this evidence and demonstrate how this is relevant, not just for the academic community, but also to shape the industry in itself through educating people and next generations of people who are reskilling and upskilling existing practitioners in the industry. And that's also what we do. So I'll present towards the end of the presentation a little bit what is our educational kind of strategy, what are the new programs we're developing at the different levels of education at the business school. And last but not least, collaborate, right? So one of the big themes of the center is to have these relationship engagement with practice. Academics by themselves are very good at closing the door, staying in a room, doing their own research, going to their own conferences, but that's not the key, right? In order to both educate and engage and create impact, we need to take this research out there, bring it into the attention of practitioners and try and collaborate with them, understand what are the key questions they have, industry has, we have as a financial services industry, bring it closer to academia and then open up this dialogue before we go forward and do further research, right? So we always have to be informed about the key issues that we need to investigate further. So this is what we've done. We have spoken about our research strategy, research approach in previous presentations. I think last year I kind of had a very similar slide to this one. But our approach to fintech research is multi-dimensional, right? Because fintech for us is a phenomenon, right? It's not a mainstream, academic, let's say, discipline. It's a phenomenon that we study, and that phenomenon can be studied from many different directions, with many different angles. And so, of course, there's a technology angle. You can study different technologies and how these different technologies with their own features and characteristics will affect the industry. But also you have to have that contextual knowledge of the different parts of the industry that you're talking about. You have to have very good understanding of the characteristics, specificities of, for example, payments and payment infrastructure, how payments work, the different kind of layers in the architecture and so on and so forth. Or lending or banking or insurance, wealth management, before you kind of start to even interrogate how technology can affect these businesses. And the other dimensions is also the part of the position within the architecture that you locate this technology, right? Because, for example, if you take different kinds of value chains in financial services, technology can play a role at the customer-facing kind of layer of the architecture, right? So speaking about more the user experience, but over the lower levels of the architecture, value chains, potentially, risk models or AI to identify fraud, or even, cloud computing in the context of core banking systems that banks potentially use and have as a basic kind of bedrock of their kind of architecture infrastructure. So not just about contextually kind of understanding the different parts of finance, but also how the value chains are formed. And we spend a lot of time specifically in the context of open finance. And again, I spoke about this last year, so I'm not going to repeat myself here either, but understanding what are the new value chains that technology actually results into, and how these value chains, how modular they are, how these value chains play into the value that they deliver to the end customers. And once you have good understanding and grasp of all these dimensions, then you can utilize existing academic research, concepts, theories, frameworks we have in science, in management studies, in economics, in computer science, in math, and so on and so forth, to interrogate all of that together, right? And so, for example, you can be studying from the economics point of view, which is something I've done quite a bit the last few years, the API, open API adoption within the banking sector, from the context, for example, of API aggregators, that particular kind of layer in the overall architecture. And so that's, our kind of approach to the center. Many of the studies, and it was very beautiful presentations yesterday, by the way. I encourage you to go online on the University of Manchester website at the business school and track down, everything is recorded there. So some amazing presentations by the entire team at the business school. A lot of us are using this framework to actually locate our contribution, not just academically, but also contribution in terms of, questions that we respond that industry has, right? And make a contribution impact to that place in financial services, which is, potentially more meaningful and more kind of actionable. Going forward, I'm only going to talk a little bit about my own research, and these are just some very recent publications. Chris, I know he's making fun of me of actually highlighting this, but I can highlight enough how important it is to not just, generally be part of a dialogue, but have the research and the evidence to support that. So a lot of the work that we do, both in terms of impact and education, comes from direct contributions in academia, and that peer-reviewed process, we should not underestimate it, right? So good education, good impact always comes from good research. So it's a mission for our entire team to try and get into academia, have these dialogues, get this legitimacy from top publications in journals that are very recognized by our peers globally, who have potentially no idea about fintech, but want to see how also these exercises that we do, in the context of fintech, progress our understanding of science, progress our understanding of management science, economics, social studies, and so on and so forth. So just briefly, some of the work that we've done. Of course, we start, typically from a working paper. In this very particular case, we did a study with a couple of other co-authors from different universities around the introduction of CBDCs. So we broke down, again, going back to the architecture of the entire kind of international payment systems infrastructure, and we saw how this new technology potentially, or implementation, or process innovation would bring about change in the context of international payments. What are these strategic decisions that CBDC designers, central banks, will need to take into account when they design their own CBDC infrastructure, right, at the national and international level? And then, interrogate that and see the different scenarios where we end up if we, have, for example, one nation adopting a CBDC, another that will not, and how that will affect, payments communications between the different corridors we have internationally, right? And the different kind of level of adoption of CBDC in different countries. That resulted in one publication in a not so much academic journal, this one actually, to be honest, the Journal of Payment Strategy and Systems, but still has a peer review process. It was peer reviewed by other academics before it's put out. Findings from that, and then we interrogate Nexus, which is not directly a CBDC solution, but it's a kind of messaging layer, new platform that Bank of International Settlements with other banks around the world are trying to pilot and put forward to interlink instant payment networks across many different countries. So again, useful insights from that into directly interrogating existing or proposed solutions into financial services. Another paper that we published recently, again with some other top scholars in the literature of platforms. Not sure if you know a lot of the people here, but a paper published at California Management Review, so it's a proper academic journal, again peer-reviewed, ABS 3 as we say in academia. It's talking about the entry of big tech companies into heavily regulated sectors and has heavy implications about financial services too. So it's really important to understand the strategies, what kind of processes, and we call this process, by the way, decolonization, just to be a bit more provocative. What are the processes specifically that some of these big tech companies use to enter other industries? And this is really important. This is a very important question that I'm sure many of you know that just last month the FCA announced an official kind of investigation, into that topic, and we are, adding our own bit through this discussion, through rigorous academic research we do at this, on this topic. And by the way, we just got the news a couple of days ago. We received a grant, a small grant, but still quite important for us, to organize an academic conference, a workshop, on this particular topic. So please stay tuned and follow us online as well, so you can be up to date and be able to attend some of these workshops that we do also on very interesting topics. And last but not least, a couple more papers that were just published in the last, actually the last 12 months or so. I'm not sure why it says 24, but on paper co-author with one of our PDRAs, the postdoctoral research scientists that we have, associates that we have at the center, about the impact of fintech on the future of banking. Again, there we interrogate, we try and understand, the fintech revolution and the different dynamics in terms of competition, that regulation, data, other kind of introduction of different innovations would bring into the banking sector. We take a lot of economic and fin performance, for example, financial data across Europe, and trying to understand the transition, whether there's evidence in the data to suggest how competition, for example, dynamics develop, and whether banks would be threatened by this. And last but not least, again, a paper very close to my heart, just published or accepted for publication in probably the top academic journal in terms of the economics of innovation, which is research policy. This is what we call a four-star kind of a journal in academia, on, again, the importance of API standards in terms of transforming the banking sector in the context of open finance, right? So we talk about really the importance of standards and what are some of the bottlenecks that we see when people are trying to adopt these new technologies. So it's important to track adoption, but also trying to understand what are the bottlenecks potentially that we may be getting by the adoption of this technology as well. So these are a result of other working papers that were put forward, obviously, earlier. The last 2-3 years, again, funded by industry directly, and a lot of these insights. This is actually a qualitative research method paper, so we interviewed about 100 people across the entire continent in Europe to gain these insights, and rigorously kind of had to code our way into the data to tease out some of the themes, right, that we highlight in the paper. Again, this recently published paper. So these are some of the examples, and this is, I'll dare to say, maybe about 10% of the research that we do at the center, right? Collectively as a group, we have a lot more stuff happening. And here are some of the topics that we really focus on our attention at the center. So we have open finance and APIs, major topic for us. It's a project that we started, me personally started since 2016, even before PSD2 regulation comes into effect and open banking regulation comes into effect in the UK. Again, interrogating the impact of API adoption on business models at the firm level, at the industry level, competition, in market architecture, in the economy level, productivity from innovation. So, all these kind of rigorous breakdown. Regulatory sandboxes, again, we've already kind of published a conference paper on it. We're about to invest more to get more insights on this topic. Decentralized finance, blockchain and crypto. Please look at online the presentations yesterday. We had amazing presentations by some faculty. Asim, in particular, go and find him. He talks a lot about these topics, again, breaking down the value chains in the crypto space, fintechs for ESG, AI and finance, and all of that leveraging theories and frameworks we have in science, right? In economics, in management science, in business studies, and so in platform theory and so on and so forth. This is the team. I have to acknowledge all of them. Again, they did a beautiful work yesterday. We have, we're about 9 to 10 people right now. So it's more than that. This is just a core team that almost 100% kind of devote their time in terms of fintech, with perhaps a couple of exceptions. But we have regular activities. We have our meetups, meeting up to discuss our papers. We have seminar series. Please follow us online. Some of them are open and accessible to you as well. We'll be launching, a fellowship and visiting kind of a scheme for researchers to engage with the international community. We are engaging with, across multidisciplinary, field across the entire university to really tap into these other disciplines, so we can really engage with our multidisciplinary approach and so on and so forth. But we're going to be expanding further. So I'm not going to make any announcements now, but there is plans to develop the team and expand. In terms of, am I okay with time? I know Rachel was keen to go a bit over time as well, but Rachel, tell me if I should shut up or not. I'll just, yeah, it's good. Engaging collaborations, have to mention a strategic academic partnership with Innovate Finance that really puts us at the heart of these discussions. Through that, I'm also part of the UK Fintech Strategy Group. Again, kind of closed group kind of sessions we have to understand what are the key challenges in the sector. We recently launched with another 13 universities, the UK Fintech Academic Network. Please follow us online. Go on LinkedIn and see these topics because, and these engagements, because through these, we're going to use these as a platform to engage further and bring a lot of the academic work, not just from the University of Manchester, but in the UK, to your attention, right? And we want you to be part of these discussions. And of course, to mention Fintech North, collaboration, and so on and so forth, really important to us. Engagement with industry. I don't have time to do a lot of that. Of course, we were featured in the Khalifa Review as doing a lot of work on education and industry engagement. I've been part of the World Economic Forum, sitting on the Council of Financial and Monetary Systems, authoring a lot of the work and influencing through engagement other policymakers and practitioners. Part of a lot of conferences and events and seminars and engagements, across many different players in the UK and international as well. Obviously, this is what we have to do. I'm just going to close with saying a couple of things about our education agenda, and that's going to be about me. Obviously, a big part of the center will also be education. We do that by developing courses at many different levels of education. We have to educate our undergraduates for a lot of the stuff that we study and do research on. So develop courses at the undergraduate level. Our MSCs, again, my You're a Brilliant Job, and electives around financial data analytics and AM finance. Our MBAs, right? We have a flagship kind of fintech program that really, blew the roof of other electives. We have about 120 students now taking the course and delivering internationally from Singapore, Dubai, and different campuses we have. And of course, our executive education. Part of the mission, again, from the Khalifa Review, is to reskill and upskill. It's not just about the new blood coming into the sector, but it's really about re-educating people. So we have these, future finance, we'll call it, but essentially it's about open finance strategies course that you can take online. And this is a bit of a marketing, so just go there and click and see more other information. Future plans will grow, push further education, continue to engage heavily with the industry, continue to having these discussions and engagement to seek funding from industry as we've done very successfully in the past, but also more intensely the last year or 2 years perhaps try and tap funding opportunities by UKRI and Innovate UK. So I'm really keen obviously to discuss that with you afterwards. So please come and find me if you want to engage, if you have ideas to do research on. Thank you very much.
Hello. Yeah, serves us right for giving the microphone to an academic, I guess. Just the last slide was marketing. That whole thing was marketing. So you've done so much in this space. Well done. I love the slide on papers as well. I mean, said everything it needed to say. Right, so Rachel. Rachel is going to chair a panel discussion on research and innovation in the fintech space. Joining her will be Stephen. Well, you've done as UKRI, but are you with okay. Innovate UK. So Stephen, is anything to do with any UK? I am ready now for Nicola to appear on screen. Nicola, there you go. Sorry,
Hi,
Nicola.
Master.
I can't hear you. Is your microphone on?
My microphone is on, yes.
Perfect. Yep. We can hear you now. Apologise for the delay. Blame the man in the corner. Thanks, Nicola. See you later on. Rachel, over to you.
Thanks, Chris. I made the mistake of saying to an academic colleague that you can take a little bit more than 10 minutes, it's okay. So my name's Rachel Kenyon. I've had a few plugs today, thanks Chris and my colleague Javier earlier. I am, as explained, part of the university's Business Engagement and Knowledge Exchange team. This banner here, that explains us. Some of you hopefully have popped down to the drop-in and met some of my colleagues who've explained what that is if you're interested in knowing some detail. But essentially, we are translators between academics and the world outside. We kind of act as the eyes and the ears of the university, going out and speaking to the business world. It's not just private sector, it is, we work with authorities and third sector as well. And we listen to what are the real world challenges that are out there, and we, like a highbrow still a black, sort of match those with our academic interests and see are there ways that we can work together to design research projects that will help address your business challenges or societal challenges through our research. And we can also make introductions to our academics for consultancy, shorter ways of working together. And there are programs like knowledge transfer partnerships that got mentioned by Chris earlier, where usually postdocs will come and work directly in your business and embed new knowledge. We're just here to advise on what route might work to solve the things that you're trying to do. So that's us, and if you want to know more, come find me or drop downstairs to meet some of my colleagues. So we're very excited to be joined by Stephen Browning, Challenge Director at Innovate UK, part of UKRI. He can tell us what that is in a minute, and I also want to acknowledge Nicola, who's been sat there patiently, Nicola Anderson, CEO of Fintech Scotland. Hello, Nicola.
Hi Rachel, hi everyone, it's great to be here.
While we're with you, Nicola, I'm going to ask you to introduce yourself.
Oh, thank you. I did promise, I hope Julian Wells is in the audience there, I did promise him that I'd give a big hello Manchester as I join here from Scotland. Thank you so much for having me. It's a real pleasure to join you this afternoon. And you'll have heard from Stephen Ingledew earlier on, our chair at Fintech Scotland, but I'm the Chief Exec at Fintech Scotland. I've been working here, driving and supporting the agenda for innovation in financial services and fintech opportunities in Scotland since 2018, initially on secondment from the Financial Conduct Authority, and then in this role as Chief Exec from the 1st of February 2021.
Thanks, Nicola. And as a university, we're really excited to have Stephen from UKRI join us, particularly from Innovate UK. As anyone in an academic institution knows full well what UKRI means, we talk a lot in acronyms, as everybody does, but particularly in academia. So Stephen, tell us about UKRI and then particularly about Innovate Finance. Innovate UK. I've seen Innovate Finance everywhere today.
It's all right. So UKRI stands for UK Research and Innovation. We are a public sector body under the Department of Business, Energy and Industrial Strategy. And our basic role is to be the custodians of the UK's research and innovation ecosystem. So we're comprised of 7 funding councils, research councils that fund academic research in various fields such as economic and social research, medical research, engineering and physical science. Research England that looks after the sort of frameworks of how research are put together, and then Innovate UK that is more the business-facing part of that. So Innovate UK funds business-led R&D, so projects within your organisations to develop services, technology, whatever it might be, as well as funding other parts of the innovation ecosystem, such as catapult centres or the knowledge transfer network or things like that.
Thanks. So here's what's going to happen. I've got a couple of specific questions, one each to Nicola and Stephen, that I'm going to ask them to get a bit more depth about what they've just said. And then I've got some more general questions that I will throw out to whoever chooses to answer. So hopefully I'll see you if you wave at that point, Nicola. So we're going to come to you, Nicola. Fintech Scotland's done a really good job at collaboration, at bringing different businesses together and businesses of different scales, and also bringing business together with authorities and with universities. So can you tell us about how Fintech Scotland has been able to do that, how collaboration has been effective to enable innovation and growth?
Sure, thank you. Thanks very much, Rachel. Can you hear me okay?
We can.
So Fintech Scotland is a cluster organisation, and we are here to develop and build that cluster. And that cluster recognises the value of contribution across industry, across the public sector, and across the academic sector. And we also look for contribution from the consumer groups and businesses that will utilise fintech innovation. So across those breadth of relationships, that allows us to think about priorities and opportunities for connection and innovation. And we think about it in three main themes. We think about it in terms of building community, so that we have that connection and community of shared values, shared interest, and shared opportunity. We think about it in terms of building impactful collaboration. So we know and understand the needs and the opportunities. We can see where there is benefit in making those connections, and they're impactful from a much earlier stage. And we also think about it in terms of that opportunity for inclusion. So that helps us to drive innovation, that helps us to drive our impact, and that helps us to drive the broader cluster as we see it. So with 200 and odd fintech entrepreneurs within the community, we know and understand their capability, their expertise. We know and understand the current needs and demands of the large financial services organizations, professional services institutions. We're able to make those connections and indeed to foster environments that will enable those connections to flourish, or perhaps allow us to think about other ways that we need to explore the solutions that are required. And that has a really important role for the universities and the academic community as we think about what are those future questions that we should be asking to allow us to shape the future of finance and to shape the future of fintech. I can pause there, Rachel, if that's helpful, but throughout the conversation, I will talk a little bit more about the research and innovation roadmap that we published in March this year that helped us to ask that broad question to industry: what should the future of finance look like? And through that, we have a really strong framework where we know and understand the demands and the aspirations from an industry perspective, and we're able to offer that insight into the academic community, who can then start to think about where do those pieces of expertise meet, and indeed where should we be challenging for different types of thinking from the industry. That's really important. So I'll definitely like to talk a little bit more about that, and really like to talk a little bit more about the work that we're doing with the University of Edinburgh, Glasgow and Strathclyde, as well as some others across the UK, as we foster entrepreneurship, as we foster opportunity for research, and as we drive outcomes for people and businesses, which is ultimately what we're here to do.
Okay, thanks. And that leads quite well into wanting to ask Stephen about how UKRI, and particularly Innovate UK, help bring businesses and academia together through their funding programs. So particularly, can you let us know about the plans and ambition around finance and fintech? And I'd also like to dig in a little bit to the current Innovation Accelerator funding call.
Sure. So, I don't think this is on. Yep. So, I look after a program in UKRI that is trying to support the development, particularly of digital technology, development and deployment, I should say, of digital technology in both the financial services and the professional services. And that program, we are trying to bring the industries, the sectors, up in their capability to engage with innovation, to adopt innovation. We're trying to do that in three key ways. One is through funding for R&D projects within professional and financial services. We just closed a call for that a couple of weeks ago, and there will be another call for that next year. So that's one area which is stimulating the development of technology for these sectors. Another area is there's a lot of data available within and across the sectors, but it's not always accessible either because it's held in silos or because it's in inappropriate forms. So then early next year, we're going to be running a program to convene people around that problem and fund some projects to try and address that problem to increase the access to data across these sectors. But then the third one, which is the one you particularly talked about, Rachel, is we've seen from our own activities over the last 4 years that there are some real barriers to the adoption of innovation within these sectors, whether they be cultural barriers, risk aversion, technology barriers, legacy systems, whatever it might be. Barriers to taking up innovation that, say, fintechs are developing. So we are currently running a call looking for what we're calling innovation adoption accelerators. Now, just as Innovate Finance and Innovate UK use common words, accelerator in our terms is not the same as an accelerator in industry. We're trying to have a practical interaction with businesses from academia to help them address those particularly human behavioral problems that stop the adoption of innovation. So we're running that call at the moment. It closes on December the 13th, and then from that we should have a couple of pilot activities within academia to engage directly with business. And I think, just to add, one of the important things that we see is that while the papers that you spoke about are really important for looking broadly across the sector, helping inform policy decisions, helping inform people like us on where we should be addressing things, it's more down on the ground activity between academia and businesses that we want to be supporting. So we're trying to make sure that it's practical solutions engaging more directly with businesses to develop.
So let's take the opportunity to plug the value of academia some more, and encourage you to maybe come and talk to us about how you get involved. To everybody, what's your view on how academia is shaping the sector through both its research and through teaching? When I mention teaching, I'm including in that CPD, so not just our undergraduate and immediate postgraduate activity. And then any particular good examples that anybody would like to mention. I'm going to go to Nicola so that I don't forget you.
Thank you. Thanks, Rachel. Yeah, I'm happy to contribute to that. Stephen talked about data there as he introduced some of the drivers and the actions that Innovate UK are taking forward. And I think that's really important. We have seen an acceleration in innovation in financial services, and I think we can connect that to a number of things. Technology advancements, of course, but we can also connect that to legislative changes that have started to open up that data question and that data accessibility for consumers. And we've also seen a significant consumer demand, consumer change in our behaviours, etc. So the academia and the world of research presents us with a significant opportunity to really think about data, how we can utilize data to drive the outcomes that we want to see, to develop the insights that will shape future policy and help us make informed decisions, and will help us think about the ethics. Oh, sorry, somebody, I think, was there a piano there?
We still got you, there was a little wobble.
Okay. That can help us think about the ethics as we consider the future of data-driven innovation. And that's certainly something that we're alert to and very thoughtful about here. So I think that world and that world of research and academia can really help us in that. And what we're trying to do here at Fintech Scotland, and with that research and innovation roadmap that I mentioned earlier, and that we worked on with Whitecap as a tool for the UK, it helps us to get that industry insight as to what's going to be really useful for them as they think about the ability to use data differently. And research and academia helps us to frame and shape those questions so that we can think about that adoption and that opportunity at a much earlier stage. I think then we've also touched, and Stephen again touched on, moving beyond tech and thinking about the capabilities in our social sciences, in human-centered design. Again, really thinking about the impact of technology as we shape the future of finance, and how end users like you, I, and other businesses will interact with that. And there's a real demand in industry to see opportunities for that to change. There's many conversations going on about the world of virtual reality, the world of the metaverse. And I mean, that's just a significant opportunity, I think, for us all, but we need to step our way through that and to help us think about what that might look like in the future. and then take us back now to this current cost of living crisis that we're seeing, and the difficulties that we're seeing for so many people. What can we learn from that so that we're devising the right products and services for the future? And in particular, I think there's a real opportunity that we need to consider as we think of the future of pensions, saving for longer life, and the relationship between health research, financial research, and other intersections. So there's so many opportunities that we need to just find better ways of connecting that demand to the fantastic insights that we can get through that collaboration with research and academia.
Thanks, Nicola.
Yeah, just to contribute a little bit, going back to the point that Stephen actually made about the contribution of academia and the research that we do, and this connection to what I call sometimes second level engagement, like down to the point, down to the ground, to identify particular problems of, potentially slowing down adoption, etc. And I think there's different kinds of research. So there's, and we have many different tools that are, in our disposal as researchers. But I mean, you can do a quantitative piece of work, obviously with high-level data, trying to identify trends of adoption, right? And we do have a lot. Like one of the papers of my PhD was exactly that, on creating models around the adoption of technology, particular payment systems, across, I don't know, like maybe 60 countries, let's say. One of the points was to identify network externalities and so on and so forth. But we also have tools in our disposal that are more qualitative of nature. And I think that's where, some of the academic work can actually make a difference, in that you need to investigate a lot of time, go out, do a lot of the interviews, do a lot of the observations, do a lot even of the ethnographic work, trying to understand how people respond to innovation or some kind of new technology that is about to be introduced, and even go down to the level understanding relevant regulation in that context, that you then kind of accumulate all this information. You can analyze it, with novel ways. We have coding and qualitative interviews, for example, to identify kind of themes that emerge from all this textual data, and then kind of theorize about these interactions, and then going back to some of the key issues around, the role of people in engaging with technology, or, some of the bottlenecks that we managed to identify. So there's a lot of work that an academic needs to put into that domain, and a lot of it is also about spending huge amounts of time that I've personally done across my career, and that's the key to also as a professor have an industry focus, to understand how financial services work, how some of these businesses work, how they are architected, how they are organized, what are the economic incentives in existing business models, even down to the point, what is the systems that they use, the infrastructures they use, the data architecture that they use. I mean, you mentioned silos. We had to understand, what are these silos? People talk about data silos in organizations. I mean, what are they, right? What are the systems that keep these data locked, etc.? And then trying to conceptualize, how a technology like, adopting a technology like open APIs potentially can transform and release these data, but also to the second degree, what are the opportunities from these data? So identify, incentives, identify new business models, identify engagements, and then visualize this new architecture that's being built, because of the adoption of these technologies. And once you do all of that, that kind of liberates you, as I said, then you can make to-the-point contributions, not only in science, in terms of technology adoption, because then you can have novel contribution in the academic discussion, but also down to, the actual field, right? How you can solve some of these issues, some of these bottlenecks. So we did a lot of work, for example, to identify the innovation bottlenecks in the overall kind of architecture of these new open finance emerging kind of value chains. And that's where the real contributions and the real answers come from. But sadly, I have to say, there's a lot of my colleagues, across academia, that they don't necessarily put all this time into understanding how things work before they go on and do the research. And that can be, partially a frustration that I think many people in the industry might have. Speaking to academics who can be kind of very abstract and very theoretical and very high level, but not to the point like, please tell me, how do I solve this particular problem, right? And I think, of course, this is, as I mentioned in the presentation, one of the core missions of the center is to have this dialogue, to spend this time understanding more of the technology, the context of regulation, that particular part of the industry, not just finance in general, but payments adoption or that particular kind of process of variable recurring payments that they're able to put forward and what answers that brings, in contrast to existing kind of guardrails we have, right? Where it's a kind of more mature system, for example, that we've been dealing with conflicts, etc. So all this time and so on and so forth. But so that as a key contribution, I guess.
And I think you're right in that there are different sorts of research. Okay, there's research that is sort of on industry, and then there's research that's with industry, right? And both are important because if you think about it, academics that are researching around industry, they have more knowledge about what's happening in multiple different organizations than pretty much anyone else except maybe the large consultancy firms, right? So if you can tap into that knowledge, it gives you a great advantage because you're not going to recruit people in that have been through 20 other organizations, or if you do, they're probably gone in 2 months anyway, right? Because that's how they get through 20 organizations. So both are important. My personal bias is trying to drive towards that. Let's get the practical interaction with industry to help drive that economic growth and societal impact that comes from the deployment of these technologies. And we've had a plug probably 3 times now for KTPs, so knowledge transfer partnerships. That's one practical way of having an academic come and work with an organization for a period of time, funded for the academic's time from UKRI. There are other ways, other examples I've seen. So within my own previous program, we had academics working with law firms in this case, doing design sprints of how AI could be worked into their business processes and what they would need to change in their business processes in order to adopt that. So there are ways of getting that knowledge out and really putting it in place.
Yeah. So I'm going to condense a couple of questions into one, since we're a little short on time. I was going to ask the panel about what are the barriers to industry-academic collaboration, but I'm going to go ahead and suggest, we probably know what those are, they're quite obvious. Some businesses it doesn't occur to them that they might go and work with a university for anything other than undergraduate and graduate recruitment rather, or working with students. Academia, the academic process is very thorough but therefore very slow. That can be quite intangible, quite a strange thing for businesses, and that can make it quite difficult to work together because we're on very different time frames. So they're the kind of obvious barriers. Anything that you wanted to add around barriers, put it in, but what I wanted to build that question into is how we can work more effectively. So how we can make it easier for industry to access and work with academics, particularly on the research side. How you're doing it quite well in Fintech Scotland, and how UKRI is looking to speed up these processes and make things easier, more accessible. Who wants to go first?
I'd be happy to start. It's a big barrier, I think. Of course, there is the effort you need to put into the engagement, the time that you need to put into the engagement, and the incentives you also have to put into the engagement. A lot of, to start blaming our side of things, a lot of academics just have, their KPIs as to publish in top academic journals, and that takes a lot of time, and that's pretty much the only thing that are being judged upon, or mostly be judged upon for the promotions and career progression. And so, going with endless discussion, spending tremendous amount of time to understand, where businesses come from, what are the challenges, in order to then think of ways to do more relevant research and deliver to these, particularly to these issues and challenges, that's not aligned with their own kind of economic incentives. But even where there is funding to release time, I think the challenge there is, again, kind of a misunderstanding or a mismanagement of expectations as well. A lot of people in industry need to understand that academic research takes time. So we had a lot of businesses coming to us saying, oh, we want to do research with you. We have, this problem, but we want something in a couple months, right? So I mean, we're not consulting companies, and of course, consulting companies have great advantages. As Stephen kind of mentioned, they have great visibility, etc., and they work at pace with their customers. Academia is different, and our contribution is also qualitatively different in that we also leverage science. You know, we leverage theories, we leverage kind of knowledge that we have at the scientific domain across social science and hard sciences, for example, to draw insights and help deliver solutions, right? And a key example, for example, I have in my case as being an economist and social scientist, is essentially, you know, at the business model level, which is one of the key questions, you know, because we find a lot of the times that barriers to adoption of technology is not just about the technical part or even the regulation or even the human, is purely about how to leverage that technology to make more money, and how that technology, you know, what are the benefits of replacing existing technologies and moving to a different technology for the organization, not just efficiencies, but for example, the case of banks having a much more efficient payment infrastructure would potentially mean that you jeopardize existing benefits from inefficiencies that you have, right? So living payments, for example, that you benefited and profited from, and so on and so forth. So, you know, leveraging theory, you know, at the business model level has been quite an eye-opener for a lot of folk in the industry. You know, these ideas of platform business models and the economics behind them, like the transaction cost theory and network externalities, that can really bring amazing insights to practitioners on how to leverage further data and data openness, for example. So these are the insights that potentially you don't get elsewhere, but you have to be more patient. You have to be working with academia to connect these dots and have a lot of engagement with them, because it's a two-way process. So it's both an academic needs to understand more and to the point try and do the research, but also the organization need to understand what they can expect from academia and what are the true benefits from science, right, in this discourse. So
I think there's another fundamental barrier, which is knowing what's possible, right? It's probably pretty easy as a fintech business to think, actually, I need some help around how to deal with a particular blockchain issue or cryptographic issue or something like that. And you can come to Rachel's team and go, is there anyone that can help me with that? But I suggest you also need to think broader, because academia spans every scientific and humanities and social science and whatever discipline, right? So think about what the human or sociological issues are around what you're trying to do. Think about what the economic business model issues are around what you're trying to do. And then come and talk to Rachel and her team and other similar teams in other universities and see whether there's someone that could help you with that sort of thing, right? The opportunity is there, it's knowing that it's there that's the difficult thing. So just try and be broad in your thoughts about where you might need some help.
And sometimes when businesses have come and talked to us, what they first think they need in terms of an academic discipline to input isn't what they end up needing. They might think they want a marketer, but actually they need a social scientist to inform the marketing strategy that they're going to deliver. Anyway, to Nicola, to you on this about how you're doing it. You seem to be doing it quite effectively at Fintech Scotland, this industry academic working.
We're still learning, I think. I said yesterday in Edinburgh that there's so much opportunity and this is such fertile ground, but we have just started to plant the seeds. And I think we've just started to plant the seeds across the UK on this opportunity. So if I may, I'm going to take it back to strategy and a vision and a purpose that we can all buy into. And, you know, we have so many lessons, particularly over the last couple of years in other disciplines that we could learn from, I think. So if we looked at medicine and COVID and everything that happened there, there are so many principles perhaps that could be lifted from that as we think about how can we cultivate the right strategy and environment, the vision and the purpose for better relationships between financial services, fintech industry and academia. So we address some of the problems that Marcus has called out there about time, and be more agile and think about that opportunity to be more agile. Consider the opportunity to convene industry on these non-competitive issues, of which there are many, and help us work through what that framework is so that we can build those principles and give confidence to industry that there aren't any we're thoughtful about those non-competitive issues. So I think those are a couple of things that across the UK we could really consider and drive this broader opportunity. And then I think it comes down to some of the practical stuff. That knowledge share that Stephen has talked about is really important, but knowledge share with listening ears, as we've often got to consider. Are you listening to what that opportunity might be, and are you listening back to understand how you need to pivot? I think it's vital. And I don't think we should forget the really significant focus that universities and the academia and research world presents as we think about entrepreneurship. And that is one area where I think there's much more opportunity for us to convene and progress the opportunity for fintech innovation in the UK.
Thanks. Before Chris gets up and hovers, I've got one more question. It's going to be really quick. But before I ask it, it's just worth reiterating that point about timescales and academic capacity and time to do things being really critical. The key to that is speak to us early, before you've got a project that needs to be delivered in a certain time frame that's within 6 months. We had, just before Christmas a couple of years ago, I had Amex send us an RFP on the 17th of December and they wanted a response by the 5th of January. That was ridiculous. But any time scale of within a couple of months, it doesn't give us time to do anything. So talk to us early before you've got something really designed. The last question was going to be, and I want just a few words from each, and I want everybody else to think about it and maybe come and talk to us about your thoughts on it. What are some of the key topics or research questions where more work is really needed?
Well, for me, it's remains around what are the human behavioural barriers to the technologies that we're trying to deploy, and how do we overcome them?
Nicola?
So for me, it is about financial resilience, financial inclusion, as we think about the needs of our society, really, for the future. The world, I mentioned earlier, the world of pensions has changed significantly, and how we currently, our pensioners of today will have a completely different experience than our 3-year-olds when they become pensioners. And we have to find a path to help them to be as financially resilient as we possibly can. There's significant work there for us to do as we think about financial resilience, and the pensions is just one example there.
Definitely. Marcus?
Yeah, I totally agree with both comments. Just to add, I think, to an extent with what Nicola said as well, it's really interesting to understand and have more evidence and, try and uncover more around, for example, how all these financial technology, how all this innovation within the context of finance actually delivers in the end to the end consumer. Do we have, not just gains at the productivity level across the economy, but actually at the consumer level? Do we have, do we make the lives of people better? And then I think that's a fundamental question that I think all businesses should have in mind. I mean, look at cryptocurrencies. The question I pose a lot of the times to my students, for example, is tell me what, for example, Bitcoin gave to people, gave to humanity, gave to the end customer. And I think that's a good lens to try and interrogate whatever we do in financial services in any kind of context of innovation.
Yeah, thank you. And we do have, beyond Marcus's group that's now doing this specific research around finance and technology and financial innovation, we do have some interesting projects in other areas of the university where you might not expect. We have Chloe, if she's still here, who's doing a PhD in human geography, but looking at inclusion in fintech and financial sector. We've had projects in social sciences with social gerontologists who look at personal financial landscapes. So we touched on some of what Nicola was saying around bringing those things holistically. So the interdisciplinary nature and what I said about the expertise that you might get from any university isn't what you might think when you first come talk to us, but we have all of that. So thank you, Nicola, for joining us online. Thank you to Stephen for coming to see us in Manchester. And thanks, Marcus, for letting us all know about the new centre.
Thank you, Rachel.
Thank you. Thanks, everyone. Thanks.
Thank you. Bang on time. Perfect. Well, a couple of minutes. You brought it back. Okay, we're now going to have a fireside chat between AWS and GFT. So Neil and Addy, please come up. It's not really a fireside chat, actually. It's more like an organ side chat, but I'm not quite sure we can use organ side as something that we say in the brochures. You can put that in the PR. Chris is keen on an organ side chat, guys. It's that time of day. Just wait.
Have you got me? Yes.
Right, guys, over to you. Looking forward to this. Future of digital banking.
Yes, thank you, Chris. Thanks for the intro. Yeah, so today's fireside chat this afternoon, talking about building the next generation of challenger banking. So really looking forward to that. So far, it's been a great morning. So thank you ever so much. It's been a great event, and yeah, we're privileged to be here today. So my name is Neil Thompson, and I'm the AWS Alliance Manager at GFT. For those that don't know GFT, we are a service integrator consultancy organisation. 35 years old, we started in Germany, and we work with some of the major banking institutions and financial institutions globally. Which is always a challenge. We've got over 10,000 employees, a big milestone we achieved this year, and we operate in over 15 different regional markets. And Manchester's become a really important hub for us. We've got an office in London, but last year we took the decision to expand into Manchester and really tap into the local community, the technical hub, and the opportunity to get some more customers. So absolutely great to be here. As I said, it's an honour to be here and really helps solidify where we are. So without further ado, I'd love to introduce my colleague, Adi Dabashi from AWS. Adi, intro for yourself, please.
Oh, thanks, Neil. Hey, everyone. I'm Adi Dabashi. I'm part of the AWS Financial Services team, and I focus on our partnerships. Partnerships for us is how can we work with our technology partners, our consulting partners, to build industry-forward assets. That is, build unique plays that can help our customers together to accelerate their transformation, invest in these and educate our customers together and invest in that modernization. So our teams play this role across the cycle, and we work closely with the fintech communities globally, and we have a number of colleagues who are working with most of our partners who are in the room. I've been with AWS for about 4.5 years. I've had the chance to kind of build our ecosystems across New York and London, and I've seen some fantastic case studies, and we're really excited to talk to you about some of these today.
Lovely. Well, thanks for joining us, Adi. Adi's a new father, so he thought we'd have a day off today and come and join us up in Manchester. So thanks for being here, Adi. So before we get into some of the bank brands that we've built together, it'd be great to get an understanding of the trends that you're seeing in the financial services landscape currently, please.
Yeah, absolutely. We're kind of seeing 3 macro trends, and I'll kind of take a foundation from where it starts. So customers across capital markets, banking and insurance are no longer asking if or whether they should move to the cloud. It is a question of how, and how can it be done right. This means doing it effectively in a cost-efficient manner that can support the end customer in their business in a way that is risk-free or risk-averse, and so they're looking for proven architectures and ready patterns that can help them. Breaking it down to kind of 3 macro sub-patterns, I think the first one that we've seen is, the landing zone and the guardrails need to be built. Customers have built these, and now they're looking at modernizing their legacy systems. Modernization is about identifying the barriers that are to the existing applications, wrapping them or finding a way to leapfrog and build a new platform. And we've seen this with a few very interesting customer case studies. And I thought I'll share a few of these starting with, say, capital markets. And so why not start with the regulator? And so one of the case studies to look at is FINRA, the Financial Industry Regulatory Authority of the United States that's overlooked by the SEC. FINRA overlooks 400 billion market events on a given day. They churn through this data to watch at every market event that occurs. And during COVID, they had a burst in their overall monitoring that required them to go up by over 800 billion transactions to be overlooked. And they were able to do this because they built architectures that were built for scalability and elasticity on AWS. And so one of the key asks that are coming through from financial institutions that are doing risk modeling, regulatory compliance is, how can we build for these scalable architectures? How can we build the right grid systems and the grid platforms that model these risk models? We're also seeing this from the lens of modernizing the mainframe, modernizing legacy platforms that might not be able to move over, and finding ways to accelerate transformation while either maintaining or finding ways to deprecate these systems in the long term. The second trend is what we call leveraging data for business. And this is really a focus looking into the next few years. We're going to dive into the Mox case study, and it's actually a perfect case of how this occurs. But leveraging data for business is making sure that the organization has the ability to know the data it has, churn the data that's coming in real time, identify who should be the owner of that data, who should get access to that data, and then making sure that the right groups are building the right analytics for personalization, fraud detection, and so on, all of which require complete compliance across GDPR, data residency regulations, and PII protection. So very interesting case, and Mox actually is a case study for that. The third macro trend that we're seeing, and that kind of was really spun off from COVID, was making sure that the customer experience is completely digitized and built for the future. So within this, we have some great case studies that we've done with Barclays, where they completely transformed their contact center, digitized it with Amazon Connect. And it's a pattern that's occurring across retail banking, insurance today. Amazon Connect is an interesting service that's really going to help customers identify who they're speaking with, the sentiment of the customer, what is the history of that interaction, what is the next best action, and identifying escalation scenarios before they occur. And so customers are looking for not only customer experiences, but they're looking for early personalization, early fraud detection as part of that customer experience. And again, that's a huge focus for us, and we're really working closely with our fintech technology and consulting partners here.
Thanks, Eddie. Great. And when we think about the trends, GFT have recently conducted a survey with some banking customers. We've called it the GFT Banking Disruptor Index. It's available on our website. It's also, we LinkedIn post a few weeks as well. And I think Ryan's going to add it to the wrap-up notes as well. And that really helped us understand a lot more about what the customers are saying. It come as no surprise, the younger generation, they want to interact digitally. They don't trust the banks. And that's really where we set forward to make sure that banks don't get left behind, and that's what we're really trying to help with. So on that, Addy, and we talk about trends, let's tap into Mox. You can see Mox is up there. It was a great story of collaboration. If you could give us some understanding about how it came about, why it was so groundbreaking, yeah, it'd be great. Thank you.
Yeah, absolutely. Mox was one of the first and most powerful cases that we have publicly referenceable, and with our shared case study backed by kind of the design pattern and architecture shared. What made it interesting is, as in APAC, there was a large trend around creating the digital bank. This was led by the regulators, with the Hong Kong Monetary Authority kind of granting digital banking licenses, and this was offered to a number of players, and one of these was Standard Chartered Bank. And so Standard Chartered Bank said, we need to build a digital bank. We need to be able to do this in a fast manner. And so we need to be innovative. We need to create freedom for these specialists to build, not let kind of an organizational structure slow them down. And so Mox was a fully separated entity that was completely able to innovate on their own. The journey was very interesting, where they worked backwards from the key needs of a digital banking experience. They first worked from what are the barriers towards a customer adoption, and that is, well, how do you onboard a customer? How do you make it really easy for a customer to get started? And so making sure that journey is really simple, as easy as taking a quick selfie, and completing your identification through photographs. We take it as standard today, but at the time it was groundbreaking. The second step was making it really easy to process through transactions and identify ways for personalization and analytics. So how am I spending my money? How can I find ways to optimize my spending? Can I use Google Pay or Apple Pay? And is it easily integrated? This was important. And so a lot of these foundations were built into the architecture. When Mox was getting designed, something that was very pragmatic of the leadership was calling out that they do not want to build this from scratch themselves. They want to work with trusted partners, trusted technology and consulting specialists, and AWS to combine the right assets and solve for the business challenge. So this was not about kind of engineering from scratch, but very much identifying, hey, we have a ready design pattern that's available, that's a proven set of frameworks and policies AWS has built and stands behind, working with trusted integration specialists like GFT, and then leveraging Thought Machine, who is a financial product specialist and builds flexible product frameworks for banking. And so by applying Thought Machine with their Vault platform, they were able to say, look, we're going to apply this platform in a matter of weeks. We're then going to customize it to the needs of our region and our regulations. And we're going to then work closely with GFT to make sure it's integrated to what we need. And the impact was kind of very evident. Mox was one of the first digital banks that hit the market. This was around September 2020. And at a time where branches weren't available or accessible, COVID had kind of hit, and the digital journey was essential. When Mox started, it was able to acquire the first 35,000 customers in the first month. They acquired 100,000 customers in their first year. And what's interesting is that first month was so impactful because it was about timing and being first to market, but with a reliable service that was able to scale as customers would grow and their needs would increase. This really helped Mox in the long term because the architecture that they applied was designed for that scale. And they used streaming Kafka architecture, they use an S3 data lake, and we can kind of get into more specific architectures offline, but it's about building a data platform that was standing on 3 foundations. The data must be secure, the data must be flowing in real time. The second pillar is the data must be accessible with a publisher-subscriber model that is entitled with business owners. So who is subscribing to my data? Who is the publisher of the data? And are the right parties holding the data for the right purpose? And the last part is making sure that analytics was possible. Easy analytics, getting the right teams to get the data and churn through that, while making sure that the data is protected across PII and the masking is set up early on. And we have a number of these architectures that are publicly posted, and it's a fantastic case study we've recently shared. So maybe you want to share some more information.
Yeah, absolutely. And this has come as a really good time. We re-interviewed the Mox team this summer. And happy to say yesterday we launched the new case study with some new updates. And you heard Adi mention that they had 30,000 customers in their first month and 100,000 in the first year. They've just turned over 400,000 customers. So that's quite some growth. We've posted it yesterday. We've actually got some printouts at our stand at the back, so please come and pick one up. It's a fantastic case study of the joint collaboration between the 2 organisations, and it really brought innovation to the fore. So yeah, please come and grab one, and we will share that with you, and we'll be happy to talk to you about it as well a bit later. So Adi, on that, when you have a new transformational digital bank approach, what are the best practices do you believe should be followed when you looking at that journey?
Yeah, I think something that we'd love to kind of dive deep with the fintechs, the technology players, and our specialist services partners in the room is let's build for repeatability. Identifying key areas that customers need to solve for, leveraging ready cloud development kits that AWS offers, combining these to develop cloud formation templates or quick starts that can help customers move quickly, and build all of that for repeatability. I think that's something that continues to increase. Partners who have developed assets like these have seen a huge amount of traction because financial services spans globally. And while we have to comply with regional regulations, there's a lot of repeatability in the assets and frameworks that get built. And so something that I really encourage is let's identify core industry challenges and business challenges that you are seeing in your industry. whether that's capital markets, banking, or insurance. Identify the ready frameworks, development kits that are available to you. AWS has a large architecture design library that's available for you to access. And then work with trusted partners who've proven this out in the industry. So if you're a technology partner, consulting specialists like GFT are in the lead.
Yep.
And if you're consulting, then there's several journeys and trainings that we can offer your teams as you ramp up. So it's about identifying business challenges and packaging them correctly and moving forward. And over time, we're going to see what took Mox to deploy was significantly faster than what took Monzo. And Monzo is a major case study for AWS, but Mox was deployed within 18 months, which is faster than Monzo. And as we look forward, the industry is going to have faster expectations, which is, I'd like a digital bank. It needs to do personalization, fraud detection, comply with every regulation, and I need it now. So this pattern is going to percolate asset management. You're going to see that in insurance and claims processes. And so partnerships that are collaborating with each other and then building for solving those business challenges will thrive. And we're really keen to invest in those across building of those assets, marketing them, and through the sales cycle as well.
Lovely, thank you, Eddie. And then, hopefully this works. Oh. So we also, we repeated the journey with Mox with Al Rajhi Bank. Al Rajhi Bank is one of the largest Malaysian banks that's available. It's traditionally bricks and mortar, but wanted to go down the digital space as well. And what we learned from Mox, and even though, as Eddie testified, what a great success it was, we was able to shorten the implementation of that project as well. That project is due to close actually quite soon, which is about a 12-month project, start to finish. And again, it's giving us the ability now at GFT where we're building cookie cutter approaches that we can repeat in the industry. And it's really creating some great interest, specifically in the APAC market, which we know is a bit more ahead in the innovation space, but it's really attracting some great interest there. Yeah, I'm not sure if you had anything to add on Al Rajhi at all.
Yeah, I think it's proven that the success that you had with Mox was able to repeat with customers like Al Rajhi, and it's on AWS. What I'd encourage everybody to think about is building the business case for these customers as well. And so one of the frameworks that we offer is the Cloud Economics Framework. Now this helps a business and technology owner meet in terms of the total impact they'll be able to drive to their business. This is a calculated score that you're able to generate as part of an AWS partnership. You're able to do these assessments on your own. A cloud economic framework helps make the business case along 4 pillars. Total cost of ownership, and cost is a major driver. But they also factor 3 other pillars that are extremely important to business stakeholders and operational stakeholders. Resiliency, developer and business productivity, and business agility. And so while you identify saying, well, when you move to the cloud and you leverage, say, a set of databases that are completely managed by AWS, what's that enhancement for in terms of developer productivity for your organization? That's a quantified number that your customer would like. If you're saying, well, we were able to build a Persona 360 engine that's able to recommend the next best product just in time, what's the business agility of that feature? And there's ways to quantify that. We've recently added a sustainability metric to that equation. And so what is the carbon footprint of your deployment? What was it in the past? What will it be over the years? And this is a metric that many CFOs are really keen to have. And so let's definitely think about kind of building assets, but then also kind of building those business cases through cloud economic calculators. And we've seen that work really well at customers.
Lovely, thank you, Eddie. That pretty much brings us to the end of our fireside chat today. I'm not sure if you had any final comments at all, Eddie, or you covered it all? Excellent.
Yeah, I think the one thing I'd love to add is there are several programs that are available for fintechs and startups to participate into. We have a program called AWS Activate. So if you are a startup and you are keen to get started, we offer up to $100,000 in credits. This is investments by AWS towards supporting partners. This is not an equity structure. It is purely for learn our services, learn through sandbox access that we provide you, work with an architect to deploy a feature. And if you are identifying customers, we can do proof of concepts as well, and we invest in those. So definitely check that out. And if you are a services partner, there's several ways in which we can take you through the AWS partner network, and there's direct kind of business teaming that we can do. So happy to chat. We'll be behind.
Wonderful, thank you, Addy. Well, that does bring us to the end of our fireside chat. So we've got a booth, a stand at the back there. So if you want to come and see us afterwards for some questions, we're more than happy to take those. So we've got the printouts of the Mox case study that we'd be happy to issue today. Addy, leaves me to say thank you ever so much for joining us today. It's been great. I've really learned a lot, and hopefully everyone else has enjoyed it as well. Thank you, everyone. Enjoy the afternoon.
Thanks, folks.
Addy and Neil, thank you very much indeed. That's great. You've brought us right back on track. Brilliant. Coffee break now. So just a few minutes, and then we're going to kick off with a panel on female entrepreneurs, and then we're going to move straight into the showcase. So I'm correct, it's a coffee break. It is a coffee break now. Please go grab a coffee, and I'll call you back in due course. Thank you. That's your best song, isn't it? Yeah, I'm sorry, man. If we can all sit down, please. We're going to have our next and final panel before we go to the showcase.
Yeah. It's a bit, it's hard to move back a little bit and then we can all see make your circular. I don't know if the mics as long as they work.
Okay, thank you. Keep going.
Is this mine? I've got 2 hands.
Brilliant. I'll take the hush as we're ready to go. Good. We now have a panel talking about female entrepreneurship and funding, and it's going to be led by Jess Jackson here from Procura Ventures. If I hand over to you, introduce the panel and have some fun. Thank you.
Great. Is the sound? Can everyone hear me okay? I'm quite loud, but I don't have any sense of how well you can hear me. So, yeah, good afternoon, everyone. I'm Jess Jackson from Procura Ventures. We are a Manchester-based, northern-focused VC. And I'm one of the co-founders of Fund Her North as well, which you'll hear something about from the panelists today. We are going to talk about female entrepreneurship and some of the challenges faced in raising finance. But I'm also hoping that in the conversations around investment, we'll get some good bits, tidbits and bits of advice which will be helpful to all of the people in the room who are early stage entrepreneurs looking at raising. So I'm hopeful there'll be something in this panel for everybody today. So we'll get started. I'm just going to ask my panelists to give a quick introduction to themselves and their organisations before we start, and then we'll dive straight into the questions. So I'll come to you first, Heather.
Okay, thank you. So I'm Heather Waters. I'm Regional Enterprise Manager for NatWest. I cover the north of England. My main role is to work with the accelerator programme we run, looking after entrepreneurs. We've roughly got about 200 in the north of England we're working with at the moment, and I work in the ecosystem with the likes of Fund Her North to find where the support and the funding is for entrepreneurs.
My name is Nicola Weedall. I'm one of the co-founders of Hyder. We are a software that enables SMEs to get their invoices paid within 24 hours of creation. I'm based here in Manchester and have been in the fintech world as an entrepreneur for around about 5 years now.
And hi, last but not least, my name's Fiona Hatch. I'm part of the investment team at Foresight Group, a private equity house that invests from early stage right through to established businesses. We are regionally based, so I'm based here in Manchester, and we cover the whole of the UK.
Great, and Fiona, could I trouble you to just give a quick synopsis of what Fund Her North is as well, please,
Yes.
before we get started, because that is going to get dropped into a lot of the questions today.
Yep, of course. So Fund Her North is a collective of females in and around different funding organisations across the north. We're, as Heather sort of alluded to as well, we try and cover that full ecosystem of what entrepreneurs are looking for. And so what we aim to do is to connect entrepreneurs with females in different funding organisations and assist them with the information and the tools that they need to gain the support to grow their businesses.
That's fabulous, thanks Fiona. So I'm going to come and talk to Heather for a little bit first. So we've talked about Fund Her North there, but that wasn't really a thing until the Rose Review was launched. So can I just ask you to sort of talk us through what the Rose Review is and how it came about?
Sure. So go back to 2018, Alison Rose, who's currently our Chief Exec, had a meeting with the Treasury Department, and they actually got onto the conversation of why is there not as many female entrepreneurs as there are male entrepreneurs in the UK. So currently only 1 in 3 entrepreneurs are female. And then they realised the size of the opportunity. So if women started and scaled businesses same rate as men, there'd be an additional £250 billion in the economy. So you look then at, well, why is that not happening? What are the barriers? What's stopping them? So at that time, there was lots and lots of research and reports being created, and we did some FSB, British Business Bank, lots of different organisations, but they kind of looked at the size, the problems, and parked it. So the Rose Review was looking at the, research was already there, brought it up to date, and came up with a plan of how they were going to make a change. That got launched in 2019 on International Women's Day, actually in Manchester in our offices, and it's been updated every year since then.
Fab. So when we kind of talk about gender imbalance in the investment ecosystem and its importance, can you maybe just expand upon why it is so important, and maybe touch on some of the kind of the figures and why, if more was done in this area, that everyone would benefit from seeing a shift in that?
Yeah, so going back to 2019, the biggest barrier recognised for female entrepreneurs was access to finance. And I know it's the biggest barrier for all business owners, but particularly for women, it's seen as a huge one. Understanding the funding landscape and how to access the funding as well. When they looked at the investment world and looked at VC in particular, where they got the data, there was less than 1% of VC funding was going to all female teams, which was pretty appalling. There is a problem with the pipeline as well, so we'll keep that as a separate kind of conversation. That figure on 2022 is moved to less than 5%. So it's moved forward. We don't know how far. It's not 1%, but it's less than 5%. So there's a real issue there. And when they looked into it further, I think the figure was only 12% of senior people in the VC world were actually female. So the chances of a woman actually pitching to a female in the panel was really, really a small opportunity. So Investing in Women Code was set up back in 2019, which was actually those funding organisations committing to actually have a look at themselves internally about have we got women actually in the investment environment and how can they change that. So currently I think there's 160 signatures on the Investing in Women Code, and obviously Fund Her North was formed, and everybody who's a member of Fund Her North is a signatory on there. So this is looking at the investment world internally, and where we're looking at it externally, actually where our problem is how do we get more women to go for investment to grow their business, but also from the investment world, what are you doing about getting more women to be in the investment environment?
Yeah, amazing. And NatWest has been on the, obviously the stakeholder board for Fund Her North, and since we launched 2 years ago, we hit our second birthday last month, and we've helped, I think, 14 deals and 3.1 million investment into female-founded businesses through the network. So, it's definitely having an impact there. I guess looking forward, Heather, what is it that the ecosystem is still going to see as a challenge for, not just for women, but founders from minority backgrounds, and as that landscape evolves, what do you kind of feel the ecosystem needs more to support those founders in achieving their business growth objectives?
Ooh, if I only knew the answer to that, that'd be worth fortunes. It's a big problem, and we've just been talking about before we came on the stage, because we have, on one side, I work with an awful lot of early stage businesses who are going, I want investment, and I'm just not getting anywhere. And then we get reports going, there's lots and lots, there's trillions of pounds of money in the UK for investment. Then we get it's like, there's loads of money in the north of England, and then I hear entrepreneurs going, I can't get any money, and how do I do it? I need a warm introduction. Then we get the investors saying, God, I get slides, pitch decks sent to me, hundreds each week. So there's a problem somewhere in the connect between actually how do we take somebody who's investable, and that's a challenge on its own, to make sure people are ready to go for investment, and make it easier for that introduction to the investment environment, because it just seems a complete mismatch to me at this moment in time. And I'm being quite critical there, but I work with an awful lot of people spending a huge amount of their time whilst I'm running the business, growing the business, and then trying to get investment at the same time, who've got really good businesses, and they get to a point where they're just going to run out of money. It's just, unless they get the investment, it's not going to go any further. So it's a problem that's mostly been there a long time, but how do we make it easier? How are we a bit more transparent about which investors invest in certain kinds of business, certain sectors, and make it a little bit easier to navigate for those people who are actually starting out on that journey? Absolutely, and there is a role for public finance in this conversation, and the Midlands Engine Fund, which Foresight manages as well, is kind of looking at that from a regional perspective, which obviously that's really important as well to this conversation. Nicola, I'm going to come and chat to you now about your business, or rather businesses. So this isn't kind of your first rodeo raising finance, so I kind of wanted to go off-piste a little bit and just ask you to share some of your journey, but I'm really interested in hearing kind of what were what are the good bits and the tips, but what were the biggest fuck-ups that you did? And what would you be like, do not do that to the people in this room today? Because it's so important. People talk about the shiny stuff, but no one talks to you about, oh my God, that thing, I really wish that hadn't happened, or I hadn't have done that. So I'm really interested to hear from you on that.
Yeah, I think fundraising is hard. There are far more fuck-ups, as you put it, than there are things to celebrate when you're fundraising. I think you've got to be really, really resilient, and it's a numbers game, and it can be described as dating. You know, you see quite a lot of people that are not suitable before you get to the one that you actually want. But I think one thing that I've learned along the way is that people are the most important thing in the room when you're sitting in front of investors. Your idea is kind of you know, you wouldn't be sat there in the first place if the deck that you'd already sent to them wasn't impressive enough. And it's all about the person delivering that pitch when you are in front of a room of people, and investors genuinely do buy into people, especially at an early stage. So you've got to make sure that you know your numbers, you know exactly what to expect, but if you don't know the answer to a question, it's okay not to know the answer as well. I think I've been sat in a room a few times, and one of the very first conversations I had when I was pitching, I was absolutely winging it halfway through. I was getting so many questions and I didn't have a clue how to answer them, but I did not stop talking, and in the end the guy just went to me, "It's okay if you don't know." And I was like, "Oh my God, thank you." And you know, it is genuinely people, you go and see people and it is okay not to know. But I also think that one of the biggest mistakes that I made first time round is assuming that everybody is actually going to want to invest and seeing a few too many people. And I think it's quite important for you as a founder to flush out people that aren't really interested, and not just meet everyone for coffee just because they've said, "Yeah, I'll meet you for coffee." If you're not interested in investing, then it's a waste of your time as much as it is a waste of theirs.
I think that's really interesting, and my colleagues and I were chatting about this in the office this morning actually. How do you kind of how do you do that? Like, what's your kind of methodology for going, this person's interested versus kind of that person's not? Like, how would you kind of know that? Is it intuition? Are there any kind of tips in how you've triaged your conversations beforehand?
Yeah, I think it definitely comes with experience. So I definitely had more meetings at the very start of my journey as an entrepreneur than I do now. But I do genuinely think that, you know, intuition is there, but it's also okay to ask. You know, and I think I learned something this morning on a call which was about understanding what you want from the individual as well as what they want from you. So, you know, if you put it out there, I am looking for investment. If that's not what you're into, then there's probably no point in, at this stage, us sitting down and having a conversation. Love to chat, and you know, but right now my focus is finding investment in the business. So I had a call a couple of weeks ago with somebody that I thought was an investor. Within 30 seconds of the call, knew straight away that it wasn't why we were talking. Turns out it was more of a pitch for a job, and you know, you've just got to be able to, I mean, never cut the call short because that's just rude, but you know where it's going and then move on to the next one.
Yeah, no, really helpful tips there. I guess one thing as well that struck me after a conversation that we were having in the office was, like, how important is it that investors actually understand fintech? Do you find that investors are more interested in kind of the bare bones of your business, or do you actively seek out people who can, I guess, speak your language, as it were?
I think the most important thing when you're building your own cap table is finding expertise in as many areas as possible. As a founder, it can often be quite a lonely place, and having that reliance on your cap table is sometimes quite important. So for Hyder, for example, we have an amazing cap table at the moment of 11 angel investors, all of whom bring something different but equally valuable to the table. And it is a question that you often get at the end of a conversation when you are pitching for investment, which is, you know, what can I do for you in terms of as an investor? And it's really important that you ask that question, because it'd be a great situation to be where you're oversubscribed for any kind of round of funding, and that would be how you pick out the people you want on your cap table. So yeah, I think there's only so much that you know, and you should be able to rely on that network of shareholders for everything else.
Fab. And just a quick survey of the room. Is everyone comfortable with what a cap table is? Because I know that VCs tend to use a lot of jargon, so you know, don't be shy to raise your hand if you're like, what the fuck's a cap table?
Okay, great. That's good. So I'm going to come to you now, Fiona. So you're involved as a steering group member of Fintech North, and I have the joy of sitting on lots of Zoom meetings with you and have done for a while. So what was the kind of rationale for you, both whether that's as an individual or indeed as Foresight, to sort of get involved in Fintech North from the beginning?
Yeah, indeed, you know, as Heather alluded to before, you know, we're all aware of the imbalance in investing in women, but also then in the north you've got that geographical imbalance as well. You know, so it's a clear funding gap. At Foresight, you know, part of our ESG approach to investing is sort of broadening that source of deal flow and making sure that there's financial inclusion for all founders, whether that's based on gender or other minority groups. And you know, it's clear to us from the outset that Fintech North shared exactly those same values. You know, so it's pretty much a no-brainer to want to get involved with something that was bringing this conversation to the forefront. As you know, as we said before, all members of Fintech North are signatories to the Investing in Women's Code. Foresight was one of the first to commit to that, and part of that commitment is, you know, overtly addressing the imbalance. Whether that's providing the tools and the resources that females need to approach investment, but also looking internally at what that looks like. At Foresight, we have a female partner on the investment committee. Over 27% of our investment team are females. That, you know, including senior females, which, you know, is, whilst not great, you know, is better than most. We do acknowledge that, you know, there is still way to go, but in terms of then where we see that coming through, you know, as we've said, we see a lot of pitches, a lot of decks. You know, we look at the statistics. About 5% come from females, but from our portfolio, 17% of our portfolio are either female founded or female led, and again, you know, it's better than the average. You know, still a way to go, but it's something that, you know, I think sort of goes to prove the point that if you've got the right people in the investment team, you're helping those female led businesses.
Yeah, and I think it was KPMG data that said female-founded fintechs outperform male-founded fintechs. So make sure your team's diverse from the start, guys, and you'll make more money for everybody. So kind of coming on to kind of the role of women as investors themselves. In July last year, Fintech North launched their Women Angel Syndicate, which is the only one in the North. And it's certainly one of the most active women-led syndicates in the UK. We believe it's got 40 members, and they have invested into all 14 of the deals that I mentioned before. So, Fiona, like, why is it important, from your experience, to have more women angel investors in the investment community, and how does that support the quest for better gender balance and equality in the investment?
Yeah, as I said, obviously the data goes to show that if you've got those females on the other side of the table, they're more likely to invest in female businesses. It's great that the Women Angels of the North is now up to 40 members. It's a very active syndicate. But the sort of question goes to funders at all stages of investment. That's not good enough. Like I said, it's something that we, at Foresight, we look to address, and I think that it goes to that sort of challenge goes to funders at all stages of the investment to really look internally and really make sure that yes, gender, but from all minorities are reflected back into the investment, into the sort of the founders that you'll get to see in front of you.
Fantastic. I think we've kind of covered a lot of our questions, so I think what I'm going to do is just come to each of you, and I guess can I get a quick show of hands from people in the room as like who's actually from a startup, you're running a business? Cool, great, and leave your hands up if you're raising investment. brilliant. So there's lots of people who are raising investment. Excellent. People raising investment. So I guess I'll run down and I just from kind of your respective kind of positions in the ecosystem, you know, Nicola as a founder, Heather, you see lots of businesses at the start of their journey. Fiona, you probably see them probably a lot further along. Can you sort of summarize like what are your key tips that you're giving to founders on a daily basis that you often feel like you're saying till you're blue in the face? Like, what's the key pieces of advice? Maybe one or two from each of you would be great to share with the room.
So I think for us, it's are you investor ready? So it's looking at the pitch deck. Have you got a one-pager? Are you pitching? Literally, are you out there doing it? We're trying to do more. So we run an accelerator program. So we've got 3 in the north of England, and we weren't actually touching that as a part of our program. We brought it in because we recognise an awful lot of people are going for investment. The other thing I will say is actually, do you need to go for investment? Is it too early for you to go for investment as well? Is there another way you can raise money, looking at debt and actually looking for investment to go a bit later on? So, you know, is those questions, but actually, you know, at this stage, are you investable? Is most of the kind of most pertinent one we could use, really.
Yeah, we don't want your pitch deck to be the one that goes in the Hall of Fame folder in a VC. That's, you know, there's some good stories in there, I can tell you that for nothing. Nicola, what sort of advice would you give to another founder who's raising, or advice indeed you wish you might have got yourself?
I think the amount that you're raising is extremely important as well, and it's okay to revise that number as you go along the journey. You know, you can start your fundraising journey and get to a point where you think, actually, I need more than I've initially thought, or you know, more importantly, recognizing that you could actually do it with less, because there is milestones that you will have to meet along the way. And it's understanding, I guess it's almost reverse engineering, what's the next milestone for this business? How long is it going to take you to get there? How much is it going to cost? And then when you're sat in front of a VC and they ask you, well, what am I getting for my money? Then the answer to that question is, well, the business is going to be here in this amount of time, we're going to achieve this, and that will allow us to be able to go out and raise money, you know, maybe more professionalised VC fund, or whether it's continuation of angels, but you can show that this is where you're going to get to, and that's what the money's going to be used for. And then on top of that as well, I'd say that for me personally, the importance of team, you can really underestimate the importance of your team when it comes to fundraising. So if it's not what you have now, make sure you've got the vision of what the team looks like in your deck, because that'll be one key thing that a VC will be looking for.
Fantastic. And I guess, yeah, Fiona, from your side of things, like what are the common kind of mistakes and pitfalls that you see in the things that come across your desk, and what advice would you like to give them if you could sit down with all of them?
Yeah, good question. I suppose, you know, following on from that, I think team is definitely something, you know, and we were discussing this earlier. You know, ultimately, you know, we are investing in the people, and that, you know, we sort of say that to people. Yes, we're a PE house, we're a funder. You know, we're there to hopefully unlock growth potential for you, but we're backing you. We're backing, you know, that's who we need to believe in, and having that confidence in yourself and your team, and surrounding yourself by the right team, whether that's, you know, people that work with you or advisory, you know, having that strength in that sort of regard, you know, speaks volumes when you're speaking to people. And I know this is sort of probably easier said than done. Within, you know, like you say, you're running your business, you're looking for investment and stuff as well. It's looking out to your network and who's in that network. Talking about the volumes of decks and pitches that we see, yes, there is a large volume. If there is any way, any angle that you can get in to make that a warm introduction, but also being cognizant of who is making that introduction. Is it going to be seen as an added value of who that introduction is coming from? It definitely, you know, from our perspective, it makes the job a lot easier.
Do you want to hear mine? I know you do. I heard a scream of yes. I saw a deck today over my colleague's shoulder where they describe themselves as the Uber meets Tinder of care homes. And I was like, are you transporting old people around for sex? And it wasn't what they did at all. But please don't do that. I hate that. It's my pet peeve. But I did really love that in a way. I think we might be out of time. I've no idea how long we've been talking for. But I mean, if we've got any questions from the audience, I think I'm happy to take a couple, and I'll chuck this over the way for. Oh, brilliant.
Am I on? There you go. I just wanted to know what the website was for that Tinder care home, please.
It's not going to be as good as you think.
Oh, okay.
So
Sorry.
I think we're just better off leaving it. And
I didn't have a sensible question.
I'll let your imagination run wild. Any other questions from the audience? Yeah, there's one over there. I thought you had one then.
It's my job to ask questions. So.
Hi, thank you. I'm Claire Black from Streets Consulting. I just wondered, be interested in your thoughts on whether you think we're actually making any progress in this area. I've been in financial services for far too long, 30 odd years, and I kind of feel as though we're still having this conversation 30 years on, and it never gets any better. So I'm just interested in your thoughts on that. Maybe I'm just old and cynical now.
Yeah, it was really interesting actually. As we said before, Fund North celebrated its second birthday a couple of weeks ago, and that exact same we had that exact same conversation. It's almost like the statistics don't shock anymore. We've almost got used to, yes, that 1% of investment into female businesses is accepted, and it's one of those that we need to continuously try to reframe that conversation so that it doesn't become accepted, and it should still continue to shock until we make improvements in there, and it's that, and then accept this as a fund, being in a funder as well. It's looking internally and being constantly be challenged and challenging ourselves of how we can make a more marked improvement.
Yeah, I would just add to that, when it's looking behind the numbers and not allowing ourselves to be placated. So, the 1% number was cited in the 2019 diversity VC data, and then a couple of years later it was, woohoo, 2%, we've doubled it. But when you actually look behind it, and it's like you look at the actual quantums of the money, it was a decline, or it wasn't the same extent of the improvement. So, yeah, we can't allow ourselves to get complacent. We are seeing movements. We know women are overrepresented in accelerators, which is one, great, but two, there's a follow-on challenge to that of how do we get them funded and out of the accelerators. So you're right, it always feels like we're sort of reframing the conversation, but that's how we get change if we just don't let up and keep incrementally shifting. But it's a good point.
I think just to add to that, Jess, I think we found through COVID actually more women started business the year after. So I think there was a part of, actually we are getting more female entrepreneurs. A lot of businesses were started, but actually a huge amount by women. So it's the start of the journey. This is not a quick fix. This is going to take many years. And that's why we go from 19 to 22, and it's like we move like literally, it's a small amount. But it's starting to happen. Fund North is a really good example of it took the rosy view for that to happen. So it's, I wouldn't say baby steps, but we're getting there. But, and you just said, we've got the accelerator. We've got over 60% of the entrepreneurs in our programme now are female. And that's through us working with Fund North and actually showing that there is a route to get the support and actually how we work back with the investors as well. So it's getting there.
I think I'd just probably add one more thing to that as well about, you mentioned about COVID and more women founded business since COVID. But I think the world's changed significantly in terms of the approach to work as well since COVID. And I think that will have a positive impact because, one of the major barriers for female entrepreneurs is that, having a family, being at home, taking a break, taking on a bit more responsibility when it comes to parenting than males do. And I think the change that we've seen in the working environment since COVID will have a positive impact on that. For me personally, I'm a mother of 3, and running my business now and looking after my children is actually easier since COVID.
Mm-hmm. I'm glad to hear that, certainly.
Coming. Okay. Yep, good, thank you. So I've got a question. The path to success and equality is having as many female founders enter the funnel as there are men, so 50-50. I wasn't clear whether or not that was the case, whether that was the problem, or whether at the point where you have two founders pitching the same idea in exactly the same way, whether there was discrimination towards men over women in that situation. I'm under the impression it's probably both, but I'd like some information. I know that in the institutional space, we're hampered, institutional fund management, asset managers are supposed to have been reporting gender diversity and gender pay gap statistics, and only last 3 years, 3 asset managers out of 1,850 reported gender pay gap data.
It's a huge problem. I mean, the first thing that you said, I mean, the 50-50 stat is probably a bit of a misnomer. So I think it's sort of like 30% of businesses are led by women. So if we want it to be representative of the makeup of SMEs, it would probably be 30-70. This is somewhere around that mark. I think the second point you said was reporting.
There's the 2 points to this. One is to get to the 30-70 split, which is what you rationally would expect, you have to encourage more women to become founders. That's one part of it. And I don't know if it's the case that women want to become founders and just don't do it for personal reasons or other reasons, or they're disincentivized to do so. So the answer to that is yes or no. Are they disincentivized? Do you find that the pipeline is limited because women aren't becoming founders for whatever reason? And the second part is when they become a founder, are they positively or they're negatively discriminated against?
They are positively discriminated against. So I'll come to Heather because I know the Rose Review looks at some of those themes, but there has been research done where they just get the same pitch deck and then they put, a female founder in and a male founder in. The male founder one unanimously gets a better reception, and the same goes if they replace it for basically a non-white Christian name. That's also just a fact. Those decks perform more poorly statistically on average. But I mean, Heather, can you sort of talk to the Rose Review? That made me jump then. What the Rose Review sort of picked up on with regards to kind of why women aren't starting or are starting businesses.
Yeah. So there is only 1 in 3 entrepreneurs are female, and there's slightly more women on the planet than men at this moment in time. Part of that is choices to become self-employed, but also the ones that do start don't grow and scale the business the same rate as men. So there's a smaller percentage of women who've got business with £1 million turnover or more. So there's that desire to scale a business. Part of that is confidence, and part of that is choice in their life, because as you mentioned, that family care responsibility tends to sit more with a female than a male. Mm-hmm. So less start and less scale. So we've got a small percentage of people who are female who are looking to actually get investment as well, which goes back to the point I was saying earlier on about pipeline. We had to park that there because actually we can't be too hard on the investors if no women are actually going for investment. Yeah. So it's a catch-22 on that side. But the research from the Rose Review, when we looked at this, there was an element, a bit like you were saying, we've had stories sold back to us where a woman's been going for investment. I'd actually got a lady I can think of, she was in the Manchester area, and she had been a VC previously. So she sat on the opposite side of the table trying to get investment. She knows exactly what they're looking for. Couldn't get anywhere. Got one of her colleagues, one of the guys who worked with her, said, when you come to work tomorrow, stick a jacket on, you can come in with me for my next meeting. Went to the next meeting with him, and they directed all the questions to him. So it's very, this was a few years ago. I'd like to think things have changed. So they're the kind of stories we're hear. Yeah. So there is that kind of that's why we need more women to be sat on the opposite side of the table and actually recognise that there can be a female founder behind the businesses.
Very good, thank you.
I can add a little bit of balance to that though, because I think that for me personally, my experience for a number of years has been to have the positive discrimination. So whereby I would be sat in a room and it would be commented on as well that it's quite refreshing to see a female founder of a fintech business, and sometimes that is a door opener for me because people are want to see something different than just a middle-aged white man going in presenting a finance opportunity. So I find it, for me, works in my favour.
Brilliant.
Fab. Any more questions from the room or yourself?
Yeah. Oh, it's on. Yeah. I've got a more sort of generic question about funding, really, because there's a debate that I never seem to be able to get to the bottom of it, so I'm not sure I will now either. But
challenge accepted.
Yeah, let's do it, Jess. Come on, I reckon you could be the lady for the job here. There's no messing, is there?
It's the balance between the availability of funding and the awareness and understanding of how to access funding by entrepreneurs of whatever gender they might be. Where does it fall? Do you think in the north more generally, but Manchester?
Am I joking? So yeah, I think what you're saying is you might see lots of like articles and commentary on like the availability of funds and new funds launching. But the reality of actually accessing it, it feels maybe disproportionate to the amount of money that's sort of sloshing around. Is that kind of what you're saying?
Yeah, you'll hear entrepreneurs saying like it's really hard to get funding. Like, what's the problem? Is it not the right funding, or is it they're not well equipped to get it? They don't know where to go.
Yeah, it's a great question, and I think it's a combination of both. So I mean, I'll let Fiona chip in a little bit from her background, certainly, but yeah.
Yeah, I mean, from a Foresight perspective, we're definitely in that camp of, we have a lot of funding available to invest across the north, and we have regional investment funds, but across the UK in general, and it goes to that sort of point of how you get pitches in front of people, I think, and I know it's not. In a way, it's almost not a helpful comment to make, but it's just trying to unlock that door, whether it's through a connection, through having, sort of saying before, the number of conversations you have to have, and because it goes for us as well, the number of conversations we have with businesses until we get to the point where we find one that meets or is aligned to our investment thesis. We like to think that if it's not right for us, that we recommend it to somebody else. We focus on investing in SMEs. There's certain investments that come to us that, quite frankly, are too big for us, and equally the other way. We sort of pride ourselves on making those sort of onwards recommendations, whether it's to another funder, whether that's an equity funder or a debt funder, because ultimately it's in everybody's interest to try and help these businesses. And selfishly, from our perspective, if we're helping them get investment, it might, hopefully in not too long a time they'll be coming back and knocking on our door. And likewise, if we make those introductions to other people, that it works vice versa. But I appreciate that, that's part of the solution.
I mean, you say no to 99% of the stuff that comes through. And I think, Heather made a really good point where she challenges the entrepreneurs coming through the accelerator to, are you actually ready? And do you actually need money? And I think the more naive a founder is, the more likely they are to have too many conversations, because they're clearly scattergunning their deck around the ecosystem without necessarily pinpointing, do I fit their criteria? So just from a very basic point, like, can they write the ticket size I want? Is something that is often just critically misunderstood, I think. I mean, would you add to that?
Yeah, I mean, I think there's that lack of knowledge that you say if you're really early on. It's like, who tells you? Where's the book that says, here's all the investors, here's what they like to invest in, here's how much money they'll invest, and here's what they don't invest in. It's not that clear, and I think it's really hard as an entrepreneur to actually go into it, because you think how many angel investment organisations there are in the Northwest. Yeah. And then you go into VC and there's private equity, and actually you can get debt from a bank, you can get debt from other organisations as well, so Northern Powerhouse investment funds. It's a really, really busy funding landscape, which is great because that means there's lots of funds out there, but it's actually quite hard to navigate. So the more help you can get for someone to actually sit down and go, what is it you're trying to do? What is it you're trying to achieve? What do you need the money for? And do that diagnostic. And there is support out there, and it's actually finding out who can have that conversation and help start you off on the right road, because, as you said, you can scattergun approach and spend an awful lot of time, which you possibly should be using it more in building your business and getting that support, really. So, I would always say, reach out to somebody who can actually put you in touch with the right person, really.
Yeah, when you look at kind of northern founders, Pretora did some research, which I'd recommend people to go and read, around funding who's powering the Northern Powerhouse. So there's some really great interviews in there with people who've raised millions of pounds and exited their businesses. But in the north, we're more likely to value funders who are local to us. So look at who invests regionally. then look at who invests in your sector, then look at who invests in your ticket size, and hopefully there'll be a Venn diagram that you can sort of use to drive your conversations intuitively rather than, that kind of scattershot approach.
Thank you very much indeed. So you bought us 5 minutes extra for the Fintech Showcase now. So you're going to see 17, if you stay, 17 companies have a brief pitch of what they do. So that might be a short circuit way of seeing something you appeal to. Just on one of the last points that you made, I found it was very good to pitch to the one you like least first, to practice on the thing that you don't want to be invested by. They'll pretty quickly tell you what you're doing wrong. Right, so Julian, you're going to compare, I'm going to ask the questions, is that correct? Yes?
That's it.
Right, one rule, strict 5 minutes. Is it 5?
It is, but with the opening talk slightly longer. But yeah.
What?
I'm going to lay out the rules now, Chris. Yeah.
Good, because last time we had someone talk for 25 minutes on a 3-minute pitch.
Yeah, that wasn't good. So this part of the day is one of the most lively part of the day. You get to hear from, as Chris says, 17 fintech speakers, fintech entrepreneurs. They have 5 minutes each. So those of you that are talking, there's a timer down here. It'll run out on 5 minutes. You then have time for a question. If you run over, you won't have time for a question, and if you start really running over, we will kick you off, because otherwise we don't get through everyone, and it's just not fair on the other speakers. So yeah, that's how it runs. This session is kindly sponsored by TIS, Bluebird Solutions, and so Neil is going to come and say a few words, and Justin as well, I think, to kick us off, and then we will progress into the speakers. So I'll introduce each of the showcase speakers, and then Chris will ask a question. Okay, guys, do you want to come and open us up for this session? Thank you very much.
I drew the long straw yesterday, so I have the privilege of addressing you all, but I will point Neil out so you can chase him earlier in the day. The timer hasn't started, I appreciate it. I'll try not to consume the whole of the 15. There we go. Good afternoon, everyone. I'm Justin Barnes, Business Development Manager for TIS Group and its UK subsidiary, Bluebird IT Solutions. Thank you, Fintech North, for the opportunity to address you all. We are proud to sponsor the Fintech Showcase and excited to hear the pitches to come. Knowing the pains of busy Fintech founders well, having been an entrepreneur in a previous life, the importance of such events to connect investors to opportunity and overworked entrepreneurs to capital cannot be overstated. So I'm reminded of what my wife and my bank manager have in common. Neither like to give me credit. So let me take this opportunity to give credit where it's due and applaud Joe, Ryan, Julian, Chris and the larger Fintech North team for the excellent work here today. It's a very, very good event. I'm joined today by my colleague and friend Neil Jenkinson. He's the marketing director for TIS Group. Neil, please stand or wave. He was originally born in the Northwest and he sits at SciTech Daresbury, this fantastic campus for SciTech businesses and increasingly, we hope, FinTech businesses. They've also got a linear accelerator if you've never seen one of those. For those at the back, our mugshots are laid bare. I think I'm slightly thinner in that one, and Neil and I will be here for much of the evening. So if you hear anything that you like, please do come and seek us out. Neil and I form part of the core UK team serving fintechs, and we help founders to engage with the incredible developers of TIS. So I can confirm our Java team is always caffeinated for peak performance, our Python team is always charming, our PHP team never goes AWOL, and our machine learning engineers are frankly smarter than the AIs they build. Our code always grades above C++. But to answer the question writ large, TIS developers and managers speak fluent finance and have spent 30 years working very deeply in financial services tech. So that's clearance infrastructure, that's implementing novel payment solutions, that's migrating core banking systems, making federated ID standards, and even helping the banks of Slovenia and Croatia with their transitions to the euro. So as you can see from the partner badge lineup, we are nigh on Eagle Scouts. So our enterprise customers, as well as fintechs, rely on us to create and integrate the best solutions from the likes of IBM, Oracle, Microsoft, Automation Anywhere, Numerial, and others into their IT organizations. This translates to, we are fantastic at and have large teams in payments, B2B integrations, identity, digital transaction management, all of which are fantastically important to fintechs, as well as robotic process automation, enterprise content management, business intelligence, and AI machine learning. Pretty much everybody does some AI these days. But we're less good at looking at the photographer when we do our company gatherings. This is a big question, and there are more qualified speakers that have addressed you today, so I don't want to overstate. I will merely echo. So UK financial services and banking have this fantastically proud history, particularly in payment innovation, lest we forget those 17th century goldsmiths issuing receipts, the precursor to that most useful payment instrument of the modern banknote and the cheque. But we've had an even prouder history, I would argue, in more recent times. And payment innovations seem to appear very often, with a splash, and create very large businesses. So everybody in the room is familiar with Revolut's peer-to-peer network payments, Checkout.com cross-border solutions for digital commerce, Wise money transfers, and Remitly's mobile payments. There's loads of them, and they're amazing. So the vital stats, you've probably seen them before. It's 170 billion to the economy, it's 1 million jobs, it's 10% of fintech unicorns, and 100 tech unicorns, more than the rest of Europe combined. And the UK continues to attract more fintech investment than the rest of Europe. So it is kind of amazing. And the fintech subsector, it's fair to say, is the beating heart of the R&D and innovation centre for financial services. So they take investment from, they serve, they compete with incumbent players, and they create these really compelling new user experiences that we're all benefit from today. And the agents of change, these wonderful fintech entrepreneurs are in the room. It's no surprise then that TIS Grouper so warmly embraces fintechs. And we seek to address the biggest challenge that we see at Series A. So Ernst & Young and Innovate Finance, they have their annual census for fintechs, and pretty much ever present that attracting qualified and suitable talent remains the biggest challenge. So TIS Grouper's Venture Builder programme has the mission to help plug this gap, providing fintech founders with a managed, blended team of developers, consultants, analysts to design, to build, and to scale digital products. There's lots of parts to that journey. Fintech founders in the room, we're very, very much aware, and we like to help with as many of them as we can. So the regulatory and compliance piece, building front-end UI UXs at the speed of a data packet, building secure and scalable back-end systems, and making those gazillions of integrations that any new POC or commercial release needs to function. So unlike Tom Hanks and Wilson on that tropical island, no fintech service can exist in a silo. And not every tech or SaaS provider, data broker, payment processor, bank, credit bureau, regulator will give you a nice API. So anybody that's willing to take on the integration challenge is your friend if you're a fintech founder. In some small cases, and I'll flag this as an opportunity for everyone pursuing investment in the room, we also work with VCs in Croatia to help UK fintech founders to raise additional funds. But this is usually only the case when you're relatively small and you're able to port, let's say, half of your engineering team to the continent. Shout if this is you, please do chase us if that's the case. I was about to follow my northern friend in adding an expletive. So, Neil, I thought you were meant to delete this. I can't remember if this was to wake the sleepers or to make the presentation unforgettable. I'm married to a European, so I think I'm allowed one small punch, but let me channel the spirit of Brexit for a pre-Christmas groan, if not a smile. So they say in heavens, you've heard this before, that the cooks are French, the policemen English, the mechanics German, lovers Italian, and the bankers Swiss, while in hell the cooks are English, the policemen German, the mechanics French, the lovers Swiss, and the bankers Italian. Well, on this I cannot comment, but I will say, if you're a fintech founder seeking tech angels, remember your most heavenly IT partner will most certainly be Croatian. So I was scared to see what was on the next slide. I'm afraid my crystal ball was confiscated at customs yesterday, so let me renege slightly on the grand promise of a full foretelling of the future of banking. Such things are veiled in uncertainty. But let me speak to consumer behaviour, where the direction of travel is decidedly less foggy and potentially of great interest and import to fintech innovators. So many fintechs focus on and continue to disrupt the consumer user experience, and in so doing, win droves of new customers, sometimes aided and abetted by the same legacy banks that provide infrastructure and resources. So let me share some of our observations to add to the excellent comments by the VCs and AWS and similar today, so you can kind of feed them in. So we've all become cyborgs, and younger generations most of all. So slinging and pinging instant messages were roaringly popular even before COVID-19 made us all telepresent remote workers. Chatbots and live infrastructure are now the new normal, no surprises there. But interestingly, texting remains the preferred communication, and IRL is continuing to be passé. It doesn't really matter if that's on screen or perhaps visiting a metaverse metabank branch. We don't see this trend reversing. And intriguingly, as a comment to throw in, if you've ever seen the Accenture offer and their vision of how big the opportunity is for doing business in the metaverse, I would encourage you to do so. So it's not a flash in the pan, it's that they take the view that it will be bigger than some of the innovations in the internet. So yes, sign up the relevant crypto accounts, go join the sandbox and open your store. Anyway, to the observations. You would be forgiven if you're wondering how many slides I have left. I can see the timer clicking away. All our attention spans are shorter than ever. So one downside to cyborgization is we now have to cope with information overdose, packeted in small, sugar-coated, addictive bites, and the fight for user attention has never been more fierce. Close down that Facebook feed at the back. In contrast with pre-mobile banking times, when the points of difference were fewer, and so the motivation to switch small, and the inconvenience of doing so large, increasingly functional mobile apps, faster feature deployment cycles, and consumer-friendly regs and standards are de rigueur. AI-powered agents, Alexa, close that direct debit, Jeeves, how much did I spend in Italy, may reduce our attention span again. Well, the FTX meltdown has probably cast a long shadow on crypto. The long list of crypto projects 2007 onwards promising faster and cheaper ways to transfer value underlines the demand, the interest and the pressure for TradFi. Of course, TradFi is blessed with functional regulation, tends to do a better job managing deposits, I'm sorry to say, remembering my own portfolio. But still, the pressure remains to spin the payment wheels faster, particularly for remittances and cross-border. We are also observing in some of our retail banking clients that competing in other areas of service are becoming increasingly important too. Expectations for intuitive use, speedy opening and smooth operation are only growing. Walled gardens seem to be shorter than ever with more holes than before, and a similar arms race exists in identity. So for any fintech that's only just started to engage with that issue, I would encourage you to look early and look seriously. So how do you keep your KYC onboarding light, your 2FA processes and biometrics unobtrusive, your challenges at a minimum, and yet still control fraud, still keep safe custody of funds, and still make your compliance? Monzo's Swipe Right widget is a wonderful lateral example of how to win the fight in usability. OS-driven UI UX changes provide an easier on-ramp than their bloatware cousins. Fellow Samsung users will know exactly what I'm talking about there. The shifting sands in each new playground mean the opportunities to build uniqueness, albeit temporarily, come around relatively regularly. So hunting around for what Apple and Google are about to offer in the next generation is incredibly powerful. Paying with a wink through your AR glasses may not be as far away as you think. Auto-categorization of spends is somewhat ubiquitous, and embedded finance, we heard today from Weaver, seeks to bring firms from the real economy into the financial one. It's fantastically exciting megatrends. But when will banks monetize their rich data sets in new and interesting ways? Think Amazon-style recommendation algorithms using enriched data on the wider needs and wants of users. I notice you are searching for a Tesla. Can I interest you in an auto loan? I can confirm that you have passed your credit check. HSBC's Amy is a wonderful example of the growing superpowers of chatbots and the AI machine learning and natural language processing engines that power them. They fit the form younger users expect, they can increase customer satisfaction and lever fewer human operators. So for enterprise players, your first foray into AI, the fastest ROI for such an IT project is probably to build a better chatbot. While Starling Bank gains kudos and awards for its technical innovations, the vertical cards offer shows that the points of difference when you're competing in a busy marketplace need not be world-changing to be compelling. Responding to habits on a grander scale in this ever-present puzzle of how to repurpose the branch network, we particularly enjoyed this Spanish bank's Imagine Cafe. Food, entertainment, culture, and banking all under one roof. So TIS has worked on such a project in Slovenia, pretty much the similar format, and so we believe this is not a flash in the pan. This is potentially a set of things to come. NatWest continues to trailblaze in usability and features, winning awards as it goes. We very quickly learn whomever gives the best outcomes will ultimately have the stickiest customers and the greatest margin opportunities. They might even tell their friends too. Perhaps the biggest conclusion I can offer, wearing my Mystic Meg hat, is that in this trend watching and trend making game, it's probably a good idea to observe closely the banks. Big legs can move fast too, and they pack quite a kick. So for me, the most exciting section of the day is about to come. I hope I haven't stolen too much air from the Fintech founders. I wanted to offer a few words of wisdom from my favourite VC, Eugene Kleiner, an Austrian-American engineer, founder of Kleiner Perkins, investor in 300 plus tech deals, including Google, AOL. Some of the folks in the room may already be well aware of Kleiner's laws, but I always take amusement and take inspiration from them. I also hope it gives a little counterpoint to the gloom speak of the 2023 market correction and perhaps some of the challenges founders are finding with the suppressed PE valuations. It absolutely is a harder time to raise than it was in previous months. Make sure the dog wants to eat the dog food. I translate this as no matter how groundbreaking a new technology, how large a potential market, make sure your customers actually want to buy the service. Even turkeys fly in high wind. I translate this as in times of strong economies, even bad companies look good, but great businesses start in all parts of the economic cycle. It's difficult to see the picture when you're inside the frame. Translation for me, along with an open mind, open ears, and creative and lateral thinking, I see this as a nod to picking the right partners that can give you fresh perspectives and spur on those eureka moments. Venture capitalists will stop at nothing to copy success. Invest in people, not just products. Again, I translate this one doesn't need translation. Building a high-growth business with an innovative offer need not require the creation of a new branch of science. Copy unashamedly, as VCs do, and much the same mantra, invest in good horses when you're building your founder team. When money is available, take it. The time to take the tarts is when they're being passed. Well, the last Kleiner law needs absolutely no translation and provides a wonderful segue to the business of the Fintech founders trying to raise money. So all that remains is me to thank you for your kind attention and to wish good luck to all those pitching here today. Justin Barnes, TIS Gruppe, good luck.
Thank you very much, Justin. Okay, so that has given us a few little things to think about and some great insight into what's happening in the world of fintech. Right, we're going to start the pitch section of the showcase now. So first of all, we're going to hear from Shoaib at RD Vault. Where are you? There you are. So this is, to use one of the phrases that we had on the funding panel earlier, this is not your first rodeo either at Fintech North, is it? It's good to have you back. Looking forward to hearing what's been going on. Okay. Got a timer down there.
Smashing. Okay, great. Well, I don't think I'll be able to share any wisdom on my slides, but I will promise Chris it'll be less than 25 minutes. I've got it down to 15. Okay, so what will we cover in the next 5 minutes? My name's Shoaib. I'm the founder of RD Vault. We're a software platform enabling businesses to claim research and development tax credits in a time and cost-efficient manner. We're a Manchester fintech business. We've been going over for a number of years. We're VC-backed as well. Recently won the Tech Nation Rising Stars Award and also the GP Bullhound Northwest Most Innovative Company Award as well. Our platform allows businesses to claim R&D tax credits, and it connects to ERP systems such as Xero and Sage, etc. And we've helped businesses claim millions of pounds, processed over £750 million of transactions, and we've sort of grown from strength to strength. What I thought I'd do today is discuss some of the legislative changes that have come into force which will impact SMEs and startups, and also to provide an insight into the Manchester ecosystem and how we've benefited from the grants and fundings available to us. We're number one on Trustpilot. We're quite proud of that, actually. We've helped listed businesses claim research and development tax credits, right down to bootstrap businesses, and we're growing strength to strength. Okay, I wouldn't be a founder without pitching, so what you'll see here is a lot of R&D boutiques out there do pull pants down when it comes to charging 10, 20, 30% in terms of R&D tax credits. We have a flat fee system, so depending on which band you're in, you'll pay the respective fee contingent upon receiving your R&D claim. On average, customers pay about £2,000. Okay, so the autumn budget and how it impacts R&D tax credits. First and foremost, up until 1st of April 2023, businesses can claim 33 pence back for every pound spent on R&D. That's going to be reduced to 18.6 pence, which is a reduction of around 45%, and it's probably to help pay for the vaccines we've been having over the years. Okay, larger businesses, so this is the likes of Rolls-Royce, BAE Systems, but also companies that are in receipt of grant funding, such as Innovate UK grants and Smart grants. What they'll find is that businesses are actually going to receive 16.2 pence, as opposed to an effective rate of 10.53 pence for every pound spent on R&D. So again, subsidised R&D will give you more returns from an R&D tax credits perspective. And also the government seems to suggest that larger businesses give you more value for money than SMEs do, unfortunately. If your R&D is overseas, be it Croatia or elsewhere, unfortunately, it won't qualify for R&D if it's a non-UK company invoicing you from an R&D tax credits perspective. So companies, consultants who are charging UK businesses might want to change things and how they operate. And also you might want to start thinking about your subcontractors, because from the 1st of April they won't qualify. Amazon, AWS costs, Azure costs, they'll start to qualify for R&D from April as well, so just be mindful of that. If you haven't made an R&D claim before and you're not accustomed to making R&D claims in your business, as at the 1st of April 2023, you will need to notify HM Revenue and Customs in advance in order to secure making an R&D claim. So just be mindful of that and when you speak to your accountants and advisors. Okay, so some of our recent wins. Number one, we received Innovate funding. We won an Innovate UK grant to go out and explore the US and North America in particular, so US and Canada, with some intentions to grow in North America. We won a £45,000 AI Foundry grant to explore some machine learning and artificial intelligence, which we've started to do with the University of Manchester. And again, this is local funding. We won an internationalisation grant of £9,000, which allowed us to update our website. And again, speak to your DIT representative in order to try and access these funds as well. And finally, we won the Tech Nation Rising Stars Award. So I've got 25 seconds left. So we're only halfway through. Okay, so what's happening next? I promise you, this is the last slide. Number one, we're moving into some larger premises. The pool table's getting upgraded to a snooker table. So we need a bigger space. We are expanding into the US, and we're thinking of Austin. There's potentially an acquisition in mind. And we're raising the Series A investment, and we've grown substantially over the last sort of couple of years as well. So thank you for your time, and I welcome any questions you have. Thank you.
Goody, I've got one. So, about a month back, maybe 6 weeks back, there was some news released about fraud in relation to R&D tax credit, and there was calls for it to be completely dissolved as an option. What's your pivot with your platform should R&D tax credit be taken away completely?
Yeah, it's a good question. So R&D tax credits won't be abolished, that's certainly for sure. And the reason is because Germany didn't have an R&D tax credit scheme up until January 2021. and they saw a mass exodus of SME businesses, or a sort of forecasting an exodus of SME businesses moving away from Germany. So again, they introduced an SME scheme. Will it stay? It will. Will it be less favourable? That's probably going to be the case. In terms of our pivot, we do have a few other things in the pipeline. Number one is that we're going to start developing verified, trustable and financial transactional data. So this is data that comes from your Xero, comes from your open banking, but comes with a timestamp, or similar to when you DocuSign, so that other third-party businesses and the API economy, as it were, can start trusting the data. So that's something we've already started doing. And the other thing we're doing is introducing new services such as grant writing. Upon our recent success, we've got a lot of experience of doing that, and also facilitating R&D and drawdown loans against grants as well. So those are the sort of immediate pivots, at least.
Fantastic. Autofill R&D applications for Innovate UK grants. I would use that, definitely.
Great stuff.
So thank you, Shoaib. Bye. Thank you. Nice one.
Great stuff. Okay, now we're going to hear from a well-known name in Manchester, which is Access Pay, and Matt's going to come and talk to us. Come, Matt.
Yeah, thank you very much for having me, actually. It's my first time here at Fintech North, and I don't think it would be a Fintech North event without a payments company actually coming up and talking, so it's great to be here. So, firstly, what does Access Pay do? So, we essentially connect back-office software, so such as accounting systems, human capital management softwares, anything that produces a payment and connects it to the bank. So, this is quite nicely put by our CEO, Anish Kapoor. So, in leading the fourth generation of finance transformation by connecting disparate systems and banks for an integrated, more efficient, more secure future of finance. So, what does that mean? I was speaking to one of our delegates last night who actually put it better than I ever could, having worked here for almost a year. He summed it up in one sentence. So, that's building bespoke pipelines to the banks, so from accounting systems delivering the payments and also delivering the statements. So the problem we're trying to solve, so Access Pay have over 1,000 customers now. We actually were awarded one of the fastest growing fintechs outside of Manchester in 2018. And given our research, we've actually identified a number of issues that corporates are experiencing today. So currently, the corporates and finance teams are manually downloading their payments from their back office softwares, as you can see in the top left here, and they're manually transferring them to the banks, either logging into the banking portals, keying in the payments, or uploading the statement. Now, there's many issues with this, so we've experienced, which is insecure workflows, so human risks such as fraud, human error. It's actually quite time-consuming, and we want to give back the time to the finance professionals to add more value to their companies. So, how does this look? So, we introduced the fourth wave of banking. So, the first wave of banking being going into the branch, making the payment, instructing the movement of cash to another account. The second wave of banking is actually phoning the bank for the movement of cash. The third wave is internet banking, so logging into your banking portal, uploading a payment, keying in your payment details to execute the payment. And then we're introducing embedded corporate banking. So what does this mean? This essentially means that we're connecting the accounting softwares that are actually producing the payment instructions, and we're delivering them to the banks. Now we can do this in a variety of ways, such as through the BACS scheme, faster payment scheme, host-to-host, APIs, or SWIFT. So we can automate the payment. This is what we call the payment lifecycle. So we deliver the payments to the banks and actually deliver the statements back to the accounting systems. So we also offer a user interface in the middle. So for instance, if you've got multiple banking portals, we can replace the multiple banking portals with our one interface where you can manage all your payments and all your statements. So the benefits of a solution like Access Pay, firstly, is the connectivity piece. So we can offer real-time information and delivery of statements, providing teams with up-to-date, current and accurate information to base their decision-making on. We provide automation, so this allows our finance clients to actually give back a lot of their time, some of them up to half a day, to actually give more analysis and more strategic thinking to their business. We offer control, so control of payments, reducing the human risks such as fraud and human error, and also give you oversight of duplicated payments, errors in the payments, and any issues surrounding that. And then we also provide visibility. So with large companies come with large banking structures. These are obviously siloed between entities and teams, and we can provide instant visibility to the whole company as a group. So some of the companies that we actually help are here. So we don't specify per sector. Payments are pretty unanimous across all sectors, all company sizes, different operations in different geographies. We essentially bespoke build a payment solution for each of our clients, depending on the payments they're making, how they're making them, and to which geographies, etc. So in the example of ITV, they came to us and said, we've got 3 back office softwares that we're all downloading payments from. We've got 10 banking portals we're all uploading payments to. It's a bit of a mess. So they came to us and we built an interface for them where they could manage all their payments and all their statements in one platform automatically. So this has given them an enormous amount of time left, time back to them up to 25 hours a week, and also 100% automatic reconciliation in their back office software as well. So I've got 5 seconds left. Last slide. So with the partnerships, we're partnered with Finastra. So what they do is offer core banking systems to the banks. And traditionally, to set up a bank connection via host-to-host takes 3 months. However, we've partnered with Finastra to actually build these existing connections to actually set up clients in 2 weeks. So vastly improving the time, reducing the cost, and hopefully happier customers. With MasterCard, we've built a solution called Card to Account, which allows our customers to actually pay suppliers via their unused credit limits via their cards. So this is a working capital solution that provides them with payment solutions that they otherwise wouldn't tap into. I think I've slightly overrun by 40 seconds, but I hope that's okay.
Very good, thank you. Any questions from the audience? Okay, given your model is to build a bespoke portal, how do you work with SMEs?
How do we work with
How do you work with SMEs, startups, scale-ups?
Yeah, it's a good question. It depends on their payment operations. So we often find SMEs and startups don't have complex enough.
Move to the microphone over there.
Don't have complex enough operations for us to work with them.
Okay.
Our solution is, especially with a host-to-host connection to the banks, obviously quite expensive and labour-intensive to set up. So at the moment, it often doesn't provide the return on investment that they're probably looking for. As this changes towards APIs and the banks develop greater functionality, the cost will come down.
Okay.
And obviously with our Finastra partnership with the Fusion Payments to Go that they're offering to the banks, this reduces the connectivity time from 3 months to 2 weeks and hopefully provides a cheaper solution for SMEs.
Okay, thank you. Thank you much indeed.
Okay, staying with another Manchester-based fintech, we've got another Matt as well from Collective. A well-known name to those of you that have been to Fintech North events before. Matt, welcome to the stage. Okay.
Hello, hi all. My name is Matt. I'm from Collective. I'm a data analyst with these guys. I've been with them for about a year now. I am stepping in for our founders who aren't here, so I'm pretending to be a founder, look like one. Collective, I believe, are known to some of you here already. Amy's on the board, I believe, and knows Chris quite well. Collective, let's go what we are. Cool, so Collective in a strapline, basically our top level mission is Collective is an app that helps group organisers collect money for activities and large gifts by simplifying the money collection and payment process through enabling organisers to send just one link and receive payments in less than 5 seconds, regardless of the banking or payments platform the group's using. So basically we have this concept that people do things in social groups. We champion the organiser in a group. We believe that one to many organise the rest of us. So some of you in the room are going to be an organiser, the rest of you are contributors, doing things in a social group. most of the time we find that that person is either doing it for pleasure, they're of the organizer type, or they're doing it out of pain, just the person in the group who's just left to do the organising. And that person shouldn't be left out of pocket. So the platform is designed to help that person ensure that they're getting money up front ahead of a transaction happening. Do we need another payments app? Obviously, we've got things like neobanks, Revolut and Starling. We offer a platform agnostic system for people who are still doing things like bank transfers. Obviously, in neobanks, there's a generational gap between people who have adopted such things. So the numbers kind of show that our users do believe that we have a value to exist. Some of those top line metrics, so obviously we started in 2019, survived through the pandemic when obviously group activities were dead in the water. So we've done quite well to get where we are. 460 users, 24 million in GTV in dollars so far. An interesting fact on that is that 75% of that has occurred year to date. So we've done $18 million in this year alone. 1.6 million raised. We are seed stage at the moment. So if anyone's interested, come have a conversation with myself. We've done very little on marketing, $7,000 on marketing to spend. Most of that involved Amy, our CEO's brother, wearing a lot of silly hats, and that got some traction, but the core essence of the growth has come through word of mouth and built-in virality. So if you cast your mind back to COVID, we had the R number, and now you have K factor, which is basically a spread of virality. Our number for virality purposes is 13, so one organizer brings us 13 contributors. So we do see quite good growth in terms of bringing on one user, we get 13 contributors. Looking at where we're used, so we are UK based, born and bred in Manchester. We operate for users in the UK, so anyone can create a pot and organize a group function within the UK, but we accept currencies from anywhere. So these are some of the currencies and countries we've been used in so far. We have big news in the fact that we've just opened in the US. So we are now opening in America and have been for the past 2 months. Off the back of that, we're also now into Techstars New York on the Winter 22 cohort, which is a great achievement for us. We're really excited because there's a huge wealth of talent and knowledge and opportunity there. It's giving us a base of operations to work out of for the next 4 months. A huge thing for that is obviously 3,000 companies enter into the cohort. Only 10 of us got through. We're the only UK one, I believe, to get through, so 5% adoption rate. That's really good as far as I think so. So what makes us different? Okay, so what's our value proposition? So for the organizer, we give them a buffer and a platform to justify getting money up front in their group. We don't want to see people out of pocket. We give people a separate, isolated portal, a pot to keep work money or group money isolated out of bank accounts. If you're doing a whip round for a retirement gift or a leaving gift or a teacher gift, and you're distributing your bank account out to colleagues, some people don't want to do that. You would rather have an isolated space. We offer that. For the contributor side, no app downloads, no banking, no account needed to create. There's no excuse. We're basically offering a web-facing point of sale for a person to just take money via Apple Pay, Google Pay, or via MasterCard or Visa. So there really is no excuse. Down the line, we'd like to add functionality to automatically chase people when certain payments haven't come in, that kind of thing. Especially going into the next few years, in terms of the economic outlook, we really don't believe that people, especially organising the group who set things up for us and do things for us, should be out of pocket. So this is more of a visual of how we operate. So there we go, you've got your organizer, you've got your contributors in the group. Down the line, the value add would be, we believe that the organizer in the group has a higher value to a merchant down the line. These people are obviously upstream of transaction. There's an intent to do things together. If we go back to that number in terms of the 1 to 13 sort of relationship we have between a group to contributors, we're done. I'll be very, very quick. This customer, this user, should be basically a 13 times value add to a merchant if you're coming up with a gift or an opportunity to do something. That's pretty much us. Please download. Let me know your thoughts. Thank you very much. That goes so quick. Thanks,
Perfect. Yeah, no worries. Thank you. So, any questions? How do you make money?
Huh?
How do you make money?
Everyone always asks that, yeah. So yeah, the revenue side of things, we have operated on the past few years on donations. We do find per of the organiser side, we get about £9 per organiser on the donation side of things. We're experimenting with fees because obviously moving into the US, the pay per payment sort of side of things is a lot more ubiquitous over that side of the world. So for investment purposes, to shore up the argument that we can operate in a US sort of style, we're experimenting with fees. But that's pretty much it.
No, I would recommend nailing that if you want to raise money from VCs, because they're quite quantitative, so they're quite economic. One other thing, what about FX? You mentioned that you've got sort of multi-currency capability there. How do you fix the FX exchange rate? Who do you do it through? Who do you do it with?
Goes through Stripe. Stripe handles it for us.
Sorry?
Stripe. Goes through
Stripe. Okay, all right, fair enough. Okay, thank you very much indeed.
Good. Thank you very much, guys.
Okay, thanks, Matt. Next speaker is joining us virtually. Layla, are you there? You are there. I can see you. Hello. How are you doing?
Hey, how you doing? I'm sorry we're not there in person today. So Gemma, our head of growth, has COVID. So it still hasn't left us. So you're stuck with me today.
That's okay. That's no problem. You were here in person last year, so
I was, yeah.
It's good to have you back. So everyone's on a strict 5-minute timer, and you're not going to be able to see the clock. So I'm going to turn my timer on my phone, and it's going to go off loudly if you hit the 5 minutes. So
I'm going to talk really quickly then.
You're going to find out my football allegiances if that happens. So, okay. So Layla, take it away. Tell us how it's going at Tech Passport.
So the last time we were talking at your event, I think I'd mentioned that we were trying to make it easier for startups and banks to work together. So a lot has moved on since then. So we've developed a think tank of 15 banks, some of them the biggest banks in the world. And they've collectively come together because they appreciate and understand that they're all trying to achieve the same kind of thing. The processes are very similar across them. And I'm really proud and happy to say that they are willing to work with each other. And so from the think tank, we've developed a set of enterprise-ready questions. And so the use case for this is that quite often if they work with a startup that's not sold into a financial institution before, they might get selected for a trial. So they'll spend time putting that contract into place, by which we actually get that down to 1 day now. So it doesn't take a month to get a contract in place. They'll run the trial with maybe 3 suppliers, maybe 4. They'll fall in love with the supplier. The supplier obviously gets excited, will jump around, go back to their investors and say, yay, I'm onboarding with Citibank. And then they get slapped with a load of questions for onboarding. And quite often, some of the stories that we hear back is that they don't necessarily know what a business continuity plan is. They haven't factored this in. And this can be really, really painful and cause a lot of damage to the startup, factoring in time and costs that they hadn't really considered to make sure that they are compliant ready to work with a financial institution. It also hurts the bank as well, because they've obviously put time and costs aside for a project. They're losing opportunities. So it's not great for either party. So the development of these enterprise-ready questions is a real step forward to making it easier for startups and financial institutions to work better. So we are launching our brand new product, a new version of it in January. And what we're building into that is the ability for startups to answer the must-have questions, these enterprise-ready questions. So not the 400 or 500 that you might get asked, you will probably get asked if you're onboarded, but these are the must-haves. And as I say, these have been designed and requested by these financial institutions, which is really exciting. We're building in some other core capabilities in there. So we've built a supplier advisory board, because whatever we ask the banks or the banks ask of us, we want to make sure that actually it's fit for the purpose and that suppliers are going to be happy answering. And they came up with some really cool things. So we're going to be able to ask you, what kind of contracts have you won? Have you won a POC, or have you won a local service agreement? And with what kind of organizations? So you can really start to build up your picture and your profile, because people buy on trust. If we think about when you're looking for a holiday, you might go on to booking.com, you'll apply your filters. Now, the first thing that I do when I've selected and I've got my list of 100, I'm going to look at the reviews. And so this is about trying to build up that trust profile of you. So who have you worked with? Have you answered those questions? Are you competent? If not, we'll be able to help you, because we're building out an ecosystem of people to be able to help you. But other things like, have you won any awards? Have you been on any accelerator programs? So building up that profile so that the banks, at the point of need, know that they can engage with a certified supplier and know that that process for onboarding is going to be better. It's going to be better for the startups. really importantly, and it's going to be better for the enterprise companies as well. And I think the most important thing for us right now, we are in a recession, and it needs to be easier. It must be easier for the startups in our economy to survive. And so I'm really proud of the work we're doing. There's an opportunity for you guys to sign up. If you sign up in the next 2 weeks, you'll get early visibility of those questions. They'll be launched in January, so you'll have a month ahead to make sure you're ready, and we can give you some advice and support on it. That's Tech Passport. There's a lot more to come, but I think this is a really good step forward in making it a lot easier for the engagement between startups and financial institutions. Any questions?
Smashing. A minute within time. You comfortably avoided any football songs.
Okay, I was looking at your pricing model. Who pays? Is it the startup or the bank?
It's really important that we deliver value first, especially to startups. Like I'm a founder. I wouldn't pay thousands of pounds to be on a platform just in case I won a contract. So it's free for startups to join. If you get a request for an NDA or a trial with a bank and you win that contract at the end, hopefully with our help, then we charge you at that point. And it's a one-off payment. It's a 5% fee of the first year, and we cap it at £25,000, and we'll never charge you any more than that. But it's only on if you win a contract. So primarily, our model is the banks pay. So it's an annual subscription based upon the size of the organisation, and they pay annually in advance.
So it's a success fee based if you're a startup, but there's a subscription fee if you're a bank. Yeah, I can see that appealing to VCs. They like subscription fees. Very good. Thank you.
No worries. Thank you.
Thanks, Taylor. I was in Edinburgh yesterday at this Fintech conference, and somebody started describing to me a sort of need for what you do. It was a big corporate brand. And I said, oh, there's a startup called Tech Passport that does that, and they already were well aware of you, so you're obviously doing well.
Hopefully. We'll make a big announcement in January, I think, across some major newspapers. So yeah, it's important to us that we make the change. So hopefully, yeah, we'll add value.
Well,
thank you for having me.
Yeah, or if not before. Okay, we're staying virtual now, and we're going all the way to Brazil.
Wow.
Where hopefully we're going to be joined by Guilherme. Are you there, Guil? Have we got the link to Brazil? We need to talk about football on this one, surely. They've got a game in 2.5 hours. He's probably getting ready for that. Shall I go to...
They haven't appeared on the Zoom, so...
Oh, right, okay, thanks.
Great.
So when we talked on the panel earlier and you heard from Deborah about some of the international success stories, Rupi was one of those, so we will hear from Rupi. We're going on to Direct ID then, is that the... Jeff, is that the plan? Yeah? Okay. We'll do that. Okay, right, let's hear from Direct ID. So, James, it's just you? You stood Akeem down then? Is he having a day off? Oh, okay, right. Nice one. All the way from Scotland.
Thank you, everyone. 5 minutes, a lot to cram in. We'll see how we go on the slides. So I'm James Soren, Partnership Manager at Direct ID. We are an open banking company. So we have 45 countries covered, 13,000 connections, so more connections than anybody else. In the UK, all direct connections. Elsewhere, we are what we would call a super aggregator. So essentially, we've aggregated the aggregators. So if you've ever, I'll stick on the holiday booking, if you've ever been to Trivago, I guess that's a good model in terms of that we're able to sit across a number of different kind of aggregators and able to return the kind of best of breed, always on availability. Where we're different from other open banking providers, we specialise in getting data for credit risk decisions. So we sit in the likes of Provenair or FICO decisioning engines, helping lenders like Ford understand SME and consumer affordability and credit risk. All of our kind of senior team come from a bureau background. We've all kind of earned our stripes from the various bureaus. And from that, we recognise credit risk as playing a huge important part in certainly the bureaus have enabled a really vibrant economy. if you think of the UK market. But certainly there are gaps. And there's three things that I'm going to kind of just whiz through in terms of those gaps and why we're able to help and we're helping our customers today. So the first one is probably a position that we've all been in with the rising cost of living. If you think about the rising cost of fuel, the rising cost of heating a home, the rising cost of food, these are all pressures that we face, and similarly on the SME side, the kind of cost of business is all increasing. And where bureaus have enabled a great economy in terms of a kind of a rear-view mirror approach of have you made payments on time, what's your total indebtedness, it's not necessarily a forward-looking approach. So the credit risk decisions that were written many moons ago and have been very good were written at a time of stability. So they were looking at you as an individual under a stable economic environment and whether or not you were a good or a bad risk. And I think, as we all know and we all feel on a day-to-day basis, there's rising expenditure costs that we're all facing, and unfortunately the pound isn't going as far as it used to. So this is where open banking can help. We're able to provide a real-time view of a bank account, look at banking transactions, look at rental payments that are not on a credit report, look at how much you're spending on food each week, whether you have actually put some tin foil behind your radiator to save on fuel bills. This is type of account management information that we're supplying to lenders, both at the decision and also as part of the ongoing customer management throughout the kind of credit life cycle. And this is really important right now. I mean, it's a challenging time for all. And what's exacerbating the matter even further is not Arnold Schwarzenegger's head, but what I was thinking about was the FCA, and of course we all recognise that from the PPI advert, the first thing that comes to my mind when I talk about the FCA. But what I want to talk about is the consumer duty. And for me, I think it's a real mindset for lenders. It's actually making lenders be a retail organisation. Of course, they are a retail organisation. And it's about making sure that lenders treat you and I as customers. So I don't think they're able now to let us blindly be knocked down a credit life cycle where you go 1 down, 2 down, 3 down on your credit report. Now they have to act and make intervention to make sure that they're ensuring a good outcome. And that's incredibly difficult with the rising cost of expenditure, and of course open banking data that we're able to supply into that account management process is going to be really key. The third and final bit of where open banking can help is around the kind of credit invisibles. So these are people who have thin files, they may be 18, they may have moved into the country, there's a whole raft of reasons why they've not got a credit report. And these people are struggling to get credit on a day-to-day basis. And by sharing banking transaction data and proving that, that you're a good risk is actually getting on the map. I think the model of you need credit to get credit is outdated. And this isn't just a problem with consumers, this is a problem with SMEs as well. And I think the statistics are quite startling. So, very briefly, we've got 4 seconds. It all sounds very good, but ultimately, does it create value? And I think you can see from what we can prove there, we're able to reduce attrition, we're able to increase conversion by making sure people are more engaged and are able to go through that lending journey to a decision. So that's 5 minutes. The time is up. Thank you. I also have a QR code if you want to scan it and you want to catch up with me afterwards. Thank you.
Any questions? Okay, some of the things you spoke about there, you're talking about bank payments and accessing bank information as well as credit information. You mentioned some interesting behavioural ones there. You're able to track whether or not people are stuffing tinfoil down the back of the radiator. How do you codify that?
Well, I mean, it was a bit tongue-in-cheek.
I thought so.
About some of the advice regards to how we could be all more economical of how we can heat our home. But I think it was more around understanding how much of your wallet is going on a monthly basis to pay your fuel bill.
Mm-hmm.
So we're working with lenders at the moment and almost scenario planning out. So we can understand what your monthly fuel bill is today and look at what it could rise to. And when is the bubble going to burst? And what kind of risk is that to you as a lender? So yeah, so it was a bit tongue-in-cheek.
I guess the reason why I was asking was that as soon as you start codifying this stuff, it becomes digital. you are genuinely excluding people who are financially excluded. How do you plan to be able to bring those, people who have lots of real estate, lots of assets, but have never transacted before? How do you bring those? They're cash economy. They are people on benefits. You put a picture up there of someone who was sleeping rough. How are you going to bring them into the fold? Because they will have no payment history.
Yeah, no, they were invisible, but yeah, granted. So I think if you look at universal credit, and part of universal credit is it actually paid into a
bank accounts,
account. So that's where I'd say we would help bring those individuals onto the map.
All right, perfect. Thank you very much indeed.
Okay, so I think we are going to re-establish our live link to Brazil now. Guilherme, are you there? There you are. Hey, how are you doing? Great to see you. Cool. Oh, you need some volume.
Can you hear me well?
Yeah, you're a little bit quiet, so stand
Quiet?
a bit closer. Yeah, you stand a bit closer to your microphone, maybe.
I am using my headset, but let me just.
Yeah, you are, yeah. We can probably turn it up this end. So listen, it's great to see you. You've got a really short slot of 5 minutes to give us a quick update on what's happening with Rupee and your plans in the UK. So we've got a timer on here, so I'm going to tell you when you've got 1 minute left. Okay, I'm gonna sort of shout out. All right. Okay.
Okay. Can you hear me well, everyone?
Yes.
Better. Okay. Let's go. I will share my screen. Thank you, everyone, to be here. Before I was trying to join. It's not because in Brazil I made the whole scenario here. I would like to start with a huge thank you to Fintech North. 1 year ago, I was starting the business and I was presenting Rupee at the same place that you are today. So 1 year. So after that, 1 year ago, I was like 30 kilos heavier, a little bit more or a bit less, but I was there with Martin alone presenting what is the Rupee solutions, okay? During the whole COVID coronavirus pandemic, I needed, and Brazil had flagged by UK, so I needed to make a quarantine and everything, and I was there. And what happened in 1 year? In 1 year, Midas and Fintech North were the decision maker, game changers to us. So that's why I would like to thank Midas, Rachel, Martin Whitehead, that is our investor, Joe Rush, and everyone from Fintech North, Ryan, that is presenting. Ryan, I didn't find your picture. And also to thank Steve Andrews, that was presented to me by Joe Rush. During this journey, during this year, I met Oliver Galvin Jones, that is our country director, business partner from Rupee, co-founder from Rupee Manchester, Rupee UK. We hired James. We continue with Midas, but we changed our account, our account manager to Joseph Biden, that is always supporting us too. So I would like to thank him. And we achieved a lot. Rupee and Midas was, again, very, very important to our journey, and is very important to our journey. And now we are connected with Fintech North, we are connected with Manchester Digital, NatWest, and we are working with Coder Clark. Okay, and why Rupee Solutions is here in the Fintech North event? We saw that if you think right now, each one of you thinking an accountant right now, he will be always busy, always being called by the HMRC, by clients, by employees, and the accountant control everything in an Excel spreadsheet. This equation definitely is difficult to solve and definitely is difficult to manage. You definitely, any one of you try to reach your accountant someday and he wasn't able to attend you. And we our mission, our why is to change this current status quo. And how? We applied exclusively and made by ourselves the agile methodology that is made for accountants that we call RRP. That is why the name of the solution is Rupee. And with agile methodology, is in its base of the agile methodology, everyone is in the same page. Okay, the accountant, his team, and the clients. Using Rupee, you are going to be able to see every single thing that your accountant is doing, and your accountant will be able to communicate with you. So, as it turns out, we can save up to more than 300 hours per year per company for each accountant. So imagine an accounting firm with like 20 companies. So we improve collaboration and communication between the accountant and his team and his clients, or her team or her client. We avoid that and fine. And we are multi-entity. And gladly to Oli, that I mentioned before, we are made in Manchester. I can say that Rupee UK is made in Manchester. We have a team in Manchester. We are at NatWest program. Our office nowadays is inside the NatWest Manchester building. We have connections and networks in Manchester. We have more than, last year I didn't have one client in Manchester. Now we have 4 clients engaged and more. We engaged with a multinational company because we have a UK company to implement Rupee globally, okay? And we have a strategy designed to achieve more than 1,000 accounting firms in UK. And then stop here, because if you let me say and talk, I will talk during the whole day gladly in Oli and talking to you everything that we have done. It's a huge list. So if you want to know more, please scan this QR code and you are going to talk with Oli. Oli is located in Manchester. He lives in Manchester, and he is completely at your disposal. Thank you very much, everyone.
Fantastic, thank you.
Thank you.
Is he still there?
Yeah.
Are you still there?
Yes.
One question, are you looking forward to the football in a couple of hours?
Yes.
Are you feeling optimistic about Brazil's chances?
In the World Cup, I don't know, but definitely today, yes.
Okay, cool. Well, we're all looking forward to seeing that one. It'd be great to see you in person in Manchester sometime soon. Good luck with everything, and thank you for giving us all an update.
Yeah, but last but not least, I was there in September, but now Rupee UK has a person, a director that you can talk in person to. So if any one of you wants to know more, scan the code, copy the email, send hello to Ali, and he will meet you in person too. Okay? See you everyone soon.
See you soon.
Thank you very much.
Okay, fantastic. So now we're going to hear from Aled at CloudSoft. Aled, welcome.
Okay, so thanks everyone. My name's Aled Sage from CloudSoft. We help companies to migrate to the cloud and use the cloud better. For people already using public cloud, we help them to follow best practices, to make their systems more efficient, more secure, more cost optimized. But over the next few minutes, I'm not really going to give a pitch. Instead, I'm going to talk about sustainability, which is one of the things we help our customers with, and one of the things that lots of people in the room will care about. So first of all, the scale of the problem we're talking about is huge. In the tech industry is predicted to account for about 10% of electricity use by 2030. That's on a par with the aviation industry, which is the environmental bad boy that we all like to criticize. So obviously we need to do a lot to try to improve this. And lots of organizations agree that they can improve their sustainability practices. I don't want it to be all doom and gloom. There's lots of things that technology is doing well for the environment. We are making the fintech industry more efficient, which obviously will decrease the environmental impact of many different practices. Technology is being used in many inventive ways to improve the environment, from detecting water leaks through to analysing satellite imagery and so on. But for this audience, let's focus on what us as fintech organisations can do to improve sustainability. So this is all against the background of aiming for net zero by 2050, or for Manchester, the aim of Andy Burnham is to get there by 2038. So this is filtering through into legislation in the UK and the EU. So for example, we've got the Corporate Sustainability Reporting Directive, which for both SMEs and larger organisations are going to force us to have to report on our findings. Even if this is not a legal requirement for you yet, then often supply chains are increasingly looking for information from their suppliers about their environmental impact so that they can report on their end-to-end pipelines. But measuring tech emissions isn't as simple as you think. Or, well, actually, if you're a cynical bunch, then it is hard to get people to report that well. There's a lot of greenwashing in our industry, and some of these reporting regulations are trying to make that greenwashing harder. So what does that mean? We've got to think about the different scopes of emissions. So when we're thinking about measuring our technological impact, so we've got scope 1 is direct emissions. So for example, do you have gas heating in your buildings? Scope 2 is things like electrical usage, so for data centers and running computers. Scope 3, though, is the value chain and the other indirect usage. So for example, your employees commuting to work, or if your employees work at home, then they're using electricity in their house. And actually, that can account for about 3/4 of a tech firm's emissions. And many reporting things just now entirely ignore scope 3, which means that we're not really looking at the environmental impact properly of these organizations. So moving on to what can we actually do to make our companies more sustainable? Well, given I work for CloudSoft, not surprising, I'm going to talk about cloud. So public cloud is a great way to make our technology more efficient. If we look at, for example, in AWS, their data centers are on average 3.6 times more energy efficient than your average US data center. The hyperscalers have the benefits of scale in order to be able to just do things more efficiently. They're also aiming to use more renewable energy sources. For example, AWS aim to have all of their data centers using renewable energies by 2025. Also, for the reporting, the cloud providers have sustainability report features that can tell you about the CO2 equivalent for the services that you're using. Of course, these reporting facilities are quite primitive. They're limited just now, but they are getting better. So, as well as moving to the cloud, we're also interested in using the cloud more efficiently. If you just treat it like another data center, it's not going to be efficiently done. So we need to think about things like turning stuff off when it's not needed. So that could be just making sure that when virtual machines aren't needed, that we turn them off, or that disk snapshots aren't left lying around forever. We also need to think about auto-scaling, so not just provisioning for peak load, and right sizing. So one of the great things about public cloud is that we don't need to have a crystal ball to think about capacity planning for the next 3 years. But the other side of that is we need to keep on continually revisiting those sizing decisions that we're making and make sure that we're doing things efficiently. The added benefit of all of this is that it's going to link into our costs. So if we look at what our cloud costs are, they are correlated to our environmental impact. So there's a lot of benefit for actually looking at sustainability from a cost angle. Both of those are passions of mine, very keen to talk to people about that afterwards. Yeah, if you want any help with reducing your cloud costs or improving your sustainability, we'd love to chat.
Okay. Questions? Do you collect data or have data on the tech efficiency of different UK corporates. So if I pointed at a company in the UK, say the FTSE 100 or the FTSE 250, could you identify what they're good at, what they're weak at, and score them, rank them, rate them?
Not accurately. So there is some reporting going on by large organisations, but there's a lot of greenwashing in that.
Yeah,
that's
one
of
thinking.
The reasons why we need the regulations that's actually going to force people to report in more standard ways, and ideally report on the scope 3, which is the vast majority of their emissions. Obviously, this is massively important if we're trying to have some ESG fund that's going to target the right companies.
Which is exactly what I was coming to, yeah. Okay, thank you very much indeed. Perfect. Thank you.
Thanks, Alec. Pleasure to welcome Irina to the stage from Kind Geek, another international speaker in many ways from Ukraine.
Hello, everyone. Thank you, Fintech North, for inviting me. I'm Irina Pov. I'm a business development manager at Kind Geek. It's an honor for me to speak on behalf of my company today. I would like to start with a short video. So this is Lviv. Lviv is on the list of UNESCO Heritage World List. It's also one of the main IT hubs of Ukraine. One of 3 main IT hubs of Ukraine. We used to have 31,000 of IT experts last year. This year we have already 100,000 IT experts in Lviv. Over 500 of IT companies. Population of Lviv is over 1 million. This September we hosted IT Arena, which is IT exhibition, one of the biggest IT events in Eastern Europe already for 9 years. The reason I'm showing this video is not only because I am from Lviv and because my company is based in Lviv. This video is on a platform called Lvivland. It's one of the social responsibility projects we worked on with our Lviv City Council, and social responsibility is one of the main values for us. So we are based in Lviv, Ukraine, and we also have office in Tallinn. Lviv is only 44 miles from Poland. It's western part of Ukraine. We are a full cycle software development company. From the very launch of Kind Geek, we were platform of growth for our clients and our people, and we strive to deliver excellent client experience at our company. We work a lot with startups, especially from United Kingdom in Fintech. So as I said, social responsibility is one of the main values for our company. We work a lot on projects supporting Ukraine and IT community. Also trust and transparency and sense of beauty are cornerstones of our company. This is our team. We are Kind Geeks. We are a people-oriented company, and we are people who care about others, and we do care about equality. 42% of our team is female. As you can see, we are also very pet-friendly company, and we are also very obsessed with technology and fintech. Within the last 7 years, since we were founded in 2015, we grew up to 200 of people, and we continue growing. We are very proud that 70% of our new projects come from references. KindGeek is a fully agile, data-driven organization. Core of our business is engineering and advisory services, and we also have our in-house academy to train our staff. So engineering office consists of back-end, front-end, mobile engineers, quality assurance engineers, DevOps engineers. We have a team of designers. We have a project management office, including business analysts, delivery managers. Is it 37 seconds left? So we, as the full cycle software development company, we provide the whole range of services from business analysis, product design, development to maintenance and support. We work with big data, data science. These are several of our clients from United Kingdom, like Decta, Yaya, Easy Money, Hyperjob. Work a lot with them. So we provide development of digital banking solutions, financial, mobile and web applications, white label solutions, wealth management solutions, and maintenance of modernization of existing services. It's all 5 minutes. We are currently most of all concentrated on white label solutions. I think everybody knows that the reasons why clients choose currently white label solutions to economize on budget, on efforts, on time, and you really need to find good experts to develop new fintech project. So this is one of our current projects from United Kingdom. It's one-stop small and medium enterprise neobank solution for small and medium-sized enterprises. Another multi-branding banking platform is also our UK white label solution. So the reason I'm here speaking today, we have mainly clients from London, and we are looking forward to have clients from North as well. So please come to me, talk today, or drop us a line. We'll define your needs, we'll design and develop a product for you and succeed together. If you are next week in London for Fintech Connect, please come and meet us. Our co-founders will be exhibiting there. Thanks a lot. I'm very sorry for overtiming. It's very exciting for me to be here today. Thanks a lot.
Thank you. I can't speak for the audience, but personally, I'm more than happy you're here from Ukraine, and I'll support you in any way I can for reasons, and we all know what those are. So, thank you for being here. Interested in your connection to Tallinn? My wife is Estonian. Who are you working with in Tallinn? Do you have any clients you're building?
In Tallinn, we have our own office.
Mm-hmm.
Yeah.
And are you building solutions for Estonian companies as well?
No, it's mainly United Kingdom. We have clients also from United States, Cyprus. Recently, we also worked with United Bank of Africa a while ago, but it's mainly United Kingdom.
So your
We love United Kingdom.
So your engineers are based in Ukraine and Tallinn as well, yeah?
Yeah, so engineers are based in Lviv, Ukraine. Most of them are still in western part of Ukraine and they don't want to leave. So I moved here to Manchester a few months ago, so I can come up for coffee, for a chat. We are members of Manchester Digital. Some people work also from Poland for other parts of Europe, but mainly it's Lviv.
Okay, well, thank you for coming.
Thank you for having me.
Georgia, yeah. So we're staying in the sort of Central and Eastern Europe region, and we're going to hear from Elando from Bulgaria.
Hi guys, nice to be here. First time in Fintech Connect, kind of fantastic event. Thank you for Joe, Jonathan, and Ryan and the team organizing it. It's really nice. When I came here kind of a month ago, when we were thinking of setting up an office, they said, you must come to this conference, it's really worth it. And there you go, it's so great. So, Ewando. Okay, Ewando. Who we are? We're an international company specializing in developing customized software solutions, very specialized with fintech, about 65 to 70% in our projects fintech, and we do all the way from consulting, engineering, and we can do cloud solutions, mobile solutions, cybersecurity, blockchain. What makes us a little bit different is first and foremost very in-depth expertise within two verticals of fintech, being payments and insurance, and we've worked with startups, scale-ups, and corporates within these verticals, and we're very happy with the solutions we do on creating new digital products and services for them. We do financial swap, mobile applications development, help create digital insurance and digital payments products as well, all the way to blockchain. That's logs of some of our clients. As you can see, some of the big corporates, some scale-ups, some startups. But I would say I'm most excited to work about scale-ups because actually we can grow together, and there's nothing more exciting to see a product which is being created, shaped, developed, and being successful. That's some of our partnerships and accreditations, some of the technologies we use, and what kind of the main pillars of our development is pretty much based on people, technology, and process, and we have a very solution-oriented mindset, trying to really find a solution to a business problem. That's what we do. The three types of customers we work with is startups, helping them with actually putting some flesh on the concept, creating the proof of concept, the MVP, scale-ups, as the HoneySpot as I said, these kind of fastly growing companies needing not only resource, but needing expertise, kind of as excellence in development, framework, basis to really kind of be able to scale. Just a little case study I have, we work with Brazilian companies, Brazilian fintech scale-up, which is in the payment sector and is growing 700-800% per year. And they do this because we help them as technological partner to kind of fortify this growth. And we work with big enterprises where we actually work on a big digital transformation programs. That's what we do with Allianz, digitizing the whole insurance process from the beginning to the very end. Our team, currently based in Bulgaria, 4 different offices, about 70 people, growing consistently. We grew 100% last year. We hope to grow 100% in the next couple of years as well. We decided to come and open an office in Manchester, probably about 6 months ago. Now everything is putting out in flesh, and this is some of the reasons why we choose Manchester over London, despite me being living in London for quite a long time, 17 years, I would say, but we kind of have been quite impressed by the local ecosystem, by the openness of the people, the friendliness, and really the energy of the city and the people has been quite interesting for us, and very happy to discuss in any way how we can help you deliver your digital product, service, or build it, or kind of change the industry you're looking for any kind of support or anything which can actually be positive for your business. And I think, I would say scale-ups. If anybody kind of is running a scale-up, is looking for a technological partner, kind of I'll be very happy to discuss. And I want to say that we want to be slightly different, and we don't want to do outsourcing, nearshoring. We want to do onshoring. So what we'll be doing is employing people locally, engineers from the excellent university, specifically University of Manchester, and building a very strong delivery unit here so we can service our UK clients from Manchester, which is another reason we're here. Thank you.
Well, I think you had the audience at a city full of energy and so many positive comments about Manchester, but then when you said, nearshoring and onshoring, I think pretty much if you can build a business here and you can build a dev team here, you'll be pretty unique because most people are sending their dev. my engineering team's in India, in Bangalore. I've just come back from Bangalore to see them. So if you can bring it onshore, then fantastic. Given the fact that it's very competitive, what's your most deep expertise? Is there any particular part of that fintech supply chain you're good at? Payments, banking infrastructure, front end, user design? Where do you expertise?
Payments and insurtech.
Okay.
That's where we kind of excel. We have the biggest kind of expertise there. We digitize the whole insurance process for a number of corporates in Southeastern Europe. We're very good in payment integrations, creating payment solutions, payment platforms as well, which can kind of link to different APIs, crypto solutions as well. So pretty much payments and insurtech is where
Insurtech.
our
Okay.
ultimate expertise lies.
Superb. Thank you very much indeed. Cheers.
Thank you.
Okay, now we're going to hear from Billy at Fashion. You hear Billy? There you go. Good stuff. Look forward to hearing about fashion. Welcome.
Hi, so I'm Billy, I'm from Fashion, and we are not a fintech, so you can zone out now if you want, but we are a marketplace, and marketplaces now make up 19.5% of all consumer spending. That's up from 13.6% just 2 years ago. Now this is obviously playing into the hands of marketplaces, but it's also playing into the hands of fintechs, as fintech startups in areas like buy now, pay later, escrow, payments, taking up a percent of all online transactions. So basically, the more successful marketplaces are the more successful fintech, so that's basically what my angle is here. But marketplaces are changing, so people are now, we're seeing the rise of niche, social, interest-based marketplaces. People don't want to spend their time online looking at filtering menus on the left-hand side of a screen. They want to spend it in ways that are engaging, fun, stimulating. They basically want to spend it with people who have the same interests as them and desires. And we can see this with the rise of social commerce, where social interactions and creator contributions assist the buying and selling of products. We can see this with the rise, with the fact that large social platforms are now implementing commerce features into their offering. But this is just an afterthought. If you go on Instagram, you see pictures of your friends, your family, people at the gym. This is not the environment for a shopping experience. We believe that the solution is to take the shopping experience of marketplaces and combine them with the discovery and interaction features of social media. And that's exactly what we're doing at Fashion for the independent fashion niche. Fashion is a social marketplace where customers can... fashion is a social marketplace for Gen Z to discover and purchase all things independent fashion. We're unlocking the $7.5 billion sustainable fashion market for Gen Z. 62% of Gen Z actually prefer to buy from sustainable and independent brands as an alternative to fast fashion, but the issue is that the market is still extremely fragmented, making discovery and purchase of products difficult and time-consuming. So on Fashion, customers will be able to discover independent brands and products all on one platform, interact with content from brands, friends and content creators, and purchase products through the marketplace, but also through shoppable images and videos on a social feed. For brands, they'll have a community that's dedicated to independent fashion, where they're not competing with resale, vintage and other named brands. They'll have access to a new audience, and they'll also move beyond the transactional relationship with customers through interactive and engaging content. And we know from working with brands that a key issue for them is managing inventory and sales across multiple platforms, and that's why we have integrated a unified commerce API into Fashion, where we'll get full inventory data and near real-time updates. Orders will be sent back to a brand's chosen e-commerce platform, and also they'll be able to maintain their fulfillment, their current fulfillment and delivery processes. So we are very early stage. We have built an MVP that is launched. It's a simple website marketplace where customers can buy independent products from independent brands. But we have seen some good traction. We've done 30,000 in GMV. We've onboarded 80 brands with over 1,000 products, and we've got an app wait list of 2,500. This has been done without any external investment, and we'll get on to why we're here now later. But there are current apps that do have their purpose, but we've taken the best aspects and created a whole new shopping experience. There is no other platform that is taking the community of independent fashion, or if we're going to put it to any other niche sort of shopping experience, we're putting it on the independent fashion, but there is no other community for independent fashion that encompasses the entire social shopping experience. So revenue-wise, we'll take a 20% commission on all sales made through the platform, but also once a live feed has been implemented, we will offer promoted content, in-app ads to brands exclusively selling on the platform, not only another revenue stream, but it also enhances the shopping experience for the customer because we're going to personalize through implicit and explicit data from them using the app. So for the next 12 months, like I said, we do have an MVP, but we are currently raising a pre-seed round, which is SEIS eligible. We're raising £300,000. This will allow us to finish the development of the fashion mobile app, allowing us to integrate the API. It will allow us to build the social features that we believe will take fashion to the next level, and it also allows us to begin to capture the UK independent fashion market and eventually become the one-stop shop for all things independent fashion. So fashion was founded by myself and my brother after my older sister was looking to set up her own independent fashion brand and ran into issues of trying to find one that was dedicated to independent fashion and also targeted at a younger audience. I was previously part of a startup called Campus, which was acquired in 2019. My brother has a successful street food business, nothing to do with fashion, neither of us has anything to do with fashion, to be honest, but we can run a business. So he's a successful street food business that has been what has funded fashion to date. We also have our technology lead called Alex Chin. He's a full-stack developer, serial entrepreneur, built multiple marketplaces and raised from multiple marketplaces in the past. Our CCO, Joe Williams, is a experienced business development professional at Oracle and L'Oreal. And we have two amazing advisors in Polly, who's ex-global head of community at Depop and advisor to Wolf & Badger, and also Faris, who is current head of product at Delhi and ex-Depop and ex-Bloom and Wild. So if you want to join us in creating an alternative future for fashion and being part of the next big marketplace, then please get in touch, or if anyone else you think you know will be interested, again, pass on.
Well, obviously as someone who's heavily into fashion and Gen Z equally, I'm going to struggle for questions, but what I will say was that was a bloody good pitch.
Thank you.
It was a very, very good pitch, and I think you need to get in front of a VC as quickly as possible.
Thank you.
Are you on a raise?
Pardon?
Are you raising right now?
Yes, we're raising now, so yeah.
So what's the ask? Most important thing you've got to do is you've got to...
So yeah, I did put it in, so 300,000 SEIS eligible, advanced assurance currently, pre-seed, so yeah, it's very early stages for us. We're only just getting into the investment side.
Okay, so you're looking for pre-seed 300k from angels, basically.
I think that's our route. I've spoken to a few funds, but fundamentally we're too early for the market.
No, don't do funds. Do angels and angel networks. Yeah. But unfortunately, I don't know any of those because I only know Fintech. But I got to say, it was a very, very good pitch. Well done. Well done.
Thank you very much.
Okay, I'd like to welcome Bradley from Trussick to the stage. There you are, Brad. Okay. I just want to say as well, we're merging in the drinks reception. So for those of you that have stayed this long, we appreciate it, and we're going to start bringing around some drinks shortly. So you don't have to wait till the end to enjoy the drinks reception. Right. Sorry for delaying you there.
Oh, no, it's all good. Hey everybody, my name is Brad Kahn. I'm the founder of Truzik. I'm a digital architect and social entrepreneur. I'm from the States. My mom is about 6,000 miles away, so she's not here to wash my mouth out with soap, so if I cuss, I apologize in advance. So Truzik, the music industry has a lot of problems. If you're an artist, you don't get paid well. It's difficult to make a living. If you're a listener, you constantly get bombarded with music that you don't like. Your music is scattered all across the world, all across the internet. You pay a lot of money if you want to go to an event. You pay a lot of money to Ticketmaster. If you are a venue, it's difficult for you to identify what type of music that your patrons and your customers want to listen to. It's difficult to find acts, DJs, musicians to come to your events. So, the biggest problem with the music industry now is that it is centralized, is that it's basically an oligopoly, a monopoly. And the exciting thing right now, the time and space, is that pretty much every problem that every industry, doesn't matter if it's music, has the potential to be solved now because of this thing called Web3. And so I'm going to spend a little bit talking about Web3 because I haven't heard any other of the startups discuss it. And so Web3, that's, when people ask me, I try not to go down a rabbit hole to explain. But essentially, you take the internet and compare it to the human brain. The human brain right now is very primitive in Web 2. And it's, think of it as, as a lobotomized human. And so, Facebook and all the issues that we've been having with social media are very much a symptom of that. But with Web3, it allows us to decentralize, and it also allows us to communicate on a higher level. And so, as human beings right now, we have 400,000-year-old brains, but right now we have almost godlike technology. The problem is that we're not putting that to use and applying that to solve the issues that we have. And so how does Truzik solve that issue for the music industry? And so if you're a listener, the great thing is your music isn't scattered across the internet. You can have all your music into one app. So it doesn't matter if you listen to Spotify or YouTube or wherever your music is at, they'll automatically collect and collate all of that, put it in one place. The type of music that you listen to is we use AI to put it into a fingerprint. And so there is no fumbling around. The music industry spends $6 billion a year pushing their music through pipes. And I don't even call it music. I call it a manufactured sound product, because that's very much what it is. And that's also a problem that not only Truzik, but a lot of other Web3 startups are going to look to solve. As an artist, the reason why you don't get paid very well is because the digital streaming platforms, they pay very poorly, and a lot of the reason of that is the protocol that they use. So at Truzik, we're creating a new protocol using Web3 so that we can use the metadata of music to really accurately track where all of your music is going. And so using blockchain and then using digital wallets, artists not only get paid automatically, but also none of the music streaming is lost. The estimated $6 billion a year goes unnoticed, swept under the rug. And so we're going to also work to recover that money as well. And let me make sure I'm not going to miss anything here. If you're the music industry, so we're not taking on the music industry. The music industry has a lot of benefit as well. So one great thing about blockchain and adding another layer to the brain is that there's a lot of metadata, a lot of information flowing around. We can provide that information as a service also to the industry. What our business model is essentially just subscriptions. So we get subscriptions from listeners. The total market for music streaming is 1 billion people worldwide. Spotify themselves don't even have half of that. They have about 200 million subscribers. And so before 2030, just Spotify, they plan to make $100 billion a year in revenue. We're hoping to just get 1% of that market by 2030, ideally within the next couple of years. And so the potential for revenue is very, very high. So obviously, I don't have my pitch deck up here. I'm very early days. I'm pre-seed, it sounds ridiculous if I give, an idea of the aspirations with Truzik. But the fact of the matter is that there's nobody else in the world trying to do what Truzik intends to do. And so if you take Google for an example, if Google is the Google of data and words, then Truzik aspires to be the Google of sound. Right now, we are in the Enterprise Exchange Program, and we also got a grant from the AI Foundry from the University of Manchester to help us build a proof of concept, some of our back end. Yeah, and to wrap it up, if it still doesn't make sense kind of what we're trying to do, if you take Spotify, you take Uber, you take Ticketmaster, you put it and cram it into an app, and you sprinkle and salt by a little bit of AI and Web3 on top, that's essentially what Truzik is going to be. And if we get a decent round of funding within the next 6 months, we can go to market with that within about a year.
You know, You're not allowed to leave yet. You've got to ask a question. Any questions from the audience? Well, I can see the problem at the back there.
Hey.
No? We have an audience question. Hang on, there's a microphone coming.
Basic question. So I'm currently doing research of NFT and Web3 technology, actually. So I was just wondering about, you were talking about the combination of Web3 and the music industry somehow. So I was wondering, what exactly is the framework or are you trying to sell us the concept of it? Or how do you make money out of it?
Yeah,
it's going to be 3 questions, I'm sorry.
Yeah, that's a really good question, and I didn't do a great job of touching on that, so thanks for asking. So the way that we monetize, the way that Web3 monetizes, is essentially selling non-fungible tokens. And so, you know, you're thinking about the Sustainable Development Goals, a big buzzword is circular economy. And circular economy is an important term to remember when we talk about NFTs and monetizing from Web3. So essentially, we'll have a limited amount of subscriptions of certain tiers, but those subscriptions will be NFTs. And so if you're a user, instead of paying a monthly subscription to Spotify and it just goes away, that monthly subscription is essentially an NFT. But the beautiful thing about Web3 is that Web3 is based off of a deflationary asset like Bitcoin. Another beautiful thing is as the business grows, that NFT could be worth more money. And so, does that make sense? Do I need to explain a little bit more?
I think the chances of you getting a postdoctoral researcher who's going to ask you the one technical, complicated question, I think everyone else in the audience would have dreaded getting that one question, but you fielded it quite well. I'm not sure about the fact that you are getting paid with an asset that is variable in price is a good thing. I mean, that's the fundamental risk around Bitcoin, but aside from that, I'd recommend getting a deck, right? If you're going to go pitching to VCs, you need to have a deck, absolutely. And you've got to be really, really clear in that deck about what your goals are. So you're raising finance, you're pre-seed at the moment, you're looking for investors. How much are you looking to raise?
I'd like to have 150 pre-seed.
115, yeah?
150, yeah.
150 pre-seed, so you're looking for 150. Have you looked at grant funding options? So
Yeah, I mean, we've got, what is it? I'm in the Enterprise Exchange Program, so there's I can't remember acronyms very well, but there's the Innovate UK grants.
yeah, Innovate UK grants is where I was going to start. Have a look there.
Another thing is that, you know, obviously being an American, I have open access to the grants and the markets over there, but I very much want to live in the UK.
Yes, I'm sure. I mean,
So I go to market in the UK first to sort out all the problems, and then we'll go to the States.
Test it on us when it works. Take it ahead. Good. Thank you very much indeed. Get the deck though. Wow, toughest question so far, and from the audience as well. Thank you. What are the chances?
Okay, we should have Phil joining us virtually now. You there? Hi, Phil.
Hey guys, how you doing?
Very good. Good to see you. Good to see you. You're on screen. We can hear you loud and clear. You got a tight 5-minute slot, so I'm going to let you get straight into it.
Great. Thanks a lot for having me, guys. Real pleasure, and hope the event's been going well. So my name is Phil Benson. I'm an entrepreneur. My background isn't in technology, but it's actually in food and beverage and retail. But I found myself in the technology world, which I absolutely love. I'm one of the co-founders of UK Black Tech, and one of the idea of magic of ideas and using entrepreneurship to bring something that's in your mind and bringing it to life, that to me is the ultimate thing. And I think obviously technology is a tool and medium that can create that transformation and innovation. So recently, and I'm here today to speak about my new startup, which is called Lokio. So with my background in retail, I was looking at how can I have a greater impact on the community and people who I'm trying to serve. So Lokio is a platform which I've built, where I'd built up a relationship with a number of different independent suppliers in the F&B industry. And the platforms which we're currently looking at serving those companies, those small independents, to me, weren't really doing a good job in the sense of they weren't really showcasing the passion, the innovation, the heart that goes into making smaller batch products rather than sort of like more mass produced. So when you had traditional platforms like an Amazon, for example, which obviously has a fantastic reach and eyes to the world, it wasn't necessarily sympathetic to the way that these producers actually made their products, and it didn't really showcase how they did that. So I created Lokio with the idea of showcasing the best of how these small independents make their products, and going into the heart of who they are, so the people behind the brand, not just the products themselves, and having that shared mission of saying, look, we've got a love for our community, we've got a love for employing people locally, and how can we help to grow that and showcase what we do in our areas. So Lokio was born with the idea of saying, can we create a platform where you can showcase independent producers? Specifically at the moment, we're working with beverage producers. So we're talking about craft gins, craft beer, craft wine, those sorts of products, non-alcoholic as well, which is also coming into the market. And can we create an opportunity where we're creating content and finding the real, what's the reality behind it? And it's not just sort of like a big brand pretending to be a craft, a craft product, but actually getting to really understand who they are, what makes their product valuable, and and showcasing that story. And we've connected with a number of different community foundations as well. So we wanted to make sure that the business which we were building had a virtuous effect, because I feel it's so important that the social impact is at the heart of every single business, regardless of what industry you're in, because actually, who are the people who you're trying to serve, and are we trying to make people's lives better? Because essentially, if we're building these products and services, we need to, yes, we want to make money, but we need to be making sure that that's aligned with making people's lives better at the same time. So we've actually got a subscription element which allows us to, things such as discounts, free competitions, free shipping, those sorts of things. But then we actually donate 20% to local community foundations. The idea is we want to aggregate the whole of the UK. So I'm based up in Yorkshire, but the idea is that we want to aggregate the whole of the UK in terms of regional producers who are doing amazing things in this space, and then seeing how we can grow that network and get people who really believe in supporting their communities and also buying products from outside of the community, but still knowing that actually there's going to be some benefit to their immediate community around them. So obviously, if anyone's interested in learning more, we've created an MVP, which is something that we've got to market, and it's going to be iterated on multiple times. I bootstrapped it to this point. At some point, I will be looking at investment, but not at the moment. I'm happy to sort of do the testing and get the feedback and then grow it from there. But certainly, it'd be good to get people's feedback. Our first sale was made outside of the Yorkshire region. Most of our sales have actually been made out of the Yorkshire region. So it shows that people have got an appetite for discovery and seeing something and finding something that's new. And I think if we can really showcase that in the products and services that we do to really inspire people to engage with it, then I feel there's lots of opportunities in terms of where this can go, but also where other people's businesses, regardless of what you're doing, can go as well. So I'm not sure if that's 5 minutes or not, but that's Lokio.
Literally just ticked 5 minutes, Phil. So you've timed it to perfection. If you let Ryan and Joe have the link that you want people to have a look at, then we'll put it in the write-up when we publish that after the event. So I don't know if anyone in the room was wanting to ask Phil anything.
Yeah,
cool,
I'll go.
Yeah. Oh, Chris has got a question for
you.
you.
Yeah, I've always got a question. So you provide provenance of product and service to shorten supply chains, make the value transfer more ethical upstream to producers and so on. You heard of a company called AgriLedger? It produces digital ID and provenance of products. Largely it works with the UN out of Haiti, providing IDs around fruit that's distributed globally. It's a bit like, what's the coffee supply company? Fair Trade. It's fair trade, but with blockchain sitting behind all the products that are produced. The person who runs it, Geneviève, I'm going to introduce you to her. So if you can just drop me a note, because I think there's probably a good tie-up with what you're doing. She just provides the technology that sits behind the ID. It looks like you provide the social infrastructure. So if you're interested, I'm more than happy to hook the two of you up.
No, 100%, and I believe, you know, obviously the last speaker mentioned a little bit around Web3, but yeah, I feel obviously things like the blockchain are going to be really important for platforms moving forward. Obviously, you know, I think a lot of them are just trying to find the use cases, but I think certainly with things like provenance and where you can track how the products are made, where it is, you've got a timestamp, you've got that credibility around it, and I feel blockchain's got a really powerful part to play in this industry. So yeah, that'll be fantastic to speak to.
It's less for UK at the moment. It's just that right now, for example, the UN is looking at ensuring products that come from marginalised countries are supported, their provenance is secure, and that people in the supply chain are not taking an unfair share of the money that's made. So I can see there's a hook up there for you, and happy to introduce. Cool.
Great. Sorry, can I just say one thing as well, just to sort of take, obviously with fintech in mind, you know, I have retail businesses, but you know, sometimes you need accessibility, you need transportation to be able to, so obviously opening it up in this way where you can hopefully have easy payment systems to be able to engage people who wouldn't ordinarily be able to have access to these products, I think is a really powerful tool. So hopefully that's opening it up to a new market as well.
Super.
Very good, Phil. Good to see you.
Thanks, Phil.
Good luck.
Thanks, guys. Cheers.
Yeah, man. Bye-bye.
Okay, our next speaker was going to be Amu, and Zub from Amu is tied up. He's got a client engagement that's pressing, so sends his apologies, but we'll have him back in future. So now we're going to hear from iTech Art. It's a very interesting organisation. So Tom and Sarah.
Perfect. Well, hi everyone. Yeah, great to be here today, and thanks for the team at Fintech North for having us here today. So as an introduction, my name is Sarah. I'm an engagement manager here at iTech Art alongside my colleague Tom. And yeah, we're just here today to tell you a bit about iTech Art, kind of what we do within the fintech space, and yeah, hopefully kind of give you a bit of light to what we do. So yeah, essentially we are a custom software development company. We have just over 3,500 engineers. So they are based primarily within our Eastern European locations. So we're located in Poland, Lithuania, Slovakia, most recently Bulgaria. And we also have offices within Central Asia as well, in places such as Georgia, Uzbekistan, and Kyrgyzstan. What do? We offer dedicated engineering teams. And that's kind of in, I suppose, kind of three fashion or engagement styles with Tom will go through shortly. But yeah, we offer those dedicated teams. We typically kind of start within the startup space. So we work with a lot of fintechs within the startup space and helping them kind of build out their product right from kind of, I suppose, the right pre-seed and kind of Series A, and helping them through the whole journey right through to IPO stage as well. We're examples of doing that with clients as well. So yeah, we have over 200 clients. Majority of our work is within the fintech space. We do work with other industries as well, but yeah, majority of our work is within the fintech space. And yeah, we partner with people such as Google, DocuSign, Stripe, Salesforce, AWS, as well as Microsoft. And yeah, as I said before, we have over 20 locations. And yeah, these were our delivery units, as I said, in Uzbekistan, Poland, Lithuania, Slovakia, with our sales and marketing within the UK. So actually within the UK, we just opened our office around 2 years ago. Our headquarters is in New York, but within the UK, we have about 10 people. And within that, interestingly, we have an in-house CTO. So he offers kind of a lot of leadership as a services role, services roles. And we also have a technical director within the UK as well, offering those kind of supports as well. But yeah, I suppose that's in a nutshell. I'll move over to Tom now, who can go through kind of a bit more detail about our services and kind of some of the case studies that we have within the fintech space.
Yeah, thanks for sticking around, guys. I will be as brief as possible to try and reward you for sticking around to listen to us. Essentially, we take you the whole way through the software development lifecycle. So from the initial planning, discovery phases, all the way through then developing the software, kicking off the project, and then also obviously maintaining and improving it. That obviously includes things like QA, UI, everything that goes into actually building the final product. We've probably got two different ways of working. Interestingly, this isn't the slide that I thought was going to come up. We've got two different ways of working. We either work through what we kind of call staff augmentation. It is essentially our teams reporting into your technical staff delivering your product. But we also have what we call pods, which are essentially self-organizing. So you'll have everything you need within a pod. You'll have a technical leader, you'll have project managers, you'll have UI, UX, you'll have QA, and you'll have the engineers you need to develop it. The second way that we work is through project basis, and I got challenged on this by Chris in Leeds a few weeks ago. And this is how we help smaller businesses, I think. It is essentially what we call a product discovery workshop. So we can partner with you at the very early stages, helping you with things like wireframing, building your MVP, and essentially give you everything you need to then go to the VCs or whoever you're going to raise finance, with the idea that hopefully we'll then be the partner that you choose to help build your product in the long term. Fintech, as Sarah said, has been a big focus for us over the years. I think it makes up about 30% of our clients in total, to the point where we have actually we've sort of developed essentially a bit of a fintech advisory platform. In the US, a couple of ex-Merrill Lynch VPs, they also started their own business. Serial entrepreneurs, one of them is a CTO, so very technically savvy as well. So we're trying to move into that space where we can really advise fintechs as well as just build their software. And of course, we do cover very cutting edge technologies like Web3, and looking towards doing more in that space as well. In the UK, we do offer sort of leadership as a service as well, so we've got a CTO and a technical director that sit with us in London, and they can be on hand to help with essentially any slightly more technical questions. There is a point of escalation, so essentially risk management for you. But yeah, essentially, I mean, these are the kind of clients that we've worked with. So as you see, we're kind of touching on a lot of different areas. Payments features fairly prominently in there. Unfortunately, as you can see, I put together these slides a week ago, and one of those clients now doesn't exist, unfortunately. Yeah, it's a pretty broad scope. I'm conscious we're running out of time, so I'll very quickly just put this case study up. It is an example of a startup, but it's also an example of how we've helped not just on the customer-facing technology, but also the back end. So helping a business improve their microservices and drive efficiencies and values through really optimizing the back end. So yeah, that's a little bit about us.
Microphone, yeah. Thank you very much indeed. So, two speakers always spells danger when you've got 5 minutes. And I think you had 2 speakers last time as well, didn't you? 3. You had 3, yeah. It spelled danger for me then too. But this time you were on time. Thank you very much indeed. So when I first met you, it was a few weeks ago. That was the Poland mission, that's right?
Yes, yeah.
That's right. So now you're posing as an NYC registered company. Which one are you, Polish or American?
Well, we're American.
Okay.
But Poland is our biggest development centre now.
Okay.
And we had Bart across. Bart was invited across as part of the delegate. So he was showing off what we do in Poland.
Those Central and Eastern Europeans, they're fantastic at development, aren't they? Exactly. Yeah, perfect. I'm not going to ask a question because we haven't got much time, but thank you very much indeed. Cheers.
Okay, earlier on we heard from Direct ID, and it's great to welcome Amicus, another one of the shining lights of the Scottish fintech ecosystem. So Chris, good to have you here.
Hi everybody. Firstly, thank you very much to Fintech North for having me down. Our CEO, Callum, has been heavily involved with Fintech Scotland for numerous years, but they thought they'd send the guy with the ginger beard down for some more Scottish kind of authenticity. So Amicus, we're a compliance and onboarding platform. So to cover off the actual problem that we solve, when you think of compliance, so KYC, KYB, AML, unless you work in that space, it's normally the bit where you go, oh, I've got to get this out of the way before I get to sign up my customers, onboard my staff members. So usually it's very manual, it's quite laborious, it's time consuming. There's also a lot of onus on the individual completing those checks. So you have lack of uniformity. Is one person's interpretation of a document going to be different from somebody else's? So before I kind of cover off how our platform works, a bit more about Amicus ourselves. So we've completed 1 million searches since we started up in 2015. Our revenue growth is 1,700% in the last 4 years, so thanks COVID for that. And that's actually led us to be the fastest growing tech company in Scotland, as named by Deloitte. We're also the 20th fastest growing tech company within the UK as well. So we have a variety of different customers across a variety of different sectors. We help anybody from a sole trader or a startup all the way up to some of the large, high volume multinational organisations that you can see on this slide here. So the way that the platform works, we plug into best-in-class data sources to put everything into one place, make it nice and simple, quick and easy for you and your client. So you can verify photo ID and facial liveness globally, you can verify individuals to the UK address electronically, you can check for PEP sanctions and adverse media on individuals and organisations, you can do background screening through DBS and Disclosure Scotland, you can do financial credit checking, you can gather any documents that you want, you can share any documents, you can gather any information through custom forms as well. But the key thing is this can all be done in one place. We can automate, we can integrate with your existing systems as well through our open API. So the way that the process works, at the request stage, you'll be generating a request to go out to your client or your candidate if you're onboarding them as a staff member. This will take you around about 10 seconds to do. It can be completely customizable to the checks that you want, which ones you want to toggle on and off. The email messaging that goes can be customizable. You can set up automated reminders. And then what will happen is your end user, your client or staff member will receive a branded up email with your company logo, and they'll go into the platform and complete their checks. We're extremely easy to use. We do around about 40,000 or so checks per month through the platform. Less than 1% of those require technical support. But importantly, we have our own support team, so any of those queries will come to them in the first instance. And we have a 95% satisfaction rate for the service that we give. As this information comes back, it's instantly put back into the platform in a clear, easy to read, understand, and more importantly, an easy to audit format. So we're growing and we're building Amicus on purpose. So as we grow, we're growing sustainably. Our workforce is completely split down the middle with gender. So again, we really want to focus on doing good as we progress. Some examples of how we use our platform for good. Firstly, with Proxy Address, they're a charity based in London, and they help provide individuals facing homelessness with effectively a proxy address to allow them to access services. They use our tech to help identify and verify those individuals. We've also very recently signed a significant partnership with the Scottish Refugee Council. They firstly use our tech again to help identify new refugees effectively in Scotland that might come with nothing, so they're using our platform. We also have provided funding for that as well. So a bit more in terms of kind of some of the innovation for the future. We've recently become an accredited IDSP, so this is under the new UK Government Digital Trust Framework. So at the moment these schemes are for right to rent, right to work and DBS checking. We were one of the first 10 to actually gain this accreditation. And for what this is we've met a particular set of standards. Now if you were to do any of these checks at the moment, the UK Government have now stated unless you want to go back to see people in person, you should be going through a provider that meets these requirements. And also in the kind of digital ID realm, our innovation that we're going to look to launch next year is our Amicus Wallet. So using our existing network of clients, what we'll potentially be offering is effectively a reusable digital ID. So once you've completed one verification with Amicus, you'll then potentially be able to use that same verification with other Amicus providers without having to do the same step over and over again. So whether you're moving home, whether you're accessing finance, legal services, etc. So that was me just about on the button there. Please feel free to send any questions or anything my way with the details above. Thank you very much for your time.
Thank you. Any questions? No. So the UK is part of the D7, Digital 7 countries, along with countries like New Zealand, South Korea, Estonia, Denmark, I can't remember the others. We've never had a digital ID nationally. How are you going to get that through? There is a huge resistance in the UK politically, and the idea of having an ID card or an identity associated with a person. You're taking a commercial route. How are you going to get it through at a national level? Because, well, frankly, we need it.
Yeah, very good question. You know, again, it's something we're just about to launch. I'll have to get back to you on that. So it's a very good question. I thought you might piece me apart. So,
yeah,
yeah, it's a very good question. Yeah.
Okay, no worries. Okay, well, some other time then. Okay, thank you very much indeed. Sorry, Chris.
No, it's brilliant to have you here, Chris. A few years ago at Whitecap, we were involved in the launch of the NatWest Fintech Accelerator and went up to Glasgow and presented. And there was a chap called Callum with a business idea, and it was very early stage then, and that was Amicus. And was it the Scottish startup of the year or something? Fastest growing Scottish tech company or something like that recently, wasn't it? Amazing. So yeah, it's great to have you guys here. Okay, so we've got 3 more speakers to hear from. You'll notice we've started to bring around a bit of canapé action to keep you all going. We're going to hear from Flutterwave. So let me just get your name right here. Mo Bolajai. Have I pronounced it right? Did I? All right. Okay. Welcome.
Yes. Hi. Hi everyone. My name is Mo Bolaji. Short is Mo. Everyone calls me Mo, so feel free to call me Mo. I work for Flutterwave. I am the Chief Compliance Officer for Flutterwave, as well as a director within the Flutterwave UK company. Flutterwave is a payments company, currently valued at $3 billion. We're a payment technology company headquartered in San Francisco and Lagos, Nigeria. Our primary focus is to solve the payment problem across the world, basically in making it easy for businesses and individuals to be able to accept and make payments globally. We're also doing a lot of work in connecting Africa to the global market and the global market to Africa. Right. So in Flutterwave, we've got 3 main products: Flutterwave for Business, Barter, and Send. I'm here to talk to you about Send. Send is designed to solve the cross-border payment and remittance problem that we currently have. And the main purpose of Send is to enable fast, easy, transparent cross-border remittance from the US, UK, Europe into Africa, and vice versa for some of the markets. Currently, as we can see, so here are just some of few stats on the remittance markets across the world, and we're trying to cover in terms of increase our market share for remittance and solving the cross-border payment problems across the world. I'm just going to switch you on very quickly. So this is some of how to complete a transfer, go through onboarding. Just going to, just in the interest of time, I know we've got two minutes, and I'd like to take some questions as well. So for Send, we've got a very wide coverage. Like I mentioned, the primary focus of Send is to solve the cross-border remittance problem, enabling individuals, businesses within the UK, US, Europe to send into Africa, and also vice versa. We currently cover about 15 markets where you can send money to in Africa, and also we're also able to send out from UK, from Africa into UK, US, and across Europe as well. What we've also done with the platform as well, well, actually, I forgot to mention, so it's a web-based solution as well as a mobile application solution as well. It's also a platform, which means that businesses as well as other fintechs can also build on top of it to provide their cross-border solutions as well, and also have access to cross-border payments and remittances across the markets that you've got up there. Okay, well, I promise to go very quickly. Do we have any questions?
I've got one. Are we on? Yeah, I am. Good, thank you. Who's your underlying banking technology that helps you with the FX and the peer-to-peer accounts?
All right, thank you. So basically what we've done, so our technology is proprietary, but across all of our markets, we have built partnerships with banks, do partnerships with technology companies as well who provide FX solutions. So we leverage, depending on the market and the corridor, we leverage various partnerships to be able to get the best rates out there. Currently, based on our last research, we're current from, for example, within the US, Nigeria corridor, UK, Nigeria corridor, we have the best rates in the market and the lowest pricing, irrespective of where you're sending from. You only pay, if you're sending from the UK, you only pay £1 as a fee. If you're sending from the US, you only pay $1. If you're sending from Europe, you only pay €1. So it's very cheap, reliable, and has the best rate in the market.
So it's spot plus fixed commission, basically?
Correct.
Okay, thank you. Cheers. Good, thank you.
Thank you. Okay, thanks, Mo. So we've got Carlos now from Crowd Innovation. Carlos, welcome. You're the penultimate speaker of the day.
Well, thank you for making it this long. I'll try to be brief. So I'm going to take like a TED Talk approach to the speech. So I was around 8 years old when we entered the Great Recession. I remember my father complaining about it every day, and in general, a lot of noise. But what we didn't realize is behind the scenes, most of the what we now call Web 2.0 companies were being built. The internet was becoming faster and apps were being developed. So the internet became interactive and people started to upload data to the internet. Now, 2022 is not looking too great, right? But I don't want the noise to really be in front of me, because what we're seeing is Web 3.0. I know some of my colleagues here talk about it, but in general, Web 3.0 is the trust in the internet. You can start trusting parties which you didn't trust before, and a lot of companies, bigger companies and new startups are joining into this space because they see a great potential in it. So now that I've given you some context, let's talk about crowd innovation. We started last year like event fans. We loved events, we love festivals, we tried to create some new ticketing way of enjoying events. But unfortunately, things didn't work out. And I really learned two insights from this experience. One was that most people don't really understand the use cases of blockchain and Web 3.0. And two is that there is a lack of talent in software development when it comes to Web 3.0. So if your software engineers don't know how to build it, how are you supposed to build things here, right? I don't say like just like Forbes also agree with me. Earlier this year, they made some survey and they found that most of the companies making the big moves are big companies, which they have a lot of money, and it's quite expensive to find developers, and there's a lack of talent in this industry. So I realized there's a problem which needs to be solved. So we created Smart Code API, which is basically a tech solution. It's really scalable, cheap, and very easy to understand for any software developer. So this is the bridge between Web 2.0 to 3.0. It's the way to build Web 3 products in a Web 2 way. Any kind of developer will be able to understand how to use this API. And in general, we're targeting any kind of industry, regardless its size or its industry, we just want to give this to the people so they can start building products and develop apps in this new technology. Our next steps for us are basically just keep improving the API and develop a platform for it. We want to embed logistics and this infrastructure part of blockchain in it. So you don't only can build products, but you also can build infrastructure and improve your cybersecurity for your business. And if you would ask me, how do you see crowd in 5 years' time? Well, let's be honest. In 5 years' time, everyone will be using different bank providers, different cloud providers, different blockchain providers, and there will be like a very messy internet. So what we want to provide is a zero-knowledge proof platform, which, using simple words, is a platform where people and providers will be able to interact. That doesn't really matter where they come from, in a safe way, without having to share the confidential data, and still be able to work together. And yeah, if you have any questions about Web 3.0, how this API can help your business, blockchain, or just you want to explore synergies about partnerships, just let us know. Yeah, that's it.
Thanks, Carlos. Any questions? I wasn't quite sure what it is you're building. Are you building a marketplace to match supply and demand?
No.
Or are you providing a toolkit for people to be able to code in 3.0?
It's an API, so developers can start building Web3 products using Web2 code.
So you're helping Web 2.0 developers build 3.0 compliant products, basically.
Yeah, we found that most of the companies don't really adopt Web3 because either they don't understand it or they don't have money to build it. So we're reducing the entry cost to develop these products by developing I don't really have much context to ask a question then, but if you get it right, it's pretty exciting, right? Sounds good, yeah.
Big ask, right? Big ask, though.
Yeah.
Oh well, that's it. Roll the dice. All the best to you. Thank you.
Okay, time for the last guest speaker, Ben. Come and tell us about something pretty new, Credit Canary. I'm looking forward to hearing about it, actually. So good to have you here. So you've got. Okay, cool. Here you go.
Hi everyone. So I think I'm last, so I will be as efficient as I can. So Credit Canary, we're building an early warning system to help both borrowers and lenders monitor active credit products. So the current state of the market is pretty poor. If you're a lender and you're lending out money to people, what you really have at your disposal is bureau data coming from the likes of Experian. It's anywhere between 30 and 75 days old, or you could be using various internal processes. But the facts are that banks globally are set to write off $4.6 trillion in non-performing loans as we go into this recession, which is sad for the banks. It's probably even sadder for the people that are in financial difficulty. And I've actually just got a quick question for those of you that are left, which is, if you're in financial distress, do you think contacting your lender, who you've borrowed the money from, is going to affect your credit score adversely? Put your hand up if you think that contacting your lender when you're in the difficulty is going to have an adverse effect on your credit score. 1, 2, 3. I'd say that's probably about 10% at most of the room. The FCA actually asked the public this recently, and it's as high as 47% of people think that contacting their lender is going to have adverse effects. So most lenders only know there's a problem when you miss a payment. And that's what leads to this unfortunate vicious cycle that people bury their heads in the sand, they don't contact the lender, and they end up going into arrears. And the minute a customer goes into arrears, that costs the lender £1,000. So it's really expensive for the customer, and it's for the lender, and it's a really bad experience for the customer. And we really want to solve this problem, and we believe now that, well, the technology's been there for a long time in terms of the kind of data science and machine learning tools that we use to solve this, but the data has not been there, and it now is through regulation that came in about 2 years ago with open banking. So what we do is through predictive analytics, we can inform the lender well in advance of when a customer is exhibiting the kind of financial behaviours that are indicative of future arrears. So it's no good just telling the lender that. They don't want to know unless they can do something about it. So we're constructing a series of treatments that the lender can serve to the customer to actually help them get out of that downward spiral that's going to lead to arrears and keep them as a good customer, which is in everyone's interest. So why now? Well, we're entering another big recession. We're calling this one the cost of living crisis. Thankfully, the government, the regulators, doing something about this with consumer duty, which we've heard from in a few other presentations today. That's going to be forcing lenders in 2023 not to also be putting their heads in the sand and saying, well, it's no good contacting customers if they're in the shit, because we'll just do more harm than good. That's the excuse, if you talk to lenders, that they use today. It's a disguise for the fact that we don't really know what to do and we just don't do anything. Well, the regulation, thankfully, is changing that, and they need to be more proactive. And they have the data to do good. And it's become the #1 problem for lenders. The more customers they can save from arrears and going into a default, the more profit they make. So it's a bit of a win-win. So we're trying to do this by driving behavioural change. We're, at the moment, we believe, one of the first companies to try and actually do this, to serve up the insight, drive that behavioural change in the customer's life. You may have all experienced different apps that you've downloaded that try and help with budgeting. Well, we're trying to build a lot of those good use cases of fintech, but serve them up through the life of the loan. So as your life changes, you can move forward and the lender can actually serve you nudges that are going to help you avoid arrears. Sorry, I just mumbled that last bit. It's the pressure of that time clock. So we're looking at the commercial model of, we charge a monitoring fee to the lender. So in the case if you had 100,000 loans in your loan book, if half of them are monitored, you're looking at a £60,000 charge. That sounds like a lot, but at the moment they're spending probably 2 or 3 FTE to manually do this, and has very low success rate, so it's actually a huge cost saving for the lender. Target market is the UK. I'm going to rattle through these last few slides because there's 10 seconds left. We've got a secret weapon, which was we actually have a lending platform already, which serves a number of credit unions, so we don't have to invest a lot in the tech. We've got progressed discussions with quite a few of these lenders, some of which you might recognise. We sit there in the servicing arm, which is quite different to what a lot of other fintechs who we may be sort of compared to are doing. That's the team. It's quite a strong team of proven fintech operators. So we're looking to take that experience and hopefully succeed with Credit Canary. And finally, I'll just say on the last thing, we're looking for a million pre-seed. We've got about half of that committed, but we're still looking for a lead investor to drive the round, and then the rest of the money with soft commits is already there. So really, it's just a question of finding that lead investor at the moment for us. So if you're interested in know more, let me know. Any questions?
Cool, thank you. Any audience questions? No. You asked us the question, you didn't answer it. Does informing your organisation that you're in trouble, your lender, does it affect your credit rating?
No.
Good, because I was going to say, if you're predicting default, then you would be impacting the credit rating by doing so. Okay, fine. There is another company that does something like yours. It's an Israeli add-on to a banking app that helps banks predict based upon looking at historic data and also customer behaviour, whether or not they're going to need an interim loan so they don't become overdrawn. And it's not the same as yours in the fact that you look at credit and credit rating, but it does provide alternative financial products to people prior to them needing to go to the bank and demand it. So obviously the cost is lower, so you might want to hook in with them. What I would say is $1 million pre-seed. That's a big chunk. Pre-seed's usually much smaller than that. That's a seed round. So particularly in the current market, maybe going a bit lower. That's just my advice from having trod this journey. So
it's sound advice because we may end up closing the pre-seed round at 500k if we don't find the lead investor.
And be happy with that because that's still a big pre-seed round, right? Yeah, that's very good.
No, we'll be good.
Yeah.
Thank you.
Okay, very cool. Thank you very much indeed. Joe, is it you or me? Joe, thank you. You're going first, are you? Okay, all right.
Thanks everybody for sticking with us. Yeah, it's just on me to really say thank you all for coming. Thanks also to Janine, Rachel and all the team at the university for being such fantastic hosts. Thanks to Chris and Julian for helping chair things, and to Ryan as well for helping pull everything together. Galibier as well, our wonderful PR agency over there on the graveyard shift over there. Thanks for supporting from a marketing perspective and with all our social media today. Our next few events, I'm glad to say, are actually fully sold out. We're actually back in Manchester next week for an ethical fintech forum, and back in Leeds in a couple of weeks' time for an event looking at the future of savings technology. But we are currently working on our programme for 2023. We've got sort of irons in the fire in terms of event topics around things like operational resilience, Web3, which has come out of today's event quite strongly as well. We'll be looking at doing something on that as a topic, and we'll be returning, of course, to Leeds, Newcastle and Liverpool with other conferences and events. So thank you all for coming. I hope you've had a great day. It's been brilliant bringing you all together here in Manchester. Thank you.
I was going to give a little talk about all the stuff we'd heard today, but if I iterate everything that's been said, people will just pass away. So please go get a drink if you haven't got one yet. Grab some of the canapes. Thank you so much for coming. If you want to chat to me about anything, just give me a note, give me a call. Happy to discuss it, and hopefully see you again soon. Thank you.